Hiding in my sock. What? Hiding in my sock.
What's up, guys? Good morning. Sorry about that. Just running a little bit behind. Got my cup of coffee. Got my cup of coffee right here. Oh. Whoa, 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 whoa. Whoa, 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 whoa. Hold up. Okay, this says live. Got my cup of coffee right here. Alright, I wanted to make sure I didn't send out the wrong... I got scared that I sent out the wrong stream, bro. Alright, Fed balance sheet running off. They running it off. I don't know if any of you guys ended up checking out the video from Friday that I mentioned. If you guys are interested in this stuff, y'all need to check out this past Friday's podcast at The Compound with Josh Brown and what's his name? I know his name, I just forget it. Michael Batnick. The two guys that they had on there, they're from CNBC. They're not from CNBC, but they do their own research, and they were on, and it was a really good podcast, and it just kind of gave you an idea of, I think it's a little drawn as far as to say what happens when they increase the balance sheet versus what happens when they decrease the balance sheet, because they're not going to decrease the balance sheet as much as they increase it. So, but again, there's still liquidity and whatnot that. But long story short, had a good day yesterday. I took a loss on a Disney short. I should have taken this trade off as soon as I got in this position, because I'm gonna tell y'all right now, this was probably one of the most shadiest trades I've been in a while, guys. So I limit ordered into this trade. All right, and I was profitable on it. I could have taken a piece off, and it kind of happened quick on this candle right here on that extension follow through down. And I'm like, I tried to get a little bit off, but I didn't get it. So here's what happened. And when this happened, I was like, okay, hold up. I just don't like everything about that. It just was a sign to me that something was wrong. And I was right, obviously. I should have just taken my instinctive feeling and gotten out. But what happened was I limit ordered in. And I kind of bumped my limit order up like a cent or two. And what happened is the ask versus the bid, right? Let's just say the bid was 50 cents. My bid was literally 53 cents. And the ask was, we'll just say 56. I'm pretty sure it was like 58, 56. It was a little wide. But it was like, we'll just say 50 to 58, right? And you put a bid in at 53. Or you put a bid in at 52, and then you're like, okay, you know what? I'll take it to 53 because it's paying right now. You're gonna have to bring it up a little bit. If you obviously want to get filled as soon as you can, you got to bring it up. So anyway, the point being is, as soon as I got all these orders limit ordered in, the ask literally came right down to my price, and it was just this all happened in like 4 seconds. Boom, 53, bang, they took my fills, and then they shot it straight back down, and the stock wasn't even doing anything. It was still down here at Lowe's. It was still down at Lowe's, and I'm like, whoa, hold up. I just fell for the trap. Somebody literally just used me to get out of their position, or a market maker. Something happened, I swear to you, this was the most shadiest stuff that I have seen in a while. If I brought up if I could remember what, let's see, we were here, I was probably in the 150. If I paid 50, I was in the 114s. I think I was in the 114s because the stock was at 113. Maybe I was at the 12s or the 13s. Anyway, doesn't make a difference. I could, I do have my broker open right now, and I could show you on the time lapse here I could go in and show you guys when that happened and how it happened. You would be like, oh, snap. They did do that. You can see it if you go chart it. So anyway, that happened yesterday. I took a small loss. I went long. 5.15s on the SPY. Very early. 5-6 cents. You could have got it. I think my fill was 6 cents. So I paid like $7 or 7 cents, $7. This was a sick trade, guys. You guys could have put this on, and we ate off of this one. We ate off of this one. Right here. We put it in on this pullback into this level here. We got long. Yo, I did not think, I had a feeling that we could at least get to like 513.50, and I said if we can get from 511, move $2-3, the delta on those is going to put me well over 100%. But I'll be damned if those things didn't get in the money by 2 o'clock, 1 o'clock. You don't know those things going into it, but just beware. Usually, we have been coming out of these Gates Mondays rallying. Not necessarily just rallying, but when you have these days on Mondays where we rally or we sell off, that was Tuesday? I'm sorry, that was Tuesday. I'm sorry, never mind. I'm thinking today was Tuesday for some reason. Because I didn't do much Monday. I missed a couple orders on Monday. So anyway, I take that back. We got long yesterday morning, and then yesterday late in the afternoon, we took this short. I literally got short like right here. It was on this one. It was right up in here though. It was right in that area. This is a 2-minute chart. I can go back and give you the timestamp on that for the end of the day put. This was at 2:47. Where's 2:47? It was after this, wasn't it? No. No. There's no way. Anyway, I paid 15 cents for those. We were a little bit patient on those. We got paid on these because this thing just fell out of bed. It fell out of bed quick. I'm almost positive I put it on up there. There's no way that I did. Was it really that late? Because we were sitting. I think that's what it was. Is I was watching. So what I do is, guys, if you guys have any questions, throw them in the chat. Say hello. What are you watching today? What do you want to go cover? But real quick, what I do is, and in the morning we wrote down the put options, the calls, and the puts. Right? We said these calls are hella expensive or cheap. These things are so cheap. Yes, it is a daily, but 5 cents, bro, for a 5.15. If you get there, the risk is worth the reward. That is a clear 3-to-1. All right, even if you didn't get to 5.12, you would have had to have gotten to 5.13, and that was our goal. Our goal was to be able to at least get to 5.13. All right, because you can see where after hours was resistance. That pivot high also was Monday's low, right? We were just aiming for that direction. And if we buy down here at 5.11 and we have a delta of 8 and we're paying 7, every dollar, every 50 cents really is going, or every dollar will be pretty much 100%, depending on how fast or slow we get there. Now, if it's not getting there and it's just like a sideways day and there's just a lot of time getting eaten off the clock, obviously that's not going to happen. That delta is just your theta. Then you're not gonna make any money. But when you get a continuation like this, you gotta get in it. This is what we want: continuations. We don't want pullbacks. And think about this today as we go in the day, right? If your stock that you're watching, if you can see here on the bottom of the screen, if it just goes up and it's retracing more than half of the move, and it just goes up, and then it retraces all the way back, and then it goes up, and then it goes all the way back. Man, get the hell out of that thing. Unless you got a swing trade on there and you got a purpose. I'm not here to tell you what to do. I don't want to tell you what to do. I am not a financial advisor, But I would just say for your own good, if you're a person that's looking for a day trade, understand that when you have an option price, whether you're buying at the money, in the money, out the money, right? And you're not getting that follow through. Like, that stock is not going in the direction that you want. Or if it is going in the direction that you want, what I'm getting at is if it goes up and it's pulling back, the pullbacks are more than half of the up move. You're not going to get paid. Maybe you'll get paid a few hours from now or later in the day or tomorrow. Yes, that is true. But, you want to be able to get on that decided continuation like the SPY, right? This thing just rips and it keeps going. Look at that little pullback. It doesn't like pull back to this. It didn't even pull back to the prior high, initial morning high. And then continuation, and it's sideways continuation. It's not pulling back at all. It's consolidating. So that allows, all right, you have a little bit of time getting eaten off the clock, but that allows for the theta to not eat you up so much. Like, the price is not getting taken back. So look, real quick, if you were to buy an option, right, and you buy a call, and that stock goes up, right, and you're a little bit green, right, you're like, okay, cool, I'm a little bit green, and then it pulls back, and then you're red, and then it goes up again, and you're like, wait, I'm up, it's up, but I'm still red. That's because either, you got to be able to read the Greeks. All right. I got to make a video for that on how I use it, because you need to be able to do it, because you need to know how to manage your risk. You need to know how much you're going to be losing in these trades. You can't just be like, yo, I got 10 contracts here and I don't know what I'm losing. I don't know what I'm making. I don't know what I'm losing. I know I'm just in them. You're better than that. You're better than that, bro. You're better than that. You're not going to get nowhere with it. I mean, you might. You might, but then it's going to look pretty foolish when it's just not a good look. I'm going to just say that. It's just not a good look. All right? At least have some type of sense on what you're doing. It might even make you more money because you know what you're doing. All right? But if you ever wonder why, the thing's going in your direction, but you're not getting paid like you think you should be, it's because it's not giving you the continuation. And it's because of the fact that it's pulling back more than it is going in that direction. All right. Let's start it off. Good morning. Thank you guys for joining us. If you could, hit that like button. I'm Justin. Subscribe if you haven't already subscribed. If you have any questions, throw them in the chat. If you have any stocks you guys want to look at, throw them in the chat. Real quick, y'all already know what it is. It's Powell Day. We're going to go over some of the news really quick. We'll go over some of the top gainers and some of the stuff we have going on here this morning. If you don't know, there's a lot of news with Tesla and Intel, just to start it off. You have this Chinese robot vacuum cleaner going to IPO. I'm going to be looking for that. So semiconductors, more so Intel is going to be in play. This morning you have TGL right now is going off. My screen is frozen, it looks like. So today I'm going to be a little bit patient. Not patient, but I'll see what Intel does. I'm gonna see if as we go through these names. Hold on. So I can't zoom in. I'm having trouble here. Hold on. Let me go to Apple or something. Airlines. I forgot about airlines. I wonder if we could get a break at that level and see this thing back down here. Back down to like 1280, the low 13s. Okay, so that does it. And what did we say? TGL? I think it's just TGL that's doing it, not... Okay, it was me. Alright, so TGL. I don't know if there's any news on this. I'll have to look real quick. Where are we trading at? 718, 719. Okay, so you already went through the 50-day. Alright, TGL has resistance up here at like $8. Like, I would say... $7.75. I would honestly say like this $8. It's tough. I'm going to say $8. I'm going to say $8 is going to be your resistance on TGL if you're playing this. All right. Watch out for $8 if you get it. See what happens if... Oh, look at that pullback there at 7.45. So that's kind of letting us know that that $8 is probably not going to be a good look. Hopefully people are okay there. SMCI has had a decent pullback. And I did see Block was trending this morning. I don't know, Square or Block, and so SMCI is pulling back, guys. I still think SMCI has a good ways to go. All right, I think it has a good ways to go still. I mean, honestly, I think it's an $800 stock. I mean, I think she's headed to 800. Let me say that. I don't think it's an $800 stock. I don't have much of an opinion on it other than, it feels at home down here at 800. This news with Intel may bring the whole entire sector up. I don't know the confluence between Intel and SMCI. So let's go chart off Intel. All right, let me go ahead and delete every single thing that we have here, even though we should start with the overall markets. I think the markets are up, right? The S&Ps. Let's go to a 15-minute chart real quick. Yeah, we are up. Damn. If you have not learned already that when you have a bull market like this and you just keep seeing the market go up and up and up and up and up and up. All right. You got to understand there's a lot of money on the sideline, and that the support or the demand, I would say, more so demand, not support, right? Because there's obviously demand for the SPY. There's money being put to work at these levels. Right at the 20-day moving average. And look, today we have went from 510, 6 to 516. That is 6 points on the SPY. Did you get any of that? I'm going to ask you right now. Did you get any piece of that pie, guys? Did you get any of it? If you didn't, why not? This is why you need to be here with us. We were long. Yes, we were short. But we were also long, and we made money, and the short was a scalp. We knew there was a plan with the short. We knew that we were struggling up there. We wanted to see a pullback to VWAP, or at least to this level here, right? We were looking for a pullback down into, this level here from the prior day. We wanted to see this area right there, see if we couldn't get to like 514. We knew what we were doing. But anyway, that's why I urge you guys to join, and so that's what we're going to watch today. Obviously, we've already made 515 support, so we're going to be watching 515, and then you have all-time highs up at 518. All right, I don't know about the ES. We'll look at the Qs. We'll see which one is leading, see what sector is leading and lagging. It looks like the Qs are going to start to regain the lead, guys. You see how quickly that happens? I would watch for 5250, 5250 on the SPY, or on the ES, I mean. All right, that's the ES. That can be your resistance level there. All right, if you guys are having trouble seeing the screen, you just let me know, and I'll fix it, and I'll bring it in. All right. So we have our resistance up there. I'll have to use the hourly chart to bring in some more, whatchamacallit. I would see also if you could pull it back. See, yesterday you made 5229 support, or 530, 5230, 5230 support. See if it pulls back again at 5240. Every whatever it is, every $10 or whatever you want to call it. All right, yeah, every $10. All right. All right, the Qs.
Sales of $648.9 million in the feed for Oscar Lima Lima India. That's Ali Corrigan.
I don't know some of the earnings that we have or don't have. Man, the Qs are still lagging, guys. The Qs are still lagging like crazy right now. It would be nice if we could get this support level to hold right here. All right, at like 18,300. 18.3. Look for 18.3 and see if you can't just ride that bad boy. If you can get through Monday's pivot high, look to ride that thing right back to all-time highs at 18.5. That would be my target, honestly, because I don't think you have much stopping you there. There's not any type of resistance really that's going to stop you from getting there, other than like 18.45. 1845, 1850 would be the level I'd be looking for on that. And I think you can easily get there. I don't see why you would have any trouble. It is lagging. Do you see the difference between the SPY? The SPY is up here, right? Or the ES. The ES is up there. So this is showing you that yields are moving higher. All right, yields are moving higher. The Dow is leading right now. I thought it was, at least. Let's look at that hourly chart real quick. The Dow, I want to watch for the previous highs up there at 39.7. 39.7. All right, let's keep it going. Let me not do that. Let's go to a 15-minute chart real quick. Okay, so I'm going to say this. I am going to say watch for
President Biden's budget calls for tax increases on the corporations and the wealthy. We want, gotta be fair. Robert, we gotta be more. We gotta be fairer. Restore fairness. Get fair here. Joins us now with a look at some of those potential hikes and changes. I'm just trying to figure. How's 70 sound to you? 70% for the top. Not bad. That's not fair enough.
It used to be like 90.
It was 90. Let's do 90.
And one person, Rockefeller, paid it. So it was supposed to pay. Anyway, for right now, President Biden saying his tax plan would shrink the deficit by $3 trillion.
441. 441 on the Qs, and we will continue to just step it up, right? We'll just step this thing up. Just step it up. All right, take it range by range. The Qs are really moving here. They really are. They are really moving right now. Like, you can see it just trying to just roll over. We could be getting dip buys here, right? This technically is the dip. All right, let me go to the Dow real quick. I wanted to go to, actually, I'm sorry. Hold on. Let me go to the Qs back one more time. Go to the daily chart. I'm going to hurry this up. Again, if you guys have any questions, throw them in the chat. If you could, do us a big solid. Hit that like button. Subscribe if you haven't already subscribed. That would help the channel grow by finding other people that would like to be here. All right, we want to be able to help, help some people be able to make some money and help change their lives. Because it's all up to you as an individual on where you want to take this if you learn the skill.
What's the top 1% pay? Is the percent 40?
This is a double top, support.
Top 10 pays, over 80%.
438.50.
Let's bring in former Deputy Assistant
Okay, I see where it's at. Thank you. I got it.
She's a professor at Yale Law School and a Yale School of Management professor, and Joel Griffith is a Heritage Foundation economics research fellow. And Natasha, I'll start with you.
I don't know why I have these trend lines below me. I could probably get rid of them. I mean, I don't know. The minute I get rid of them is as soon as I get rid of them, here Powell gonna talk down the markets.
Or some things you like, some things you probably wouldn't try for.
Well, sort of
I'm just gonna leave it alone.
what I hope we can all agree on is that the United States faces really quite substantial revenue needs. Over the course of the next decade, debt to GDP ratios are gonna rise to
Natasha
119%.
Sorin.
Social Security
Okay, so the Dow is our leader. Obviously, you have this news with Intel that is helping the Dow out.
the president's plan is exactly that. If
You know,
is $3 trillion
we'll see here. Can we break back out of it? It doesn't look like it is. Doesn't look like it's going to.
asking corporations and the very wealthy to pay their fair share in ways that I think make a lot of sense. The
Pay their fair share. They already do pay their fair share. They pay taxes every week, every payroll.
in all likelihood are never going to
NLSP,
face
NLS
any tax
Pharmaceuticals signed
liability because upon death they're just going to be passed down to their heirs
exclusive
in
worldwide
a
license
step-up
agreement with
basis.
Exxon
I
Labs.
think
That's
that's
if I
unfair.
believe
I
it's
think
Sandy
American people think
Pumpa,
that's unfair,
NLSP.
and I think that is reflected in these proposals.
There's the revenue side and there's the spending side, and whenever we, Simpson goals, whenever we try to address it, we try to do both.
Oh, come on.
We spent a lot of money during the
Sorry,
pandemic.
guys.
The budget that was just proposed, Natasha, is almost, it's down a little bit from there, but with the
I mean, really, my resistance is up there at 393. But I want to see if we can get up through this level here. I'm going to see if we can get up through there. Now, I'm just going to make it red right now.
that's one of the reasons we're going to 119% of debt to GDP. I mean,
We go to the daily chart. Where's our 20-day moving average?
and on the other side, we gotta offset that with
And I'm going to put this right
I think
here.
it's important to take seriously, to your point, like this is accounting, like both sides of the ledger here. But I think the point that's really important for your viewers to grasp and that you well understand is like the U.S. is a low tax country. We are like 38th in the OECD with respect to the tax revenue that we bring in, and that's because
I see. That's so funny she says that. But the thing is that other countries, yeah, you may pay more, but they don't tax every little thing.
historically what's happened is
They're going with more but less.
that have all these loopholes, like the one Andrew doesn't like with respect to carried interest. We've seen
Okay, anyway, I'm not going to get into that. So, all right, so the Dow, right? Let's keep our eyes on the Dow and see how she acts today. You can see the Qs are starting to lead. Like the Dow is like kind of like just hanging out pre-market here. All right.
on the spending side as well. And I'll say that President Biden's proposed $3 trillion of deficit reduction. If you look to former President Trump and what his economic plans amount to,
It is
$5 trillion of deficit increases.
going higher.
There's a very clear fiscal
All right, so I want to be long technology. I want to be looking at technology, whether it's semiconductors. It doesn't matter to me. Whatever's in the NASDAQ, what sector's leading, I want to be in that sector. I want to be in the NASDAQ. The IWM here, you have a little bit of support. It's pulling. Dude, come on, bro. All right, IWM is pulling back into support here at 201. Look at that 201 level. If you do get any traction, I would watch for 204. 204 to 203. It's like a dollar range.
But what I'm even more concerned about is that when we assault those who are actually creating wealth, it's not just that that is immoral, it actually harms the people that we're actually claiming to try to help. Because it's not as if the wealthy are just keeping all of their resources locked up in a vault somewhere. That money is invested. It's invested in companies, invested in productivity, enhancing features, and that's a big part of the reason why our middle class has grown so much wealthier. 25% increase in real family income in the last few decades, and that's
I gotta say, she is
surge in productivity that is largely
kind of cute. Just my personal opinion. I feel like, companies.
And Joel, you're right. The Trump tax cuts, they increased investment, they increased wages, and they turned out to be even more progressive. But if you extend those the way
I just heard somebody out there going. All right, let's start with Apple, guys. You guys have anything? Throw it in the chat. If you guys have anything you guys want to cover with me here, we'll get this thing on. We'll get this show on the road. Apple coming right into the 20-day moving average. All right, it's having a nice reversal. There was news with Apple and let's see here. Tesla Bull saying Tim Cook on Apple Sports app. How many Apple cars type mistakes can you make? Your opinion, antitrust chief reportedly warns Apple and Meta on fees to sparing competitors. That makes no fucking sense. Excuse my language. Market Watch, Apple CEO Tim Cook's make a trip to Shanghai following slump in Chinese sales. The latest options craze resembles past manias. Look, external. Microsoft is now on stock hold for the next 30 years, Redditors say. Alright, so nothing really going on with Apple. It's just getting a relief bounce, but there is some volume coming in there. Just take note of that. You are at the 20-day moving average on Apple. We said yesterday, if you got that low volume pullback, we got the breakout, which we did. We said, look, if you were with us Sunday night on the watch list, it's right here on the channel. I told you, it was the first stock I said. I said, yo, 170 to 171, we are a buyer to see if we can get up and through 174. It did it pre-market. It went to freaking 178. So they took the majority of that trade away. So Monday, right, we came in Monday and said, all right, look for a low volume pullback and see if we hold 174, 173. It's just that dollar area, the 9 EMA. So right now, I would probably stay away from Apple unless we break above the 20-day and go to fill that gap above us, or we break the 9 EMA, all right, and we break back down through 73, 74. It's about a dollar area, all right. So 174 and 173.50, okay? But really 173. It's that dollar area. You guys can see it right there. So I will wait and see, do we break out of the 20-day moving average and break above it, 176.25. Let's see where we are pre-market. And we're going to cover Intel and whatnot. The one thing you do have also, I mind you to look at is the nice increase in volume. You've had a nice double top up there. Everyone who was short has made some good money. So I think you had, once you started to hold 170, that's a lower high. You started to have some of those shorts and buyers on top of it start to show up and kind of take profits on the shorts and buyers on top of it. So you had some nice volume there. That's going to get them a little nervous. All right, the market overall is going higher. It's going to be hard to take Apple down if the market's going to continue higher. Microsoft's going to go higher, Google, Amazon. That's going to take Apple higher with it, unless there's a negative sentiment there that where the news is taking this thing down. There isn't really any news other than like there isn't nothing significant to be taking Apple down like this. And Wall Street got what they wanted. They're investing in AI and all that, so they got AI behind them. I know sales have been slow, this, that, the third. We can go down a rabbit hole with all this, but at the end of the day, there's nothing major going on at the moment. You're getting ready to start opening up with India sales. You want to start buying down here to collect on the next 10 years of that type of growth. There you go. Where there's a loss in China, there's a make in India. So it's a break even for me. But it's just my opinion. I just at least want to see if we can roll this thing back up to like 180. All right, I think that's the direction we're headed in. I was really upset that they took that trade from us Monday. But what are you going to do? I mean, this thing, look, guys, it opened up at our target. Our target was 176. Nice low volume pullback yesterday. We had a low volume yesterday here on Apple. Nice strong day. I was not long Apple. I was long the SPY. 6 cent entry on the SPY yesterday for the long, bright and early. All right, so that's Apple. I don't really have nothing other than, if you get a pullback on Apple, I would see if you can hold 175. or see what you do up here at yesterday's double top. All right. I think you could see this thing sit in a range between this level here. Right. We'll see what happens. It's Fed day. So I feel like it may just kind of just wait until Powell comes out. And I would imagine that Apple follows the market in whichever direction. If we get back below 174, 173, I will look to see if we can try to take this thing further down. Possibly. It's not one that's on my list, right? There's better options, is what I'm going to say. There's better options out there to be looking at. I think you've had a really nice pullback on this name. That's a nice buyable dip for the most part. And see what happens here, right? Get a bounce, and then does it just pull itself back again and just hang out in this range? We'll find out, right? But it looks like 180 is where Apple is headed. I didn't want to spend too much time on that. So Microsoft. Microsoft's kind of like, I want to know what it's going to do. Wow, look, it's literally gotten into our range. I thought it was going to get into it over here, but it did it a little bit earlier. That's so funny. That's what that box is for. Microsoft. All right, Microsoft is still strong. It's at highs right now. It's not down here like Apple. It's up here. So if the market's going higher, you got to be long Microsoft. I said it Monday. I said look for a bounce back to 420, and the same thing happened with Microsoft. Is they pretty much took that trade away from us too on Monday. It's no big deal, right? It's no big deal, but they just did that in one shot, right, on Monday. So we're coming up to. You have some resistance up there at 430. I don't plan on trading Microsoft, unless we get a really nice pullback. This is a nice break and retest on Microsoft here off of Monday's highs. So, I mean, it's just in an uptrend. You had a nice consolidation. Does it try to break out further? All right. If it is going to break out, where are we going? Where are we going? All right. If we measure the move, you know what? I can do this. It's the same thing. I'll do this. It's the same exact thing as measuring that trend line up. So that's a major pullback there. I'll go to here. So it looks like 440, 450, right? Yeah, 450. You can probably count on Microsoft being up at 450 if this market continues. All right, you had a nice consolidation here. Let's see if it breaks out. I think it's starting to break out. Watch that previous high at 427, guys. That previous high at 427 is where you may run into a little bit of issues there. All right, flat top resistance up there at 427. 427. And yes, we will have Powell today. We will have Powell today. Let's see here. Right now, I'm going to turn this red, but I think we can get through it. I think we can get through it. I do. All right, so if you guys, again, if you guys have anything you guys want to cover, throw it in the chat. I urge you to. You have a nice double top here from yesterday, and I would look for this to become support. All right, I would look for your double top from yesterday to become support. You do have a little bit, you might have some trouble up there at 426. Now, don't quote me, but I think 426 could be an issue. That's where you failed. You started to make that support, and it just cut through it. And we have not been back since. Damn, I had this thing perfect, too. See what happens if you get a pullback into yesterday's double top and see if it doesn't hold. That's what I would look for. All right, you got a nice move here. You have 422. If we can just continue this, you can see you have a nice double top there. Or if you want to look at it like that, however you want to look at it. I would look for a pullback 421.50, 421. Oh, that's a bar. Okay. All right, so that would be an entry for me right there. All right, I would look, and my stop loss would be just under 420.93 would probably be my stop loss. I'd have to look a little bit. I'd have to dig a little deeper. What I'm going to do is see if I can put this.
This season, get your grow on and get more of the QVC you love with the Outdoor Escape channel, only on QVC Plus and HSN Plus.
I mean, really, we shouldn't have to sit through more than that. But
Well, great. Watch and shop shows first
I'm staying with it.
florals, more outdoor living essentials, and everything you need to create your own backyard oasis. Only on QVC Plus and HSN Plus. Watch free everywhere you stream.
Bro, you got to be kidding me, bro. So what happens is my right finger hits this. My right finger hits the, whatchamacallit. So I would look for a pullback right in there, and that right there would be my stop loss. All right, that's going to be my stop loss. All right. Right there. That'd be my whole stop loss. So if we pull back into this area, I'm going to see how it reacts. I'll give it a little bit, and I would like to, like, honestly,
Price of Bitcoin sliding since hitting an all-time high last week. The cryptocurrency dipping below $61,000 earlier today. It was right, Becky. It never did, I don't think.
yeah, 420.94. Let me throw this on real quick.
Joining us to talk more about the Diogo Monica, co-founder.
I'm going to go pour a cup of coffee really quickly.
As of today, he's a general partner
Because
at Hahn
my
Ventures and
cup is
the
done.
president, the chairman of Anchorage. And for people who don't know, Diogo is the Portuguese version of Diego, which may or may not be the Spanish version of Diego.
All right.
That's right. And the way that I was
All right, so I'm going to write this down here. MSFT.
yeah, the Portugal is better.
Do you know what it means, though? The Spanish origin, it means supplanter, which is pretty
Exactly right. Yeah, right.
during your profession.
We have seen stuff happen with Bitcoin that, you know, if you're not ready, if you don't have a firm conviction, there are times it just shakes anyone who's holding one.
Was that 421.50?
So it went to 65, it went to, next thing you knew it was 17. Went to 20, next thing you knew it was 2, something like that. So this is probably not surprising.
All right, 421.50.
Is your high about
We got that.
74? Where were we last week? It was around 74,000. All right, so immediately we were down as low as under 61. That's a big haircut. Why? I thought that that everybody's holding them, so the ETFs that are buying them can't get any. There's no supply. The headwinds coming. How could it move down, whatever that is? That huge percentage move.
Look, the reality is, if you told me a year ago,
All right, let's go to Intel real quick. Intel has news, and I'll cover Meta and some of these other names. So Intel is getting a huge pop right now, guys. Intel's getting a huge pop. You can see we're back up above the 150-day moving average. 100-day and 50-day. You can see we were stuck at first in between them. And that was actually a nice trade. And I forgot about this. And I told you guys, hey, watch, we tried to break out above the 50-day, and we couldn't hold it. And it just rejected, right? Which was right here. I desperately need to go get a new mouse. Like, for shit, like, for real. And you can see we broke the 100-day, came back, retested it, and you had to gap down with the extension. Yes, it was on low volume, but still, that's a nice little trade there. All right, so you have the 100-day moving average. That's where I'm going to be targeting. I'm going to see if we can't get back up there. And your 50-day. All right, they're both right there. It's been a while since I've looked at this name. I'm kind of curious what this means for Intel. You have a mild level here at $49.90. Call it $50. All right. On Intel, $50. And then your real, the the bigger level would be like 56, 55. Yeah, 55. That would be safe to say that flat top is just at 55. But 50, I feel like. Oh shit, 45. Where are we? Okay, we're right there. All right. Hold up.
What do you expect? When's that happening? Next month? Is it April?
Yeah, 45. We want to watch 45, gang. All right, 45. I'm going to be looking for 45. And you're already at 43.50. You're already at 43.50, so.
And so, yes, we have liquid positions of tokens, but we also invest in equity, and we really take a very long-term view to the market, which, to your prior question, really is the only way to keep sanity in a market with this level of volatility that is baked in.
Oh, wow. Looks like you're not holding the 50-day. So, I'm going to remove all these lines here, except the 50 or 45. I'm getting rid of all this junk.
If it was worth X, it should be worth 2X.
Yes, assuming that, of course, I think the criticism is the other side is it is already baked in.
MODG shares continue to spike now.
Oh shit, I need to watch DraftKings, but all right, I want to see if we turn this level into support, guys. I want to see if 43.50 becomes support. That's an entry level. That's an entry level for me. 43.50. Does it hold or does it reject? Does it hold or does it reject? You need to stop that, dog. Stop that, dog. Stop that, dog. Wait, hold up. Hold up. Hold up. That looks like the level. I'm sorry. It all depends on what time frame you look at, but I'd be damned if that don't look like the level right there. It might end up being right there. That actually might be the level. Yeah.
The exciting part about being a venture investor is that you're looking at investments that have to be able to 10x. At least that is to be 10x
So
right
could it
here.
go back to 40?
Could it go to 40?
I think volatility is baked in. Yes, it could back to 40. It could go higher.
That's
Short
the
term,
exciting part of it.
it's not as exciting. It's just part of it. I've been in this space for almost 10 years.
Yeah, let's watch yesterday's Monday's high, guys. I'm going to be watching Monday's high. See if we can break through that 50-day moving average. All right, that's what I'm watching. How does the mic sound? Does the mic sound okay today? I know there's not really anyone here. Shit.
There will be waves and, I guess, tides that come in. I was just reading about how there was actual outflows for the first time in some of these Bitcoin ETFs.
That's right. And the price actually is very convenient.
Damn.
Bring attention to the space. And every time you bring attention to the space, what you realize is that more people join. And more importantly, more developers, more entrepreneurs, more engineers start building in the space. And those don't go away when the market eventually corrects and when the price comes down. And they will stay, they will build new products and new companies. And that's actually what I'm the most excited about as general partner at Hon Ventures, is to invest in this new wave of entrepreneurs.
All right, so as of right now, guys, we could not hold above that 100-day moving average. All right, so keep that in mind today. All right, keep that in mind when you're watching Intel. All right, that 100-day moving average that's up there, you did not hold it. Now, maybe it's just pulling back to find some support. You know, that's always could be another thing too, but this is looking a little...
Southwest Air reaches tentative agreement with Flight Attendants Union that's leaving Uniform Victor, LUV.
Okay, so Love has an agreement.
LRHC, La Rosa acquires real estate brokerage franchisee in California, Lima Romeo Hotel Charlie.
From all the work they put in. If they had Bitcoin, it stays where it stays for whatever they were paid for. They still have that, right? Can they use it? Is that
All right, I'm going to go grab some coffee. So I'm going to be watching this level here, guys. I'm going to be watching yesterday's high. I'm going to be watching that level there. Shit. Let's see where I had these. No.
That is very, very, very unique. And you're absolutely right that the volatility makes it a little bit awkward to actually look at this over the short term as a store of value.
Yeah, because it keeps moving down. So that's why it's tricky, right? You see the support here. right? But then it becomes resistance. So that I am glad that I have that there. I'm okay with that.
LS Excellus announcing multiple shipments of 115 millimeter Pyrion M
Resistance support. You can see clear resistance, right? Clear support here.
in China. Alpha Trust
I mean, but I have a level right here that makes the prior day support and resistance, and it's just in the middle. It's just a mess, man. It's just a damn mess, if you ask me. So yes, yesterday's high. I'm gonna keep it short and sweet. I don't mean to keep dragging this on, but yesterday's high, right there. That level is what I'm gonna be watching, because it's shown me it bounced off of it already. It's already shown me on top of all that we went above the 100 day, and it did not hold it. It did not stay inside there. It fell back down and actually made the 100 resistance, the 100-day resistance. All right. So, guys, if you can, give me 1 minute, give me 1 second. Let me go fill up my coffee real quick. I'm going to throw up the SPY. We'll go over Tesla. We'll go over NVIDIA. So the SPY's still doing pretty well. Tesla gapping up. I thought I was watching Tesla yesterday. It's a good thing I didn't go after it. All right. I'll be right back. Give me 1 second.
Say that they absolutely.
Diogo, thank you.
Thank you for having me.
Do you know where you were from originally in Portugal? Do you know?
Yeah, so I grew up in Lisbon, in Portugal, but I was actually born in the U.S. I was born in Monterey, California.
You were?
Yeah.
Two nice places, I think. Hard to pick. But not happy. Finland. People are only happy in Finland. Go figure.
And here.
Portugal is a pretty exciting country.
Portugal's great. Sintra, beautiful.
That's
I know.
It is just after 8 a.m. on the East Coast, and you are watching Squawk Box. I'm Becky Quick, along with Joe Kernan. U.S. equity futures at this hour are mixed at this point. NASDAQ's actually indicated up by about 50 points. S&P futures up by 2.5. The Dow still indicated down by about 32 points. And this is coming on the day when we're going to be hearing more from Jerome Powell and company. Treasury yields are a little lower than they had been yesterday. You can see right now the 10 years at 4.28, the 2 years at 4.68, so back below 4.7% there. I want to bring in our senior markets commentator, Mike Santoli. Mike, what are you watching today?
Well, Becky, can't avoid watching for the Fed, what the Fed does, what Jay Powell says, but we're watching from a very high perch. Yesterday, the 18th S&P 500 new all-time high of this calendar year. That's basically at a record pace of all-time highs. If you go back, decades, the most record highs the S&P has done in a calendar year, somewhere around 72. We got 18 in about a quarter. That basically annualizes to just about the best ever. So you can't obviously count on us continuing to click this way. And we have, as I keep pointing out, flattened out just a little bit in the S&P over the last few weeks. There's been some churn underneath the surface. Much of technology has actually sort of lost a little bit of momentum, but it's enough things are working that we are clicking higher. You do mention the bond market. Sometimes like to look at the government bonds in price terms to get a sense of maybe where buyers might want to come in, where they have in the past. So this is the government U.S. Treasury ETF of all maturities. The average maturity kind of nets out to about 7 or 8 years. And you see this line. I mean, it's basically, aside from that liquidation we had back in the late summer and the fall when the 10-year went to 5%, people worried about abundant supply. This has been an area that, in theory, could be some support where people find some value in bonds. We had a decent bond treasury auction just yesterday. For as much as I would say, this market is maybe due for some kind of a pullback, we haven't had a 3% dip in 4 or 5 months. Take a look.
It's up to you guys if you guys want this on or
also
not.
blasting to a record high, really
You guys just let me
from
know.
the rest of the banks. And here's against Microsoft on a 1-year basis. Looks pretty much like the same chart, so it's not being treated as.
I want to see if the SPY will pull back here and hold this level. This is a nice level to hold and be long off of.
This is
It's a nice little range there if you're trading futures.
S&P 500 holding. So enough stocks of different types are making.
I mean, I would watch. It could break it. I
think
think it breaks yesterday's high. All right, I think we're a bit
and Mike, the other thing I
overextended.
would
You
point
make.
to is the
I
really
mean,
low
this is the
volatility.
SPY.
If
It's
you're
not.
watching
I'd
the
have to look on
VIX,
the ES.
It's 13, right?
It's 13. It's been bumping along this area. There have been a couple of times when it actually ticked
let's
up
get
toward
to it.
15 as the
Let's do
market
it.
got a little nervous.
All right, so
And
let me
then
go back
it's
to
obvious
Intel and
me
write down.
that there are these algorithms that say, oh, if it goes above 15, buy some stocks, because we think it's still going to be this calm.
I need to
tight
write down
upturn. I always
Intel.
say
I'm gonna come
boring
up with
is
my best
bullish
ideas.
when it comes to markets, although you can never say it's going to stay that way forever. Things do come out.
So
of
we
the
talked
blue. We'll
about
see what
small
the Fed has
caps,
for us today.
some mid
Okay,
caps.
Mike, thanks a lot. For more on the market,
It's gonna be one of those days, gang.
He
It's
is
gonna be
Professor
one of those
Emeritus
days.
of Finance at the University of Pennsylvania's Wharton School of Business. He's also chief economist at Wisdom
It's gonna be
Tree.
one of those days. I'm
And
excited.
Jeremy, the
I'm
thing
ready.
that
I don't know about you guys,
I've
but
been
I'm ready.
watching pretty closely lately is just how Treasury yields have moved up. They're a little lower today, but they have moved up substantially in recent weeks as we got these hotter than anticipated inflation numbers. And yet the stock market keeps hitting new highs. If the Fed comes out and is hawkish today, can that continue?
I think the Fed will be hawkish today. In fact, I'm expecting the number of cuts to decline from the 3 that we saw in December to 2. And by the way, I wouldn't be surprised if more people, more FOMC members predicted less than 2 than more than 2.
Taking a sip on
I think the economy has remained
where we
very,
at
very
here?
strong.
Where we
Stronger than the Fed expected.
I was
very
watching. I was
definitely.
actually up
So
really
they're in no
early
rush,
this morning,
to
watching
actually,
Christine
cut
Lagarde,
the
and
rate.
I just
So
woke up at my cat woke me up at like 3 o'clock this morning.
I'm not sure the
Here
market
I
is
am,
quite
still
prepared for that.
hanging out.
I've been hearing that.
And yes,
most,
I thought
most
about going back
observers
to
still
sleep,
think
but
that they're going to do 3 cuts by year end.
was too late after a while.
But I don't
So
think
why
so.
was
I think
Christine
right
Lagarde?
now
Was
they're
she just there
predicting
for a
2.
meeting?
Of course, circumstances will evolve as they evolve. They can't predict the future. But at least at this particular point, I think there's going to be a shift to
All right, because
hawkishness
currencies
today at
moved
the,
last
at the
night.
meeting.
Jeremy, how
7
much of the gains we're seeing
ECB
in the market
President
do you
Lagarde's
think
speech.
is
Okay, yeah,
predicated on the
445.
Fed being more aggressive with rate cuts? How much is just based on this great
Inflation
economy
year,
itself?
year through.
Because I guess the good news in all of this is if the Fed's not cutting rates, it's because the economy's looking pretty good.
Yeah,
Absolutely.
there was
I
news
said
on
that
Pinduoduo,
before.
so I'm going to
More
talk about
important
PDD
that the
also.
economy stays strong and then earnings stay up than whether the Fed cuts in June or July or September or October. As I said, probably some of the worst news, if you heard they're going to cut 100 basis points in the next 3 or 4 months, I would say, oh my God, what happened? This is not good. So it is absolutely the strong economy that's driving the earnings, and that's why they seem to be ignoring whether we're really going to have 3 or 4 cuts, because it is more
So
important
doesn't that look
for
weird?
economic strength for the stock market than when they're going to cut. Now, what is important is that the Fed doesn't make a mistake
okay,
and
I
wait
see.
too long.
43.25. I
But
was
there's
looking
no
at this wrong.
sign that if they see the economy really slowing, that they won't then
42.50.
cut the rates. I think that was the signal that was given last December that encouraged
Guys,
the
I
market
think
still on the table.
42.50
If we see weakness,
is where we
will
need to
cut
look
rates.
for
If we
support.
don't see weakness, then at this particular point, we're happy with the rates as they are. Their measure of inflation is stickier. My measure is it's lower because of the shelter distortion, but nonetheless, the economic activity is the main mover of how they change the Fed funds rate.
Okay, if you're right, they're more hawkish, they don't cut rates, we do continue to see this strong economy. What's your guess for where stocks wind up later this
All right,
year?
so this is my.
Well, I think that,
This is my
again, they
plan.
might hit.
I think, yes, and I think Powell they continue to reiterate, same thing they have been. We need a little bit more data. All right, so on Intel, guys, I would like to see this 42.50 level to see if we can get that to hold. I'm going to be watching 43.25, which was Monday's high. And if Monday's high does not hold, then I may have a short down to 42.50. So it's all going to depend on, I don't mean to be in the mic like that, but I'm going to watch semiconductors and how did the market take the news for Intel? That's the first thing we need to look at, okay? The first thing we need to see is how did the market take it? Okay, it was enough. It gave it a nice boost when the market opened up. Second, it got above the 100-day that 100-day did not hold. It's trying to turn it into resistance now. So that's telling us something. So I will see if we get another attempt at the 100-day. So I'm kind of debating. Look at the daily chart. Where's the daily chart? So that's low. Man, it's like, you know, it's right in the middle. You have the 90 MA and 20-day moving average at 53.50 as well. All right, I got it. I got it. So I want to see if this holds. I want to see if 43.50 holds. 43. I like 43 better. So Intel, let's see if 43.50 holds. And then I'll give us our targets, okay? But if 43.50 does not hold, then I would look for yesterday's close up there at like 42.50. All right, so 40 guys. So if 43.50 does not hold, if Monday's high does not hold, then I would look for a pullback into like 42.60, 42.50. Yesterday's high after hours from yesterday.
Put aside your doubts and look to retirement with excitement. At Bright House Financial, we specialize in annuities and life insurance that help protect what you've earned and ensure it lasts. Bright House Financial, build for what's ahead.
So I'm going to write down support. You have support back down there at 42.50. 42.50. And then you have resistance, the 100-day. 43.80. 43.80. Resistance at 45. So
The company could be in line for up to $11 billion in additional loans. Intel says it will use the new funding for fabrication sites and research centers in Arizona, Ohio, New Mexico, and Oregon. President Biden said to officially.
and you have a mild level there at 44, right? Yeah, 44.
Interview with Intel CEO Pat Gelsinger, then additional commentary from him later on today on closing bell overtime. Saudi Arabia's sovereign wealth fund is in talks with America.
All right, so that's my levels, guys. My levels are going to be as follows. All right. 44. Or first, the 100-day. So let's say if we do continue to hold this level, right? If we just open up whatever, and we're down here, right? And it holds, and you get a bounce off of 43.20. I'm going to look to get long. Let's see if we can break the 100-day. I will take profits like as we get up through there, because you have resistance at 44. So the 100-day and in between the $100 and $44. So 44 slash the 100-day moving average, which is like 43.75. I'm going to be taking profit. All right. Then I'm going to take profit at the 50-day moving average, and final target would be 45. Okay, 44, 45. I'm watching the 100-day, the 50-day, and 44 and 45 as my take profits. That is 2 areas. Come on, man.
Well, I think they're looking at you can't rely on oil profits for forever.
Right. They got a lot of money. It seems like. I mean, do they own the business news?
Let's see.
I mean, that would seem to be something. It just would seem to be
And again, if you guys have questions, you guys can throw them in the chat. Hit the like button, subscribe. It really helps the channel. What it does, it helps others find us that would like to be here. That's what we're looking for. All right, see what happens here. If it holds, we take profits up at 43.75. See if you can't get break out to a new high. If you can't, then obviously, that's another take profit area. So I'm going to let Amazon or Intel do what she needs to do for a little bit, but that's my targets there. And then to the downside, if we do not hold this 43.25 area, okay, I'll look to see if we get a pullback down to 43. 43, and our final support should be down at 42.50. 42.50 should definitely be a level that you find support. I think it will. I think that level's pretty damn key. You broke it yesterday on an increase in volume, and then it took you right back off the back of that news. Which is also you have a nice consolidation here, double bottom. Sorry, I didn't mean to do that in front of the mic. All right. Again, if you find weakness for whatever reason, I would look to take Intel back down to 41. Back down to that low. You can see there's clear selling pressure on this name. I don't know if this news is going to help it or not. Right? It might. It may not. Let's see if we can buy the dip. Okay, let's move on. Let's keep it moving because it's already 8:17. Let's go here to here. All right, let's look at PDD. PDD also had news this morning. All right, so Intel, Chipotle. I don't know if PDD is going to be on here, but Nvidia rose 0.3% after the chip maker revealed pricing and shipment plans for its hotly anticipated Blackwell B200 chip. Intel rose 3.6% after Biden administration announced it is awarding a tech giant of nearly $20 billion in grants and loans as it seeks to boost the country's chip output. Damn, why don't you give me a loan, bro? I'll bring you more money back than Intel will. Tesla rose 0.6% after EV manufacturer confirmed it will raise the price of China-produced Model Y vehicles from April 1st, suggesting solid demand in this import market. Boeing stock fell 1.8% after the aircraft manufacturer CFO Brian West indicated that cash flow will be worse than the company had even expected back in January. Yeah, I'm sure it will because you have all these things you didn't price into it. As the troubled plane maker focuses on quality after a spat of incidences. General Mills stock rose 3.1% after processed foods giant posted a smaller than expected drop in quarterly sales, backed by higher prices for its breakfast cereal, snacks, and pet food products that help cushion a blow from slowing demand. BioNTech, BNTX, stock fell 5% after the COVID vaccine maker reported a plunge in 2023 revenue and earnings as its focus shifts towards cancer drug development. Mobileye, I haven't traded this in a while, rose 3.9% after the German auto giant Volkswagen announced it was working with the autonomous driving company to further develop its self-driving vehicles. Chipotle, that was Mobileye, by the way, MBLY. Chipotle rose 5.8% after the burrito chain board approved a 50-to-1 stock split of its common stock, opening up the opportunity for more potential investors to buy into the company. Wow, they're doing a stock split, gang. Wow. Signet Jewelers, SIG. Stock fell 7.3%. The world's largest retailer of diamond jewelry reported sharp drop in sales in the important fourth quarter, particularly in North America. All right. Where is my boy PDD? PDD. I'm going to keep that up, but I want to look for 10-cent music drops or music tops earnings revenue expectations in Q4. Top Golf, Callaway Brands trades higher amid market chatter. Big Seven remain critical to equities, but clear signs of broadening. Goldman Sachs weighs in on potential Nordstrom privatization deal. Goldman Sachs buy options to hedge FOMC volatility. Oh, look, Moderna traders lower in sympathy with BioNTech. That's so funny. I gotta see what's going on with PDD before I forget. Dude, so we have a lot to start out the morning. Wow, look at PDD, guys. Ripping and roaring pre-market. Hot dang. Look at that volume. You don't ever really see volume that big pre-market. That's what she said. I said, I know. That's what I'm trying to tell you, girl. Come on. All right, the daily chart. You have your 50-day moving average. Let's see here. I'm actually going to, because it's 8:30. Actually, I'll promote it in a little bit. All right, PDD. What is the news for PDD though? I cannot forget, dude. There's so much to trade today. Oh, earnings beat. Okay, PDD, earnings. Okay, they had earnings. I get it. They had earnings. Wait, no. 319. They did. They had earnings this morning. Okay, cool. Bet. All right, so let's go to a daily chart. Let's start from the ground. Let's get boots on the ground. Let's get a layout of the land. Boots on the ground. I love saying that. I don't know who started that, but I know it's a all right, so where are we? 149 already? 149.80. 150. Damn it.
From my perspective, like the real danger here is around the actual mechanisms of the election. We've had candidates in the media saying bad things about other candidates all the time. I mean, that is a long history in American history. But what is special now is that you can create something that looks like
I don't know, guys. I don't think that I want to I think this trade might be over with. We have to look into the earnings, but then you have a gap fill up there. All right, let's see what we got here. Let's see what we have. So what I would look for out of PDD is to see if we can make and turn 150, 151 into support. I want to see if we can turn her into support.
Fortunately, we've moved away from touchscreen voting in the vast majority of states, and I believe in all of the swing states. But there's all kinds of systems necessary to count the vote and to provide like a quick response so that people trust the output. Disinformation showing one of these candidates saying that it's rigged or trying to convince people.
Man, she's on a roll, guys. 146. Let's look here. Let's see what 146 looks like on the daily chart.
Stealing an election is one thing. Not knowing if you can drink the water coming out of your tap is exactly what I was thinking.
Right. I mean, right now,
not to downplay stealing elections, but how big of a problem is this?
it's a huge issue. We see this actually from a number of American adversaries. This is a classic Russian thing. The Russian GRU has spent years building malware that specifically targets infrastructure. Again, Rain is one of those examples.
All right, so we did it. There's your resistance. I was thinking, I'm like, hey, this thing might be coming into resistance here. So
The Ukrainians have gotten very good at defending themselves because they've been fighting this since 2014. But for us in America, we haven't had kind of blackout after blackout due to Russian attacks. And I don't think we would do as well in that kind of attack. And the other problem is the Chinese.
oh, don't call it. They always try and count us out, bro. What you mean we won't do well? Yeah, all right.
Planted in infrastructure systems that look like they specifically would support an American response in the Pacific. So places like Guam, Pearl Harbor, San Diego, those are the places that if something happened in Taiwan, American ships would be moving, Marines would be going into ports on rail, we'd be moving a massive amount of equipment to the West Coast to deliver into the Pacific. And it looks like the Chinese have built systems and backdoors specifically to
All right, I want to get a specific game plan going here for PDD because, as of right now, this is resistance. And if we can break above it, then obviously I'm going to, look for an entry there. But she's up a lot right now, pre-market. PDD is on a roll right now.
worried about water, power, other critical infrastructure systems that are not getting the attention they need.
Alex, it's International Happiness Day. Good God.
Yes, sir. National Happiness Day. I get it. That's your guys' mistake.
Every party needs a pooper. That's why we invited you today.
Yeah, well, anytime work, let me know.
Okay, if you can't have, it's got to be vodka then. If you can't drink the water, I guess. How do you stay hydrated? Bottled water. Bottled water. There you go. Or we can boil it.
I think for anybody that is here, I appreciate you guys joining us. It's a little tough. There's nobody really knows about us, I guess, as in me. So I just want to thank you for being here. If you could hit that like button, subscribe if you haven't already done so. It helps out the stream a lot. Okay, so 130. I want to say 137, but you do have some support here, possibly at like 137.50. So I would watch 137.50, a pullback into 137.50 with a stop loss down below. See, it's got to be a few dollars. You could also use I'm just looking to see what damn, 147.50, 149. Let's see here.
The people at uprinting.com don't just help you print, they help you print like a pro. So whether you want to impress your fans or grow your business, choose uprinting when it has to be right the first time. I'm Mark.
And I'm Jennifer.
45.
Our granddaughter loves to run around on the deck.
47.
She loves it. She goes up and down from the deck to the lawn.
She can run around without fear of getting a splinter in her foot.
Timber Tech decking looks like real wood.
But there's no hassle of maintaining it.
All right, I'm going to look for 145 on PDD. I look for 145. 145. This thing is just on a roll, though, so we got to look to see what we can use on the daily chart there. It's 8:30. I got to hurry up. And then 2 and 3.
Why? Because bookkeeping sucks. You shouldn't be doing it yourself. So go to zendu.com.
All right, what is that? 151. 151. yeah, I'm gonna go ahead and end up, you know, kind of just seeing how what PDD does if she gets above that level. If we can hold and break above 150, it's like 150.50. If you do hold that, you do have some room, and I could see you at least filling the gap to 160. All right, so that's how I'm going to play PDD. If you breaking above and hold on PDD, see, this thing's going to open up like the RSI and everything is going to be stupid high. 160. It's a nice double bottom. And
exercises its option for exercises its option.
Whoa, Brody.
PTSD and stress induced anxiety therapeutic shares of SILO now up 7.7%.
Whoa, dude. All right, and then 2, 2, 3s. Shit. I'm gonna wait until we get above 150. So I'm watching 150, guys, on Pinduoduo. You gotta watch 150. If we do break above it like we are right now, if it does get above it, if it holds, then okay. Then I'm gonna start looking for you have a gap fill right here. I would look for 158 is what it looks like. 158. $155.
Danimer Scientific, ticker DNMR, reporting preliminary Q4 total revenues of $10.9 million. And preliminary 2023 total revenues of $7 million. Ticker DNMR.
I'm spending way too much time on this. So if we get a break above and hold, you have room to 160, 155, 160. Yeah. 155, 160. And where are we at right now? Shit, I'm sorry. I know I keep doing this. 150.
Travel like you mean it with IHG Hotels and Resorts. 19 hotel brands, 6
Mogo, ticker MOGO, reporting Q4 results. Revenue of 17.2 million Canadian dollars.
So that's 160 gap fill.
Payment volume
And then
36% year over year. Ticker MOGO.
I'm Landon DePasquale, digital strategist at AmericanEagle.com. Our clients have complex website and digital needs. Ecom Auctions needed an engaging web presence to boost business growth and elevate the experience of their live and online auctions. We solve digital challenges like this all the time. We re-platformed and enhanced their website, which has been built with the same sort of craftsmanship and performance as an elite sports car. For complete website and digital solutions, go to
I'm just writing down.
With the Fundrise Innovation Fund, you can invest in some of the world's top tech companies, including those leading the AI revolution before they go public. The future is now open for investment.
All right, so let's talk about the downside real quick. I know I need to move along. I'm going a little too long here. You know, you do have some prior support here at like 140. 140, 138.
Every time you bet at Fanatics Sportsbook, win or lose, you get up to 5% of your wager back in fan cash. Spend it on jerseys, bonus bets, and more. And for a limited time, bet and get up to $1,000 in bonus bets over 10 days. Welcome to the most rewarding sportsbook.
It's Blinds to Go's 70th anniversary. For a limited time, take 30% off our all-new woven wood collection. Plus, take 25% off all other products throughout the
145.
The big news in real estate, the legal settlement by the National Association of Realtors that we were talking about, if approved by a federal court, the deal could change the fee structure for real estate commissions and put money back in the pocket of home sellers. To talk more about this, Diana Old joins us now.
148.
Hey, Diana.
Hey, Joe, good morning. And Glenn Kelman, CEO of Redfin, good to see you again. We had you on Friday when this first came out. You reacted to it. Now you're talking about changing how you're doing your business model. Tell us about what you're doing in reaction to this.
We're just getting more aggressive about selling homes directly to consumers. There's so many people who called us over the weekend after the news of the settlement broke and said, I don't want to pay a buyer's agent. I want to hire you to sell homes directly to home buyers. We have a big website to do that, a bunch of software tools to do that. Let's get to work. That was the message this weekend.
But what are some of the anecdotes that you're hearing from consumers? I know there was a lot of confusion about it over the weekend about buyer's agents, seller's agents, who pays.
If I could just get this thing to stop hitting the button. All right, so we have that. I just want to put that as a mild area right there. Okay, so what I'm going to do is, so we have, 154, 155 on the upside if 150 holds. If 150 breaks, oh my gosh, bro.
But what about buyer's agents? I mean, the argument is to be made that for first-time buyers, for perhaps people lower income who might not know about what kind of deals, how they're made, how negotiations.
147, 50. Is that what that is?
Helpful for a lot of people.
Absolutely. We just think people ought to have a choice. We are buyer's agents too, so we know that people need guidance through the whole process, what they can afford, how an inspection contingency works. They want to tour listings offered by different brokers, and the only way they can do that today is through a buyer's agent. So obviously many people are going to need that support, but they shouldn't have to hire someone. They should do it because they want to. And when they do that, they should have a voice in how much that agent gets paid. That's the premise of this reform in the industry.
Now, is it your opinion, as some of the headlines have been screaming, that this is going to slash commissions entirely and that the people who work for Redfin, your colleagues, are going to lose millions of dollars?
All right, so that's Intel. I'm not sure if there's anything else that came out. I know there was something with Tesla. We can go look at Tesla real quick.
Listing their home, representing those buyers because they know they can get a deal from Redfin, and they feel
Let's go look at Tesla and AMD.
And explain that just so our viewers know, Redfin has a standard.
So AMD, really nice hold at the 50-day moving average. It's already there, bro. That's crazy, bro. That's crazy. It's already at the 50-day. It's already there. Wow, bro. That's so funny. Yo, they're being sneaky with the moves. You can see all these tails both ways, and it's like, we ain't letting y'all make that money. I know there's a lot of people out there that are probably hurting like, yo, I bought puts and it's at 150 and I'm down money. What the truck, bro? They scamming me, bro. Yeah, they are. It's just, you're scamming yourself by not understanding how things work and knowing the Greeks. Like, they still doing it. I agree with you a little bit, but you got to understand what's going on here. Like, you got wicks both sides. Like, look at these reversals. Just, boom. You come down, bang. Just flip it right back all the way. But yeah, it's worked its way down to the 50-day moving average. Let's go to the hourly chart real quick. And it feels like during the day it doesn't even really move. Oddly. I wonder if we're going right back down. Let's see, because we just made 130 or 180.38 support. I think my girl gonna hang out. Watch. I think they're gonna give us a move. She gonna do what we say. She gonna do what we say. I would look for a move back down, back up to 185. It's a nice double bottom, double top test there. I would watch 185. No.
Okay, Diana, thank you. When we come back, inside NVIDIA's latest technology advances, we will talk about the real-world AI applications that we could start seeing in the near future. Stay tuned, you're watching Squawk Box, and this is CNBC.
All right, so we got the 50-day. I did not get the 20-day. I'm sorry. My bad, y'all. My bad, gang. All right. We got that. We got that. Now, let's see what we got. Maybe time for a bounce.
What do you know about rock stars? I mean, where's the skin tight leather? Shoes are leather. Where's the unnecessary zippers? That thing.
Billy, Rockstar is just how Doug feels when he uses Workday. Thanks, Rory.
I'll show you Rockstar.
Be a finance and HR rockstar. Workday for a changing world.
Billy Idol just stole your golf cart.
Oh, wow. Look at that, guys. Yesterday's pivot high is trying to act as resistance right now. That's not a good look. Brutal. We saw this bear flag yesterday. That bear flag that I said is probably going to reverse back to the upside. I literally said that yesterday. Literally called that trade out yesterday. I'm just saying it's good to see. I'm saying that because it's good to see that, you know, what I'm seeing is, you know, the analysis is correct. You know, I think we want to see if we can get above 184. You got to break above 184 for the long. Break above and hold. So AMD. Let's see where we at here.
If you don't know us yet, supporting the biotech that could cure aging. Mizuho is there. Championing clean energy in Hawaii.
I would like to get a 180 hold, even though it already has. You know what? You could hold right here. You could. This could be an area right there, 182. I don't see why not.
Now, you know our name. Mizuho Americas. A name worth knowing.
Invest with an advantage with CNBC Pro. Actionable analysis of global market coverage, plus customized investing tools. Become a smarter investor at Get Pro now at cnbc.com/getpro.
I'm not sure if it'll give it. I would see if AMD can give us another shot at 181. I doubt it's going to. I doubt it does. I would like to see us get above that pivot high from yesterday and see if we can't take this thing back to 195 or the 20-day moving average. That's what I'm going for. You have a triple top right here. Right there, bang, double bottom, boom, and you broke below it.
Since 1964, since the year after I was born, and we reinvented it with this idea called accelerated computing. Now, you could have a computer that's 100 times faster or 20 times more energy efficient, cost 20 times less, and to be able to solve problems at a scale that nobody's ever imagined.
And join us now to talk about the technical and societal impacts of the latest generation of AI chips. Stephen Levy, the editor at large at Wired. Stephen, do you ascribe anything to the science fiction that we've all read over the years about as we get closer and closer to this moment of a sentient computer? Is it relevant to talk about those issues, or is it too pie in the sky? Are we getting close?
You know, in his 2-hour keynote,
190. 190. That's what I'm going for. Going for 190. I'd like to get a 180 long. I doubt we'll get that, but if we can get the 180, that would be nice.
Right now, the AI we have, the generative AI, is startling beyond what most even scientists thought was going to happen 5 years ago. They wouldn't have predicted that we're going to be this far along. But sentience is really a step beyond what anyone can get their arms around now. So I wouldn't expect computers coming to life anytime soon.
That's why it's called a singularity, I guess, because we have no idea what's on the other side of it. But
yeah, well, Satya Nadella mentioned it as the last invention, if that happens. And OpenAI has it in their contracts that if artificial general intelligence is reached, they have to renegotiate anything.
So you guys can see here, we haven't really made 197 resistance. I mean, you did a little bit. You did kind of wick to it, but man, look, see, we're pulling back. 180.
5 years. I mean, if you give it another, Steve, if you give it another 20 years after the next 5, I think you're at sentience. And then I do think we need to start the human brain. Do we know the difference between a sociopath and a normal person at this point? Do we know the? When I see it, you know, it's like pornography.
We're getting into squishy grounds here, but I mean, we don't know inside anyone's brain. So if computers get smart enough in terms of their performance, it becomes moot whether they're actually sentient or not, if they're behaving that way. So sentience really is in.
I don't want them to pull my plug, Stephen, and get rid of all, hydrocarbon-based or carbohydrate-based beings because we're superfluous and they don't need us. I mean, I really do want. That's why I started this whole interview about science fiction and what's possible. Because there are plenty of things to worry about with AI, but they're not existential things, and I think that it is actually something that 100 years from now could be existential if we don't know what we're doing.
BA Boeing, Ryanair CEO Michael O'Leary said Wednesday he will meet with senior Boeing executives later in Dublin to discuss prolonged delays in plane deliveries. That's Bravo Alpha BA.
Oh, there was news on Boeing as well, guys. If you did not know. If you guys didn't know this, Boeing said that they're probably going to, obviously not be making as much money as they thought. Let's see if we can get a nice little gap fill here. 190, 180 long, 190 target. Take profits up and through 185. All right, that 20-day moving average.
The NVIDIA case is something that I think a lot of people are quietly concerned about in the industry. Is that this one company?
All right, I'm gonna get ready and use the restroom real quick. All right, so that's AMD. I just don't think there's much of a trade here to the short side. So I'll talk about the long. And Boeing. If you guys have questions, please throw them in the chat. We'll get to them. I have to use the restroom real quick. And I would like to promote the stream.
People are going to be determined to catch up to replace it with, or present a competitor that can do the same with similar chips. Right now, there's no competitor that could even match them. So much power users and build itself up. It's gone from sort of the second tier in the tech industry to way up top, in the clouds with the top tier, multi-trillion dollars. So I think that right now the question is whether we're viewing peak NVIDIA, because right now they look at the apex of their power, they're expanding their lead, or whether people are going to be determined to catch up to replace it with, or present a competitor that can do the same with similar chips. Right now, there's no competitor that could even match them.
On International Happiness Day, can you tell me when we're going to have AI designing rational drugs and curing cancer and consolidating all of our medical records so that we know exactly what the prognosis is and what kind of treatment we need? I mean, there are amazing things that are potentially near term with this, right? Can you give me some of those?
Absolutely. I think that's going to happen soon. I mean, just a few years ago, even before generative AI exploded, Google DeepMind came up with a way to solve the problem of protein folding, which was something that was a very difficult, intractable challenge that scientists couldn't do easily. And I think we're going to see the same kind of advances with now generative AI and chips like NVIDIA's. There's already a giant partnership with Novo Nordisk to try to solve those problems and come up with new drugs.
Someone just wrote in, Stephen, that Bones, not the caddy, but the doctor on Star Trek, was very, very worried about AI back in the 1960s. So this is not new, but I can't believe we've lived to see it where we have to worry about it.
Well, close the pod doors, Dave. The HAL.
That was a segue, Stephen, because Shatner's birthday, my idol of all time. He's still he may not be around. He may be ziplining over in the Amazon or something on The Amazing Race, but he'll be 93 on Friday. I think it's his birthday, and I think he needs we're trying to get him to come on the show. But he's a specimen. Do you think he found something out about life and everything out there somewhere? I mean, how does he do it at 93? Do you know?
Yeah, well, he broke out in tears after his short trip into space. I remember that. And I think it's amazing. I'll bet he never thought that he would see life approach Star Trek the way it has in the last few years.
Well, I never thought I'd hear him sing "Lucy in the Sky with Diamonds" either, but he did. Stephen, thank you for playing along. And I mean, we're both in media, right? We're allowed to do this type of thing. Good to have you on, and happy birthday to Bill, who has a movie coming out. I think it's called "Call Me Bill," something like that. Shatner.
Oh, Shatner.
Yeah.
I still think Will.
Yeah. Well, quick programming note: you can catch more of Jim Crane.
I think. Huh? You say Bill, and I think Bill Murray.
Ghostbusters. That Bill. Yeah. You catch much more of Jim Crane. There's two Bills in our life: Bill Shatner and Bill Clinton, of course. And the interview with NVIDIA CEO Jensen Huang tonight on Mad Money.
Because Bill does it.
Yeah. Coming up, we're going to talk markets and get you ready for the opening bell on Wall Street. First, as we head to break, check out the shares of Boeing, the company's CFO, updating analysts on free cash flow guidance. For the first quarter, it's projected to be in the range of -$4 to $4.5 billion. Stay tuned. You're watching Squawk Box on CNBC.
Well, just a little more than half an hour to go before the opening bell on Wall Street. Investors are looking ahead to this afternoon's Fed decision and then probably more importantly, the meeting that comes after that. I want to bring in Carrie Firestone. She's executive chairman and co-founder of Arias Asset Management, also a CNBC contributor. And Carrie, let's set this up. What are you expecting from the Fed? What might happen in the markets?
Well, the Fed is unlikely to do anything today, we believe. And Becky, nice to see you. We've had a reasonable year already. The S&P is up over 8%. Tech, of course, has led. The market expects there to be cuts this year, so we need the Fed to sound as if they're going to do something about that. It doesn't have to be at this meeting.
Let's talk a little bit. We've talked so much about the Fed today. I'd like to talk about an article, a column that you had up on CNBC Pro. That's for NVIDIA, whether or not that stock can continue the parabolic gains. You took a look back at history. What did it tell you?
Yeah, so we looked at 20 years of S&P 500 history. We looked at all stocks that had gone up 200% or more in any one year to see what happened to the stock in the following year. Because anyone who is buying NVIDIA now must understand that it's up 80% so far this year. It's up 2,000% over the last 5 years, 250% over the last 2, you pick your time frame, big numbers. So what does it take for it to go up again? And the numbers were interesting. About half of the names went up and half of the names went down in the next year, in the following year to that 200+%, and less than half outperformed the market. 43% outperformed the market, and the ones that did had the biggest earnings growth, average of over 80%. So that means NVIDIA, if it's going to be on average, would have to grow its earnings 80% this year. We know, or we expect, that the numbers will be up 100%. It's supposed to grow from $12 to about $24 in this fiscal year. But does the market believe that is that in the stock? Does NVIDIA need to grow its earnings more than 100%? And that's really what we think the market should be focusing on. How much can those earnings grow in the next 12 months to maintain this stock to outperform the market? Of course, it could go down 30% from here. And if the market is flat, NVIDIA would still outperform because it's up so much versus the 8% of the S&P.
You sound a little skeptical. We're almost out of time, but am I right to interpret it that way?
Well, I think you have to question whenever a stock has this kind of surge, and option buying is so much of it. It's not that it isn't a great company. We think it's fantastic technology, but these kind of moves have to end at some point.
All right, Carrie, great to see you, as always. And
good to see you.
Thanks for forwarding that article to me. It was a good read. Appreciate it.
Okay.
Let's take a final check on the markets right now, folks. You're going to see that we are still looking at a mixed market ahead of this big Fed day. Dow futures are now down by 76 points. S&P futures off by 5. The NASDAQ indicated up by about 22 points. The Treasury market's been interesting, too. Yields have picked up steadily, although today and yesterday giving back some of that ground. The 10-year right now is at 4.28. The 2-year is at 4.68, and before that, the 10-year had been above 4.3. The 2-year was above 4.7. So
bet you I could get a worm song in your head.
Oh, I bet I can get one back in your head.
Don't worry, be happy. It's International Happiness Day.
Want to be happy for the rest of your life. Happy, happy, happy. Yeah.
Oh my God,
happy ones too.
I don't like any of these, but I'm happy.
I am too. We hope you're happy, and we hope you see you back here tomorrow. Right now, it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm David Faber, live from Post 9 at the New York Stock Exchange. There he is, Jim Cramer, still in San Jose at NVIDIA's AI Developers Conference. We'll have highlights from, are you still doing the interview? Has it ended? I'm not even sure. That long interview with Jensen Huang from NVIDIA. Let's give you a look at futures, of course, as we get ready for what Jim and I like to call Hump Day. I call that a mixed picture. I don't know what you want to call it, Jim. Mixed.
Mixed picture.
Yeah.
Looks mixed.
Mixed. All right, good. Let's get to our roadmap.
Mixed.
Starts with what else? NVIDIA and the AI boom. The shares, of course, up 240% in the last year. We're going to have more from Jim's exclusive with the company's CEO, Jensen Huang, and why he thinks the PC is changing forever. Speaking of PCs, The engine behind them, Intel,
All right, gang.
preparing for a $100 billion spending spree.
All right, gang. Let's get it. Let's do a check real quick. Let's go check in on yields and see what we have going on there. Obviously, you just heard the 10 years up. Obviously, all right, let's run it up real quick. Let's go to here. Let's go check in on Bitcoin and things, energy, actually. So energy looks like, I'd like to see if energy can get a nice bounce to like 100, like 99.90, like to make it resistance, or at least futures. I'm sorry. Let's see if these futures can, well, support, turn it into resistance. You know, that is a daily chart. Okay. All right. So this is a daily chart. Let me move. Okay, nice. Let's see if we get a pullback going here on energy, guys. I want to see if we can get a pullback on energy. Let's check in on some of those names there. Shoot. Where's the X? I want to thank you guys for joining us again. If you could, hit the like button, subscribe if you haven't already subscribed. If you have questions, throw them in the chat. We greatly appreciate you for being here. All right, so Oxy Petroleum. I'd like to see if you could get a pullback here on Oxy back down to like $63. That'd be a nice pullback on 63. Wow, I feel like we have officially broken out of the wedge, guys. We have officially broken out of the wedge. I would look for a pullback. Undo. Okay. Wow. All right, 63. Yeah, that looks like a good place for a pullback on. I'm sorry. Yes, a pullback to like 63 would be nice. All right, so let's check in. We checked in on yields. Obviously this is government bonds. 4.3. Wow, 4.6. Look at the spread, guys. Wow, you're damn near just on. It's like just under 1%. It's like 0.8, 0.7% spread. Let's look at the dollar real quick. The dollar's rising. We're getting ready to pull back. All right, we are getting. Look, we went right to that box, man. That's a great call, guys. That's a beautiful call there. Right, we were on that like a hawk. Very nice. And that's your pullback area. Look what happened last time there. I wonder if we start to get a sell-off in energy. So I might actually be looking for a failed breakout on some of these other names, like Exxon, or really like Oxy Petroleum. I think Exxon would be a little bit stronger. You know, it wouldn't go down as much in my opinion. All right. I do want to look at Moderna real quick. Let me see here. Let's see. Oh, crypto. That's what it was. BTC USD. Let's go to our hourly chart. No, I don't want to copy price. I'm sorry. All right, so there you go. You can see it trying to bump into resistance there. All right, we broke that double bottom. That support level's been broken, turned into resistance. This is a support level down at 60, so let's see what happens here at 60. You know, it's just pulling back. That's all it is. It's nothing to get worried about. You know, if you bought the top, I'm sorry. You got to be just buying. Like right now, if you have not bought Bitcoin, what I buy here, I would buy a very small portion. All right, I would look for pullbacks, but you don't know where if you're going to get it. You know, you are getting some more volume here. I can't tell you what to do. I don't want to tell you what to do, but yeah, you have a lot of news happening this morning. So let's do. All right, so let's go to the SPY. All right, so what I'm going to do is we'll check in on, okay, we are at the SPY right now. So the SPY's pulling back. We're looking at this support level there. Really nice solid support level here. We'll see what happens. So what happens if we break 415? What would I look for? I would look for a pullback. See, we already made that support though. We made that area support already. I would look for a pullback into 514. I would just be looking about $1. I don't know if you'll get it though. I don't think the market's going to give you 514 pullback. I don't. I think we're going to get ready and try to test 518, guys. It's just my opinion. I think we're going up to 518. Let me log in real quick so I can be ready when this market opens. I still got to cover Tesla, Moderna, because there's news there on that cancer thing. So let's go look at oh my gosh. And then we'll go to Tesla and stuff. We've already covered some of the big 8 or big 7, whatever you want to call it. I'm actually want to delete some of those lines there.
Consumes a lot of energy, a lot of cost. For many customers, we reduce it by 95%. 20 times reduction in cost and energy used. So much so that Google's Dataproc is now accelerated by it. We announced a partnership yesterday with a great company, Databricks.
All right.
Accelerate their data process, their large-scale data processing cloud.
101.75, 101.50.
All of this is something you can do in our architecture. The other thing you can do with our architecture is everywhere. Right. And so if you're a developer and you develop on NVIDIA, you can run it on
I still think 100 is a key level there. Not really. I mean, resistance, support, resistance. I will put a little level right there. Let's go to a daily chart. I don't want to have a bunch of lines everywhere, honestly, like I do.
So this new step function of what you brought in moves gives you the information faster, can read much faster, but it also isn't as prone to hallucination. And hallucination is what everyone's worried about when it comes to artificial intelligence.
You know what? I would make that a 2. Check this out. Nice support level. Is this going to be a failed break? I think it might be. 105. 105. 105.50. So I'd be watching 105.50 there. I'm watching that 105.50 on Moderna. mRNA.
one kind of chip. Amazon Web Services is the biggest buyer of the whole suite. All the chips that Jensen just mentioned. And thank you for running a longer version because you don't get.
And we're at 105.29 right now.
Listen to that breadth of clients, and you know that this is a company where it's really hard to pin down what they're going to make per share because every one of those clients, as he told me when he said to Andy Jassy, CEO of Amazon.
Yeah, and then I would just look for a pullback to like that low 100 into the 50 day or so. The 200 days down here at 100, 101. I gotta put this here. Again, this is just for
Billions that his company, in fact, was receiving from the U.S., plus what Commerce Secretary Raimondo told Jim about the CHIPS Act subsidies for Intel. Let's give you a look at futures. We're going to be trading here in about 17 minutes. See sort of a
okay, so you're getting a bounce back to 105.50. I'd like to see a 105.50 rejection. 105, 105.50 rejection. And the target would be like, the target for me, would be the 200-day moving average.
Hey there, Brenda.
It's Carol.
Exactly. So which leg are we operating on?
You mean arm?
It's all connected. Asking the right question can greatly impact your future.
101.50, 101, and maybe we even are able to get 101. Let's see, that is a $5 move.
That's why it's got to be a CFP. You're a CFP professional at letsmakeaplan.org.
I mean, that would be cool if we could get 98, but I don't know if we will. I think, and I honestly think the real trade is a like 102 rejection. 102 break and retest.
Private credit is really aimed at 5 states. We have vast swaths of this economy that have been underserved, almost abandoned. So my view is let's lend in 50 states. We are looking to do our
And then we'll see if we can we could probably put in a nice swing trade and try to take this thing back down to 95, 92, $95, $92. I wouldn't mind doing that. Like, I wouldn't mind putting on a little swing trade if it gives it to us. Again, because there's news. If you don't know, there is news. And that's why I brought that up. Now, we're going to go into Tesla and stuff real quick. We've already went through Microsoft and all that. So, again, sympathy to BioNTech. BioNTech had news on the one of their data sets for the cancer drug with COVID or whatever. Right here. Yes, PDD had earnings. Man, PDD's on a roll. So I will be looking at PDD. It's moving the most out of all of the, between Boeing, Intel, Nvidia, Chipotle, so I will be looking at that. Where is it at? I know it's here. And so where does Chevron receives investment bank analysis upgrade or update for decision? All right, I can't. I thought it was Unilever, PDD, Nvidia, investors. Chinese, Tesla Biotech. Telebio sells distribution rights. Wound care. Nope, that's not it. All right, so BioNTech though had news here. Right here. There it is. I'm sorry, guys. BioNTech fell 5% after the COVID-19 vaccine maker reported a plunge in 2023 revenue and earnings as its focus shifts towards cancer drug development. So that's not necessarily a big reason to take Moderna down. We'll see. But I don't think that that's a big enough reason to, you know. And then Boeing. I will actually keep that up. I will keep this up. JetBlue announces to cut several of its routes. All right, so let's look at Tesla because there was news on Tesla. I don't know if they were covering it here. Rose after the manufacturer confirmed it will raise price of China Model Y vehicles. All right, so they're going to be raising prices. Let's go look at Tesla. And there was some news that like a couple people got caught on like trying to sell some of the manufacturing stuff that Tesla does. They got caught, I guess, with undercover cops. I heard something like that this morning. All right, so, man, I got to clean these charts up, guys. I do apologize. I apologize for that. I've been looking for a pullback down into, like, this area here at 163, 164, 163.75, 164. Doesn't look like I'm going to get it. I mean, even, like, a 164.50 test would have been cool. Like low 164s anyway. I would watch for 173. Tesla, 173. And I do want to cover PDD's earnings because we need to know how good they... Dude, PDD's on a roll right now. So, Tesla. I don't know if raising their prices is going to help them out that much, but I will say this. If we do get back above, and in which we are kind of holding that level now, look at the other one. Look at that other pivot low right there. We're holding it. So it looks like we're holding it. You can see this. Bro, you're kidding me. Guys, I'm sorry. I do hate this mouse so much. I need to go buy a new mouse. Because every time my right finger just barely touches it, it breathes on it. Or it gets close to it, it just clicks. Alright, but anyway, if you can get above and hold 173, you have room to 176, okay? So I'm going to write down 173 hold, alright, 176. In front of 176. But I would like to see if we could take this thing to 180. I'm not, I think we have a catalyst coming up with the Fed, and I think we might need that to get us up there. All right. 180. 176, 180. And then to the downside, though. I'm not rolling out the downside either. If we continue to reject this level. See if we get up to, like, yesterday's high, and we pull back, or yesterday's close, because no, not yesterday's, Monday. Monday's highs and Monday's close. We'll look for a pullback. We'll see if we can start getting it. I'm not sure if we will. Damn. All right. Let's just see what happens. I'm going to see what happens. But anyway, 173 rejection. Or 173 rejection. Now I need to go to the daily chart. I'm not going to do it just yet. But 173 rejection. And then I would look for... a pullback at least down to like 166, 165.
We empower those who act. Those who see the correlation between
All right, target would be down there 166, 165.
those who manage risk by meeting each obstacle.
Yesterday was a nice day for us, man. We got long the SPY, bright and early in the morning. I did take a small loss on Disney. I talked about that earlier. And then we scalped the SPY short to the downside. That was actually a huge trade from like 15 cents to 27 cents. But that long early in the morning, we got in those 515s at 5. Well, really, you had from like 5 cents to 7 cents. I got in at like 6 cents, and sky was the limit there, man. We were in the money. I did not expect us to get in the money yesterday, but we just so happened that we did. You know, it's not always going to happen like that, but we were targeting 514. You got that and more. All right, so that's Tesla. Going to look for these pivot lows down here, guys. You know, and I also wouldn't mind seeing if we could get to like 165. That would be, you know, that'd be a nice trade there to pull back and test these lows, that double bottom there. But I'm not sure because, you know, you're still hanging out and the RSI looks like it's pulling, kind of just like pulling back. So we'll see what happens. We'll see what happens there. What else? Am I missing anything else? We can run real quick and look at NVIDIA, or I mean like Amazon and Google. Damn, this looks nice too. Flat top resistance there. If it cannot get above, we could look to the downside. It all depends on what the market does, right? Just watch the SPY and the Qs and the IWM, which I'm going to look at right now. The IWM is starting to bounce. The Dow still pulling back off of that level.
From the toughest workout to running errands or just lounging, there's no mistake in the name. I wear these on the daily.
See if the Qs can hold here. That would be pretty bullish, right? To hold, bang. That's a nice long right there. I mean, you don't have much room left, but I think you could at least get it to 441 on the Qs. And then the SPY. It's a nice pullback and test. You have room to, like, I don't know. I would say, see, you're below yesterday's pivot high now. I think you're running out of room on the SPY. I think you need to pull it back. See if you can't get a 514 test. It is so insane how my little girl Abby, my cat, she literally comes in right before 9:30 every morning, guys. Isn't this crazy? You guys witness it firsthand. Every morning, it's 9:25. She walks in literally wanting to get more food at like 9:30. Baby girl, you gotta give me 1 minute, okay? I love you to death, but so let's see if the SPY, let's see if this market, let's see if 516 can be a resistance. But what I would say is that if the Qs are gonna go higher, then I think 516 is not going to act as resistance. And I think you have room, right? See the Qs, how they are making yesterday's high support. That's where I would look to get along. I do think it doesn't have much left to the upside. It wouldn't surprise me a 440 test and then a pullback off of 440 on the Qs. All right, so I'll write this down right now. QQQ. 440 rejection. You know, for now, before the Fed meeting, just this morning. All right, so that's the Qs. Okay, baby, hold on, please. Okay, hold on. You come in at the wrong time, Bill. We're getting ready to open the market up. If you guys could do us a solid, hit the like button, subscribe if you haven't already done so. If you have any questions, post it below in the chat. It would really help the stream out. Let's see here. All right, so I'm going to put a little dotted, I'm going to put it like this dotted line here. I have it written down so I know. We'll see what happens there. See what happens if we can get there. If you do, for some reason, if you are able to break 441, 442, and then 444. All right. Let's go back to Amazon real quick. I didn't want to forget. I actually have not looked at this. Again, too, as well. Take your time. Oh, shit. Look at Goldman Sachs. What's going on with Goldman Sachs? That's so weird. JPM. MS. Baby girl, please, hold on, okay? I know, boo-boo, hold on. You have food. It's not like you're starving. Shit. Damn, city's still looking nice. Sorry, that's probably... So that is... So Amazon watched yesterday and Monday's high, and you know you did get a lift off here down at support at 173. I feel like you're running out of room to the upside, like it doesn't have much left. So man, I don't know. I'm just going to say 177. Now, I'm not going to say 179, 180 because I don't think you have enough room to get there right yet. You're going to need a pullback off the bell. So let's get ready, guys. Listen, read and react. And we're going to talk more when we get the, when we have the Fed meeting. All right? When we have the Fed meeting, we will discuss more about, you know, just reading and understanding the reaction. You're seeing the reaction off of Intel. It got above the 100-day and it failed. Okay? It's failing the 43 level. So what are we looking for? So I wrote down two plays, right? If this, then that. 43.50 hold. Okay? Or if it breaks. You have support at 42.50 and resistance at the 100-day, 44 and 45. All right, so obviously you have resistance here, which was, you'd have to look at the daily chart. But, you know, the 50-day, and then that gap fill up there at 45. So to the upside, I would look for 45, but you got to find support first. All right, good luck today. If you guys need anything, please don't hesitate. You know, ask your questions, whatever you need. I'm here to help. Vice versa. You know, I'd hope you guys be there if I need something. If you guys see relative strength, relative weakness, as well. Look at the 15-minute chart actually on Intel. We'll see where it opens up at. I mean, obviously we know it's going to open up right around at 43 here. So look, what I would like to see is a pullback to like 42.50 and see if you get support there at 42.50 on Intel. Okay? Good luck today. Take your time. Here's the bell. Hopefully it doesn't blow my ear off. Just turn your volume down just in case. Nope, that wasn't bad. Oh, man. I can tell it's already going to get slow. Alright, we're pulling back right off the bell like I thought. Pulling back just like I thought. Yeah, that was too easy, huh? Too easy to let them get paid off the bell on that short, huh? Too easy. Yeah, we gotta bounce it back, man. They all know this thing coming down. The news to me isn't that big of a deal. It's just my opinion. I mean, it helps the company, but it sounds like they may not even be interested in the deal anymore. I don't even know. I don't know. I just think they're wasting their time with this. I mean, what? Just because of... I don't know. I don't know what they're trying to get out of it, personally. Okay, so good luck. Give me 1 minute. Let me look around. Baby, please hold on. All right, PDD. All right, so there you are. You got your pullback on Pinduoduo. Pretty good earnings catalyst here. Let me go feed her real quick, and I'll be right back. I would watch for a rejection up there at 152.
But Gucci
if you get it.
in the Asia Pacific region, where comp revenues in the first quarter could be down by nearly 20%, Jim. This is taking that entire, all its cohorts in that area down as well. I want to take a look. Of course, you'd expect LVMH and the like. Your thoughts?
It never stops. China has gotten away from conspicuous consumption. The Chinese, I think the government doesn't really want it. I think that the people are not as wealthy as they used to be. And you don't need to have Gucci, David. You can live without Gucci, okay?
Yeah. I have managed to do that throughout my entire life. Interesting, I don't know if you saw this journal story about sort of attacks as well on the richest man in the country. And some leaders of business, sort of nationalist kind of attacks on them. That's going on at the same time. I just pointed out, given the Chinese high-end consumer is very important for these companies. You see Richemont, LVMH, Kering, all down, but Kering obviously bearing the brunt of this. That said, I feel like recently we've seen different kinds of performance. You know, you'll see one not doing well, but it doesn't necessarily translate to some of the others, including, for example, I remember Burberry had a bad quarter, but LVMH didn't.
No, LVMH had a great number. Richemont wasn't nearly as bad. Now, David, what I see happening is, if you look at the casino stocks, Macau has come back. They're letting people gamble in Macau. They're very, very fickle. But I think what you said about the ultra rich is very important.
Oh my gosh!
Because unlike, say,
of course, it's
you know,
pulling
Senator
back there
Warren,
off of that.
Kind of rap about the ultra
duck,
rich.
man.
Their government can
Look, right off of that 148 level, guys.
And so what we're seeing,
and my stuff is going real slow now. I knew as soon as the bell started, it was going to do that. I could sense it. No, don't. Oh my fucking god,
very
bro.
important company there. Temu is one of its main.
Well, I mean, Pindu, PDD. Come on now. All right, watch down here at 140. You know that's a bit of a support level. What do you guys see? Do you guys see anything with relative strength, relative weakness? I mean, obviously PDD. SPY is just hanging out. Look, 38.2 fib right there at 140. Let's see if we get some volume to come in here. Let's see what happens. It's already made a big move. I would expect, if we don't get a lot of volume right there, that this could be, all right. It just broke. All right. I cannot fucking believe that, bro. I knew I should have never went and fed her. Watch for support down there, 137.50. 137.50. All right, so it hasn't broke yet. 140 has not broke. And that would give us the rejection up there higher. But I think this thing's got a lot of weakness with it. I cannot believe this, bro. I cannot believe this. It fucking never fails. She always comes in here whining when she has food at 9:30. Like, it never fails. Like, I love her to death, but I'll be damned if she doesn't. That's probably the only thing that I would say if I had to complain about my little girl, which I don't complain. She's the best cat in the world. She just 9:30. She said, "Dad, I need you to come hook me up, bro. You gotta come hook me up, pops. Need some food in my bowl. Even though I got food, I need a little fresh gravy. I had enough dry food already." All right. So that's Tesla pulling back into the level. Moderna pulling back. Let's see. Oh wait. So wait, how did Tesla break it? It was already up there. Hold up. Hold up. See, this is what I'm talking about. Nah, don't be trying that slick shit on me. Watch this level here at 172. My stuff is reacting weird right now. I think you gotta watch this level here at 172 and look for that to break. Alright, I'm gonna look at Tesla. It's a nice rejection. So what would I look for on Tesla? I would look for, because that's a nice rejection there at that previous pivot high. We don't have anything here. I don't even know why I'm looking at it. There's nothing on the daily chart. Yo, did they just suck people? Bro. I know there's a lot of lines here, guys. I do apologize. I will fix it. I will get rid of these. Watch the 20-day moving average, too. Look, I don't know what she's mad about. Give me the box. Look, I've already missed a trade. I'm sitting here doing all this stupid shit. Fuck, I'm such an idiot, bro. Like, seriously, I'm seriously an idiot. I'll be the first to tell y'all. Sometimes I just don't know. I just don't get it. I don't know why I do this shit to myself. So let's see. Like I said, I think you could get this 20-day to pull itself back down to like 179 and 180, 179, and then they meet.
You have argued that this isn't apples to apples when you're comparing process technologies, Intel's to others. So if you were to make Blackwell for NVIDIA, how long before your manufacturing facilities would be ready to do that at scale?
Well, what you see behind us here, would be the sub-2 nanometers, or 18A, as we call it. So 2 nodes more advanced than what they're using today. Right. For that, so that makes it faster, smaller, cheaper, more performant capabilities. And this will start coming online next year in 2025 for manufacturing. So
This is crazy. Yeah, it's got a nice reversal there, Animal. It's a nice reversal there. It's a low volume pullback, but that, you know, that was a pretty serious. I mean, really, technically, it did pull itself back into support. Let's see if it holds. In my opinion, it's got to hold this level here, 172.50. Look at that rejection. Look at that rejection there. The 15-minute is pretty oversold. You could see a pullback into the gap fill. Let's look at the overall markets. SPY's not doing much right now.
John, thank you.
Watch that 3-minute 9 EMA. And look, it's breaking. Watch that level there from yesterday's high. 172. And it's going to break. I think it's going to break. I should have took the short back up there, man. I knew I should have. Fuck. Right there. That was your level, 172. It just broke it. You got your confirmation. Alright, so what I would say, I think Tesla is working its way back down to 165. It's just my opinion, though. Oh, sharp reversal there. What do you look at the volume there? Nice. What are you gonna do, Tesla? You gonna go up? I'm not in it. You tell me. You tell me, Tesla, what you want to do, bro. Oh, I didn't. Which reminds me to look at AMD because AMD was on the list too. Fuck, PDD was the play, man. I knew I should have never left to go feed my fucking cat. Excuse my language. I do apologize. Number one, I'm sorry, but I'd be damned if I should have not fed her. She had food. She would have just been yelling at me, like just meow, 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 meow. And she's just relentless and wouldn't stop. So I'm like, she just comes in literally right at 9:30, bro. It's crazy. It's too late to get that, so I'm gonna turn away from that. What's AMD doing? Oh, nice. Nice job, bro. Sick. Alright, so AMD's breaking the level we talked about. Look for the 50-day. Yesterday's low. But keep your... My computer is just acting up. As soon as the bell opened, you could tell it just... They didn't freeze up, but it's just like... It's skittish right now. It's really skittish. Alright, so you have PDD. What's mRNA? I think someone asked me about mRNA yesterday as well. Alright, so Moderna's pulling back. We said mRNA, if it does, you know, that 200-day would be the target, 101.50 area. I also... Why is it doing this? It should not be doing that. Alright, so what I'm going to do is, real quick, guys, I got to do this. Right there. I'm just going to have to wait until Powell. I'm already screwed myself. Apply. Alright, so Moderna is down below that level of 170, 150, that pivot high there. You can see that pivot high. You probably have room down to 98. You know, you do have the 50-day moving average there you got to contend with, and the 200-day. You're at the 200-day right now, so it might use it as support. All right. I mean, I'd be shorting the shit out of Moderna right now. That's a beautiful short right there. That's a beaut.
Continually, because it's what I saw out here. The machines could have conceivably discard our opinions.
I want to talk to you a lot more about that. Before we run out of time here, though, I did want to...
Nice little rejection. As soon as I say short the shit out of it, pop! Oh, lordy. 32. It's our low.
Negative cash flow that was worse than had been anticipated. As much as for the first quarter, negative $4 to $4.5 billion in free cash flow. Some of which will not be made up for the year.
See, we already rejected that area. I don't know. See if it bounces here. I don't see, because you've already made this resistance at 103. What are you going to go revisit 103 again? You could and put in a double top, but you're putting in a double top below where you opened. So I would imagine this might continue or just test VWAP. All right. Tesla.
The effect of making everything slower, Jim, for Boeing, as they sort of change their manufacturing process.
You correctly point out this is a cash flow story. That's how it's always been valued. And the cash flow drain is worse than expected. Should the stock be up to? No, it shouldn't be up to.
I'm kind of curious as to why it is.
Well, I mean, there may be people who think that what they're going to do is get
Just so you know, DWAC, I guess, is going. Alright, so there we go. I don't know if you guys can see that or need me to widen it out a little bit. Look at the volume. Okay, I thought just looking at the daily chart. Alright, so you made this support level from Monday. Never mind. Let's see. 171.92. Yeah, I'm gonna look.
I'm going to give you a bond report now, Jim, because it's that time. Sure. And I know you care. We haven't even talked about the Fed. Let's take a look at how treasuries are faring. You want to throw something in here during the bond report? Go ahead.
The Fed meets today.
All right, Coinbase is pulling back a little bit. Watch Bitcoin. You could probably get Coinbase down to yesterday's low. That might be a trade idea there. Again, keep your eye on the Qs and the SPY. See what they're doing. Okay, the Qs pulled right back in that area there, guys. See if the Qs have some support here. Yeah, see if you get a little support from the SPY.
At Corient, we provide unlimited access to the collective knowledge of experts across the country. Because the more personal your solution, the more powerful it is. Real wealth requires real solutions. It's time to join Corient.
Am I still on target to have enough for retirement?
My savings technology can't answer those questions. URAs can. And when you're supported by someone who's faced them too, it's much easier. It's more than tech, more than service. What matters is having a custodial service provider.
All right, Amazon did not get up through that level there. I would look for, see, it keeps lagging, 175.50 possibly. I don't know. I think you could get a bounce back there on Amazon. Qs are about to bounce back. Is your stock setting up to bounce back? That's what you have to ask yourself. Apple's already bouncing back already. Microsoft. This is the area we said we wanted to look for to see if it was going to pull back and hold it. Put in a double top though. Let's see. Oh shoot. Okay, you're shorting Meta. Shorting Meta. I'm not worried. I'm not. You know, I think shorting Meta versus shorting Pinduoduo. Not saying that you're wrong. Yeah, that's a nice short. I mean, but Meta hasn't moved, and so keep that in mind. Look at Pinduoduo. That's what you want to be shorting. Why am I on a 15-minute chart? Look, that's what you want to be short, bro. Not Meta. Meta's still way up here at the opening price. This is a short. Look at the volume. All right? This is what we want. At least this is what I want. I want this. Look at this volume. All right? What is that? That's liquidity. Look at that. Bang, boy. Give me that. That's follow through. That's liquidity. Get you some liquidity, my friend. Sorry, there was a Mexican that I know that used to talk like that. Bro, what is going on with my fucking computer, man? But yeah, good luck, man. If you're going to hold and short Meta. Meta is one of the strongest stocks in the market. I'd be careful doing that. You got support right there. And it's going to pop. Watch. It's going to pop, lock, and drop it right now. It's going to pop right now. She going higher. She going to go test this level right. Chia. She going to go test VWAP. Hey, look, if you get 497 and VWAP all right there at 497, you can't get back above it. There you go. See if you get a failed breakout here. There's your bull flag or bear flag, whatever you want to call it. That is a nice move on Meta. Yeah, I'm with you, buddy. Let's see. See if it breaks down there. There's your bounce. Bro, what is going on with this thing, bro? Guys, I apologize, but my computer is just shit in the bed right now. I may have to restart it, but I don't want to do that. Look at AMD, guys. AMD's getting a nice bounce there. That's a nice bounce on AMD. Look at that reversal. Intel, nice reversal on Intel. Well, wait. No, it's not. Yeah, it shows you what the market thinks of Intel, or at least that news. Bro, come on, man. Stop fucking with me, computer, bro. Dude, this thing needs to hurry up. Like, for real. It needs to stop playing games right now. Like, look at time and sales. It's just like flat. It's just like it's wigging out. It's not running down the screen. It's just showing glimpses of it at a time. Alright, I kind of want to look for a bounce back on AMD if it shows us this. Dude, like, every fucking day I wake up, fucking shit has just got to be fucking difficult, man. Excuse my language, I do apologize, but, like, come the fridge on right now, bro.
Actually, I'm going to stay out here for the rest of the week. I'll be at one market later today. Just learning.
See how much is lagging? Like, I got to move it up and in hopes that it... Alright, let's see here. Okay, so I want to look to see if we can catch a bounce here on AMD. And I just want to see if we can break above 185 on this pullback. There's still some pretty solid volume on both sides of this trade. Wait. I did not hear what he just said. There was high tariffs on something. Look, and look, Tesla has been weak. Or not Tesla, but AMD. AMD has been weak. Fuck, I should be getting long AMD right there. Bro, why is there 20... Alright, we gotta watch this level on AMD. Watch that level right there on AMD. Oh my god, bro. Let's go, man. Let's go. Come on. I should probably be looking at the SPY or something other than AMD, because I feel like it's a lot easier, I guess, for me to... I miss Pinduoduo. I'm not sure if we're going to get this gap fill. Look, they're already at 70 to 90 cents, guys. The 190s. Just be careful again, because you want to make sure that you have the markets behind your back here. I'm waiting way too long. I should already be in an AMD, but I'm doing so much here on the side you guys don't see. So we have 3, 5, 10. So they're looking at the 185s. The 185s are a good one. See the pullbacks? You gotta watch, man. Those 190s are a little shady. You gotta watch. Alright, so let me do this. Again, so we're gonna look for like 185 or so. Bro. Look. Arrow. Alright, let's see if we can get this. See if we can't get this to be a buy trigger here. We want to start to see some volume come in on AMD. My stuff is really laggy, so I think I'm going to get fudged right now. I may not buy appropriately. I just don't want to get screwed because I
Shares of Chipotle rallying this morning. Fast food chain planning a 50-for-1 stock split, making it the first stock split in Chipotle's 30-year history. Shares are up 30% this year, 85% in the past year. Shares of CarMax are moving higher too. The used car dealer upgraded to buy from hold at Needham. Needham saying the used car...
Yep, Carvana. I didn't see that. Is anybody looking at AMD or like thinking about a long? You know, getting a bounce back.
telling us in the last hour that the company is halfway through its turnaround challenges. We're going to talk more about the move this hour.
Come on, man. I don't like that we didn't get some volume and extension there.
It is Fed Day.
Yes, it is.
Fuck. I'm going to be paying way too much for these, bro.
It's exciting to preview it too because the Fed has two mandates, right? Stable prices, inflation, and maximum employment. And we're at a point now where I think we want to know from Fed Chair Powell which one he's a little more concerned about at this point. For the last few years, it's been inflation. We've had sky-high inflation rates. Inflation has come down. So has it come down enough where he can start to worry about the jobs market, where we are not really seeing a ton of stress, but signs that it's cooled off? The economy
From an incredible rate, though, right?
From an incredible rate, but they want to get ahead of any potential weakening in the labor market unnecessarily by just keeping rates so restricted and high. And this has been a Fed that in the last
Well, I missed that. I missed that long. I just want to wait and be patient and see if we can really get this thing moving.
and wrecking the soft landing, which is what everybody wanted, including the Fed. So yesterday I showed that CPI was remaining sort of stagnant.
I want to see if we can hold, recapture the 90 EMA.
That's the Fed's preferred measure.
I'm going to keep an eye on it.
A PCE and core PCE, which shows there has been tremendous progress on inflation coming down. And in fact, if you look at the year-over-year numbers, PCE is back down to 2.4%. And the Fed wants
There's a sign of strength there.
so we're close. So they can look at that chart and say,
Well, you got to watch high a day. I mean, we don't know. I think it's got room to go a little bit higher, you know. But now you got to juggle what price you buy it at least for me, because I'm looking at the one. All right, I'm looking at the 190s. I am way out of the money. 190. All right, and look at that pullback. Look what that's going to do.
definitely going to be cautious about that. They might take the dots down from 3 cuts this year to 2 cuts this year. 2025 dots will be interesting to watch as well. They should upgrade their economic growth forecast for 2024. Should downgrade their inflation forecast. So all of that.
I knew it. There we go. See what happens? I'd be down $10 already. Look at the volume coming in. This is where I want to see a bounce and hold. Right there. Bang. 180.50. 180.50 double top. I knew it. I knew it. That's why I didn't do it. Don't fucking test me, motherfuckers. Don't test me. Been doing this shit way too long. I knew it. So that's a failed break above VWAP. I had a feeling that was coming. Suck all y'all in long. Bang. Run it down your throats, and then you get a lower price to take it higher here. But I am concerned about VWAP. That's a nice wick there. That was my entry. This was my entry right there. I wanted to get in at 180.50 there. But now I'm worried that that VWAP's not going to hold. I just don't think it's time yet to get long AMD. I got to be honest. I mean, unless the Qs are going higher. Nvidia, what's Nvidia doing? My charts are being a little scammy right now. So SPY is trying to curl up. That's very nice, but
And so that's something we need to pay attention to, and it's potentially a leading indicator. And it's
like I said, okay, look, the Qs are pulling back. Bear flag on the Qs. You could get a drop. Watch for a drop on the Qs here. Just see if they do it. That's a nice bear flag on the Qs. All right, pull it back, pull it back, pull it back. Let us get a nice little entry. It's still too much. You gotta watch, because this thing could just sit sideways for a little bit.
We've told that story here. 4% to 7% used vehicle, and you can go across a number. This is how it hurts.
Sorry, I don't have the chat up right now.
And so it's no wonder we're starting to see stress, and the Fed knows this. And
I need to pull this. I need to.
We'll look for his comments today on how concerned they are about keeping rates tight, keeping the brakes on the economy at a time where inflation is showing progress.
And you are right now. It is a balancing act.
It's an art.
There we go.
It's an art, although data dependent.
All right, right there. So I'm still paying almost $90 for those. I don't like that. I don't like that. All right, I'm paying $1 a share. I should have went ahead and taken this long, but I don't know. I don't feel confident in this trade. I really don't. I think the pullback needs to come in and happen. Oh, you did. Okay. Look, I went ahead. Y'all didn't see it. So we're in this area here is pretty heavy, bro. So let's go back and look at Tesla and stuff. There we go. There we go. Man, just give me one more pullback. Like, I'm going to be honest. I would love a 179 or a test of the 50-day. It may not give it to us, but I would like that. I would love another test of 179. You have not tested it yet. And you can see this flat top resistance there at 179. There we go. Pull it back. Pull it back, bro. Pull it back. Pull it back. So this level down here was support as well at 180 pre-market. You can see how weak AMD is. It's kind of just weak. It's not really weak. I mean, it is weak, but I think it's kind of just wanting to trade sideways for a little bit until we get this Fed meeting. Or at least it wants to revisit that 50-day, which is okay with me. That's where I'd rather be a buyer, down here at like 177 or so. All right, let's go ahead and look at PDD, Tesla, Pinduoduo, man, monster move, guys. That's a sick trade. If you were able to get that short, I told you guys, you know, rejection up there at 148, 150. Look at the volume that came in there. Look at the volume. You know, it was really nice. Once we saw that reversal was not going to hold, we, you know, 38.2 fib. All right, Tesla, can you do something for me? What's everybody looking at today? Just curious. Looking, bro. You guys, I do apologize. My stuff's being really, like, glitchy right now. I just do not feel like turning everything off, powering it back on, turning on OBS. I have a stream on, so I got to worry about that too. You know, I'm just going to have to deal with it. So look, Moderna did end up breaking 102. I wouldn't mind looking for a 102 short. Look at the volume too. This could be a nice entry there and try to take it to the 50-day. Oh, it might bounce. Just to be an asshole, it might bounce. So you can see here, if you look on the daily chart, look at this range you broke out of. You broke out of the range. It's trying to turn it into support. Does this hold as support? I don't think it did. Personally. Anything down to the 50-day would still count as holding as support. But I don't think SMCI Noble. I think there was news with SMCI. Very nice. What did we say yesterday? We said 800. 800. That's what we were looking for, 800. I mean, that's what I think. I think you try to... I would be short in bounces. Like, that... See if you can get a bounce back to, like, 1,006. Wait, hold on. Hold up. 8995. I gotta pull up a 15-minute chart on...
has been a pretty hefty resistance level. So I think we're going to have to see improved earnings estimates in order for...
Yeah, look for that low 800 level. That's what I would look for. The 50-day moving average is coming up there. Yeah, I would look for that low 800. But look at the volume today. I wouldn't be surprised if you work your way back up into the gap or attempt to get back to like 890, 900. Hold on here. What's he got? A little double bottom trying to happen.
Sam, thanks for your time. Always appreciate it.
My pleasure.
As we head to break, here's our roadmap for the rest of the hour. Reddit getting ready to price its IPO tonight and begin trading tomorrow. What investors need to know before buying in.
Plus, Apple's Tim Cook is in China.
All right, so what do we have written down? So other than Intel, Moderna, Intel's pulling back. Semis are weak. Oh, shoot. Microsoft, MSFT. Consolidating again. That's what it does. Amazon pulled back. Let me do this. So Amazon has a flat top resistance here. Oh, man. I know I'm going through a lot right now, guys. I'm just scanning. Look at... Disney might be trying to pull back. I'm not sure, though. I tried it yesterday. It didn't work out too well. But look at the volume that just came in there. You have a double top from yesterday. It looks like it's trying to make that double top from yesterday resistance. And that's what it looks like it's doing. All right, there we go. So AMD's pulling back. We got the little pullback there. What else do we have? What else do we have on the watch? Palantir yesterday had a nice day. Palantir had a really nice day yesterday. I called this out yesterday, and I did not take it myself for whatever reason. I don't know why I didn't. I think because I just called it out and didn't really, like, I was looking at a few things. But all right, Tesla.
Cataract surgery has taken another leap forward.
Shares of Ford, letter F at the highest now, $1.50.
All right, so the sector of Tesla. Yo, look at Ford, guys. Look at that's relative strength. Look at the volume, dude. Was there news with Ford? It's up through that resistance level. Man, this stinks, bro. What happened with Ford? Watch out for 1260. Bro, why would they wait and call it out now? This is what we need. This is a trade for us. This is easy free money right there. These are the trades I like. This right there. Find the relative strength and the relative weakness. It does not get better than that. It doesn't get any more freer than that. The big boys are going to pay you to be long or short. Look at the candles. Just, you know what I mean? How they're the same size. Just no pullbacks. Just continuation. Same size candles. Nice volume. Oh, my goodness. I don't know what's going on there. The volume isn't even that great.
Well, I can tell you why it's highly anticipated. It's because it's been 827 days since Reddit announced it had confidentially submitted its paperwork to go public, and it appears that long-awaited debut is nearly...
Is anybody going to buy the Reddit phone? Does anybody think that Reddit's going to make like a phone, a computer, and expand? I don't, so no, I'm not buying it. Not that I said like anybody asked me. That's why I think like PDD, like some of these companies, I'm like, why are you going public? Like, are you really going to use the market for what it's for? And that's to expand. If not, why? It's just for them to just get money. That's all it is. All right, so Ford, guys, I'm going to just try and put a position on 1260, 1265, little area there.
a 2021 private funding round. In the prospectus, Reddit calls itself a quote global digital city where 73.1 million
I can't believe the volume's not bigger than what it is. Looks like she's trying to head up to 13. Is Oxy pulling back right now? No. I don't know if you guys got that this morning. I think Oxy can pull back to 63 if you continue to see a sell-off in energy. I would watch high a day up there at 64. All right, what does this mean for Tesla in the sector? It's only up 1.8%. I'm going to put a small position on. You guys may say, oh, it's up, it's up. Yeah, I know. The volume is pulling back. But, let's see. Dude. Where did we say 1260? Whoa, these options are weird. Look at that delta. That's insane. Look at the delta, yo. If that's for real, holy shit. That's crazy. I got $10 to waste. I'm going to try that out. I'm looking at next week, 1282s. That delta is really 30 cents, bro. I mean, I could see it being 30 cents. I could see it being 30 cents. That's insane, bro. I cannot believe this. It's starting to, yeah, that's why I say it's starting to, should get one of these little candles. I just think, see this, it sucks because we do have a Fed day today. So, you know, if it was a regular day, I would, like, don't get me wrong. I'm going in this thing. I'm telling you guys right now. I'm going to submit an order. And it's in. It's filled. I just got in for next week. 1282s. Alright, we'll put it on. See what happens. You know, we'll see what happens. It's a really small position, guys. It's a really small position. I just want to see if this is going to work. Alright, even though it's late, we think it's the high. I just think... The only thing that bothers me is that I don't think there's, like, enough volume. Like, there's not enough volume. You had some huge volume past couple days there. And that's what I don't like about it. Like, I want to see more volume than what we have. Alright? So, yeah. It's up 1.6%. 12. Wait, did it already do its ATR? I wouldn't be surprised if it already did its ATR. What is this? 1165. 1208. Yeah, that might be it. That might be it. Alright, I'm going to move on. I'm just going to leave that on and see what happens here. I'm just going to leave it. I'm going to leave it alone. It's just a few dollars. I'm not worried about if I lose it or not. I just bought a few contracts. Alright, AMD, Tesla, consolidating, Apple. You know, I'm not sure if you guys see anything... I don't know what that's about. Bro, what is going on with... Time axis.
But these treatments are largely administered through cumbersome injections. Enter Luxeria Bioscience with their patented oral delivery technology.
All right, let's see. I'm going to look at the Qs. Maybe I'll play the indexes. So the Qs are holding up really nice.
Luxeria Bioscience, transforming the future of GLP-1 drug delivery.
That looks like a bear flag,
I'm Libby Dunn, All-American
if you ask me.
and Fiore athlete. When you travel and train as much as I do, you find happiness where you are. On the mat or on the sand, movement and comfort are essential. That's why I live in performance joggers by Fiore. Made from DreamNet fabric that's made of 89% recycled.
VWAP's up at 438.90.
My happiness starts here.
I'm not sure if you guys see anything with, like, you know, an extensive amount of volume or not. Like Pinduoduo, I think, is already done. You know, that trade's already kind of happened. Let's look at PayPal. I haven't looked at PayPal in a while. You know, again, I'm going to try and find some... Why are my charts doing... Again, I'm just going to apologize and reiterate it. I don't, you know, I'm having a little bit of... As soon as the market upped, it was just like, whoom. I don't know if it was the volume or what, but things started to get a little sketchy. Things were getting a little sketchy here as far as my computer. It's just, it's being a little slow right now. It's not that it's slow, it's just, it just feels like it's like skipping, like time in sales. Time in sales should be like running down the screen, not just like pop, but like just flickering. SMCI consolidating. It's gonna pop. AMD. There's. Looks like it's doing exactly what it did yesterday. 1, 2, 3, and on the fourth one. 1, 2, 3. See if you get one more pullback, and if it holds, if it tries to start to rally a little bit. All right, we're getting paid on Ford so far. You know, I think though Ford is I think it's already done its ATR, and I bought the top there. What just happened with the 15-minute chart?
The United States of America produces 0 leading-edge chips in the United States. We buy 92% from one company in Taiwan. That is not resilient. That is not safe.
She's so goofy. Her mom told her too, the commerce secretary. Her mom told her not to get into politics, and she said, you know, because she's talking about how bad politics are ugly and stuff, and she's like, no, I want to be there. You know, like, I want to get ugly. I want to be, you know, I'm like, really, it's so insane, so crazy. And then here, people from the robot place lost their job because because Amazon wanted to buy them out, and they were going to keep their jobs and stuff, and they said no. No, you can't buy this company out. Who the fuck are they to say anyway? If the company wants to be sold, and these are like, you know, people started this company, and they're like, yeah, our goal is to sell it. Like, the government should not be able to tell you at another company that you cannot be bought out by this company. Come on. I get what they're trying to do, but you know, it's not like the thing is if like a company buys everything and they own everything for the most part, and then they start trying to raise the prices, well, guess what? Someone will see that there's a profit margin there, and that also is what helps create competition. Because if they're not going to give a product at a fair price, there will be somebody that'll step in to collect the margin on that product or service. Let's see here. So you know, again, I think Ford is a little bit overdone. I just think it's done its ATR. I don't know what the news was, but that's institutional buying in my book. Ford accident involving autonomous driving tool under investigation by 2 federal agents. Okay. Alerts today. Man, this would have been a sick trade, bro, if I would have seen the volume there. But I was late on it. What I did with Ford, I would not suggest anybody else to do. You do not want to buy the top. Again, I just wanted to put it on to see if it could give me something that's a small amount of money. I can lose it. Just in case there's a gap up. I got 2 weeks on it. If we do get to 13, I'll be in the money, and it'll be a nice trade. Alright, mRNA. Sorry, it's glitching. So what happens is I push backspace, and then it only takes back everything but one letter for some reason. And that's why it's been doing that. So it looks like we're kind of just flat. I may just look at the indexes. Here comes Amazon trying to work its way up.
Yeah, you know, on Apple, again, our latest reports, of course, that we got from one of these data firms was sales were down pretty significantly.
177. Amazon's been flat the past couple of days.
For government employees, is that a real thing? Are you aware of it? Is it happening, or you know?
What are you guys watching today? Oh shoot, I forgot about Meta. Oh my gosh, did you put that short on Meta, Ann? I told you, bro. I knew it was gonna pop on you, dude. It's the strongest stock. This is what we need not do. We do not short the strongest stocks. It's up at highs, and it was putting in a hell of a reversal signal there. You know what? It may start to pull back here. But look at that volume on the 1 minute. That was some pretty serious volume in there. I think they're trying to just shake y'all out. For anybody that's short, I think they're really trying to shake you guys out here. That's insane. Sorry, I just want to bring it over and... Yeah, I'd be watching 505. 500 to 505.
Distillates a build of 624,000 versus a draw of 87,000. And gasoline, a build.
So what does that mean for? So that's more than expected. So a pop. Why wouldn't it drop? Oh shoot, Coinbase. Look at Coinbase, guys. Coinbase has got a nice pop on it. I forget who was talking about Coinbase yesterday. I said I would watch the level up there at like 245. Dude, this is gonna fucking piss me off. I'm sorry for cussing. What time is it? It is 11:30. So let me go back here. It's just skipping. This thing is just skipping bad. All right. Coinbase. You have a little bit of resistance up here at 245. Flat top resistance there at 245.50. 244.50 or 240? I don't know. 244.50, 255. All right. What did we do here? We left and went there. What did we do here? We left and went there. Where are we?
Visit revivapharma.com to learn more.
Real Italian leather, complete comfort, unquestionable style. You can thank me whenever. They make me look and feel as good as I did in the pocket. So versatile.
Gold, guys. GLD. Before I forget, yesterday I almost bought it. Yesterday, but I said, you know what? Why would I do it now? Like, just wait for the day that you have some nice volume and such. Let's see. Look, man, it pulled right off of that 200 level.
Visit Indeed.com/hire and get started today.
That's not a good sign. You would wanted to see yesterday's high day hold, just give you some strength. But again, you guys remember we have Fed, we'll have Powell, we have the FOMC minutes, summary of economic projections. We will get into those. We'll have it live and everything. Let's see if we have any updates on news. Kerning slums at the profit warning. Oh, yeah, and Boeing. I forgot, guys. Boeing. I know it's going to be too late to trade it now, but Boeing. Bro. Okay, Boeing with a little bit of strength. Doesn't surprise me. I don't know why.
Welcome back to Squawk on the Street. I'm Bertha Coombs with your CNBC News update. A federal appeals court is hearing
All right. We can look at some small caps.
measure allows police to arrest migrants who illegally cross the border from Mexico in Texas and gives state judges the power to deport people. The Irish Prime Minister unexpectedly resigned.
I guess people are still trading these names.
President Biden in Washington just last week said he will step down as soon as a new party leader is
Congress to ban uranium supplies from Russia. I don't know why they say these things. They talk about banning stuff from like Russia and stuff, but they don't.
breach of Kate Middleton's hospital records. The probe comes after a report that staff at the elite hospital where the Princess of Wales underwent abdominal surgery tried to access her medical records. The princess has been the subject of conspiracy theories as she has mostly remained out of the public eye since that procedure. David, back over to you.
Thank you, Bertha. Well, if you haven't heard, it is day 2 of the FOMC meeting. Steve Leisman is in
Oh shoot, and I forgot about MSOS. MSOS is hanging out. PDD. All right, we gotta spice these things up, gang. We gotta spice the stream up. I appreciate you guys for hitting that like button. Guys, it does really help. It helps others find us. Like, when somebody that might want to learn how to do this, hang out with us, all that fun stuff. So, I'm going to look at the SPY right now. Let's see. Let's go pull up the SPY. Look at that reversal there. That reversal looks like it kind of came in out of nowhere. We are a bit crowded here, so you have to understand that we may just have, like yesterday, you could tell as soon as we got to that 514.60 level, what did? We just traded sideways. We didn't move. You know what I mean? I kn-
balance sheet unwind or QT it more than doubled during the pandemic.
So is it going higher or?
In the past year, the CNBC Fed survey
Let me see here.
looks for an average of another trillion or so to come off before the Fed finishes quantitative tightening as expected in January. So we'll listen to see if that forecast is right from the Fed survey. Also asking the Fed survey guys about politics and the Fed. It found 73% of our respondents think the presidential election will have no influence on the Fed's decision about whether to cut. 12% thinks those cuts could be more likely and 15% less likely. 88% say the Fed would just go ahead and reverse course and hike if needed despite the presidential election, while a small contingent, 12%, thinks that it would make them less likely to do so. All of that is to say survey respondents, and I think the market itself, take the Fed at their word that they are data dependent with no obvious serious economic risks right now on the horizon.
The S&P's 514. We said that pre-market. That would be the level I would be looking for on the S&Ps, guys. You know, if you're able to get enough volume. Volume's pretty low, which is okay. You know, it's to be expected. But making 514 support, I could see that happening. And what I'm going to do also is every Fed day, you know, so I remember, at least on the SPY, I'm going to be putting in the low and high with a box. And once we start to trade out of that range, today, in my opinion, I don't think this Fed meeting, I mean, because we're getting a summary of economic projections, you know, we'll have some volatility, but I feel like, you know, we know what we're getting, right? That's more data. They want to see more data, this, that, the third. What's her name came on from Europe this morning, pretty much said the same thing.
I think that if people came in the room, they would be very pleased to see the lack of politics in the discussions, and that effect.
Let's go 1260. Let's try and get it. I might set out a bid here. I know it sounds stupid, but I may try to throw one out here for like 12 cents.
How confident do you think they will feel that inflation is moving down to their target at this point after what we saw in January and February?
I think
ANVS out of its buy,
now
they're
they should
popping
feel
to the
confident
highs
it's
now.
moving, but it's not moving at the rate that would be necessary
ANVS
for interest rates to come
shares
down
are up
as quickly and to the
27%.
degree that markets are currently expecting. I think that there's frequently
Company earlier announcing
market
plans
assessment of the Fed's likely policy path
mid to late stage
a
data
view
from
that,
experimental
2%
Alzheimer's
was a
treatment
rather
in April
random
that
or
Alpha
arbitrary
November
target.
victor Sandy
So
ANVS.
they don't have to get down to 2% before they can declare victory. They could declare victory at 3%. And that's just
All right, I have an order out there for 12 cents. Just putting it out there in case it gets filled.
their target, materially higher than their target. They just won't lower interest rates as quickly as markets are expecting. I think it has to get closer to 2.5 as opposed to 2.9 before they can say now we.
So we have PDD. We could look at oh, that's not good. I'm gonna look at BABA and to see in comparison what it did. Man, I just don't like that my computer's doing what it's doing right now. Man, PDD was the big trade, guys. Fudge. Damn, look at Tesla. This is exactly what I covered this morning. You guys see how it goes down and it retraces more than half the move? I literally talked about that this morning. Literally. That was literally the lesson to start the day, to say, hey, if we're in something that's, you know, not giving us the follow through, what are we doing? You know, if you're wondering why you're trying to trade options and you're, you know, it moves in a direction and it's still red, it's probably because of something like this.
think 2 is more likely, given the way that I expect the environment to evolve over the course of the next few months. And it's possible that would mean that there wouldn't be a Fed even in June.
Yeah, well, that's just what we might get in the dot plot in the outlook. They go from 3 where they were in September this year to 2.
All right. AMD breaking down.
Thanks.
Breaking down.
Retailers are down this morning, despite what was a beat of earnings estimates. We're going to talk about the quarter. That'll be next with the company's CEO.
Trend Tracker is sponsored by CME Group. CME Group, where risk meets opportunity.
There's some things that work better together, like your workplace benefits and retirement savings. Voya provides tools that help you make the right investment and benefit choices, so you can
Okay, that line's right up with the 50-day.
to a more confident future. Voya, well planned, well invested, well protected.
What makes a comfortable retirement? It's having the money to retire on your terms. And that means having a smart plan for how your money is invested, how long it needs to last, and perhaps where it will go when you're gone. Creating a plan with Fisher Investments gives you the confidence your money will cover your healthcare costs, last throughout your retirement, and perhaps become a legacy. You'll also have a team of specialists in investing, retirement.
Again, I'm going to say this again. I have... Man, come on, bro. I have a limit order out there on Ford. Just getting it out there. Alright, so what are some names we could look at here? Let's go through the heat map and see. What do we think Bitcoin's going to do? XTLB. XTLB. Alright, XTLB, guys. This is a penny stock. Let's go to the daily chart. Where's our resistance level? Where's it going? That's the first thing. Dude, it's way above the 200-day. Holy smokes, bro. $2. 206. Sorry to shout in the mic. 206 looks like your next resistance level. There at 206. I would watch that level there. I repeat, 206. Man down, man down. Copy over, 206. Yeah, Johnny, I'll pick you up, 206.
Studies with GLP-1 suggest reduced side effects and better blood sugar control with reduced spikes. Luxeria Bioscience, transforming the future of GLP-1 drug delivery.
I mean, the resistance is at 252, but I think you're going to come into trouble here at like... My stuff keeps skipping, man. This stinks. I'm going to say 209. Keep it safe with that. 209. Analyst on Shanghai. Let's see what banks are doing. Let's get an overall look at the markets here. All right. KRE kind of pulling back a little bit. I don't understand why. Sorry, I was looking up year-to-date laggards. Market type, Warner Brothers, Charter. All right. Feels like it's moving quicker now. Might have been just the open.
Gender gaps in the venture capital industry are still massive. In the U.S., women comprise about 11%.
I'm so tired of hearing this gender gap shit. Yeah, probably because women don't want to be doing it. Or, you know, there's not a, you know, there's a... Like, they act like we're purposely going out of our way to hate on women. Like, please stop with that stuff, man. I'm sure there's a goofball out there that does do dumb shit like that, but the majority of people don't. Chris, what's up, my guy? It's good to see you, bro. My trading week's good. Yesterday, bright and early, had a big trade long on the SPY yesterday. 415 calls, we picked them up for 5 cents. Damn thing was in the money by 1, 2 o'clock. I did not take it all the way. You know, I ran out of contracts. But really, it's been good. It's been good. I had a small loss on Disney yesterday. And we took a scalp on the SPY. 14, 15 cent scalp to 27 on the SPY yesterday on the pullback, but long in the morning. And then a small loss on Disney. But good, man. I've been, like today, I've been patient. I'm going to have Powell on today. We get summary of economic projections. Disney's been strong. I did put some money on Ford today. Some small money. All right. And I have contracts for next week. This looks like to me free money, guys. Relative strength there. I mean, the move's probably be about done now. It's up 2%. I have a limit order out at 12 cents. But how about yourself, bro? How have you been? Did you get your computer in yet? I'm glad you stopped by, man. I like to hear from everybody. Just make sure everybody's good. And so, yeah, guys. Right now, I'm just looking around. And, you know, kind of just waiting. I'm going to be patient. I wonder if Coinbase can get back to 260. Let's do a rundown on this. But first, I know I have ADHD really badly, and I need to get medicine for it. You know, even though it makes me like irritable and quiet, it doesn't make me irritable. It just makes me like real. Doesn't make me angry, but like irritable, as in like I don't want to play no games right now. Why are you playing games with me? Type stuff. I can't joke around. You know, I don't like how it makes me. It makes me like mean, and stuff like that, and like to myself and quiet. But I have such bad ADHD. It's so bad, guys. It's so fucking bad. And I try to like physically like fix it, but I feel like I can't because it just does it, and I don't recognize it. Then I recognize it, but it's too late. I've already done the act. But Moderna was a sympathy play today. Was a sympathy play here with the other stock. Oh shoot, I forgot about Mobileye too, guys. MBLY. And I already forgot about the other stock that I was at. So Mobileye had news today. Oh, Coinbase it was, yeah. I mean, now CPU is your processor, right? I would go like, look, I have an AMD Ryzen 7. If that's a CPU, right? Is that what you're talking about? The processor. I think Intel is like, all right. So I feel like AMD is really good. It's got good graphics, stuff like that. Not just the graphics card, but I mean like AMD's good, but I feel like I've heard like Intel is a little bit more reliable in that sense. Again, AMD has new CPUs out. So, right, like I have the older Ryzen 7. Not like older, but like the 5500 series, I think it is. Something like that. I like it, bro. I mean, like, dude, I steady have tabs and like stuff going on. Like, I can run OBS. I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, I got like 30 tabs up here. You guys can't see it, but look, I always have these up every day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. So, and they're up every day. And it runs really good. So, I mean, you know, I don't know. I haven't had any issues with it. I think when I have issues like with the camera and stuff, like I don't know if it's OBS or if it's AMD. Now that's where I would say, like, once you start piling, if you plan on piling on like big things that I would like it would work right now but like it's just like I don't know. I can't explain it. I feel like it's either I think OBS, because I need to update it, and I think that the update is why like the camera would cut out on me, and like it'll just randomly work some days and not the other. So I have a Ryzen 7, AMD Ryzen 7, and I love it. You know what I mean? So that's just my opinion. I like it. I don't know too much. I mean, it's either to me an AMD or an Intel. Unless there's some out there that I don't know about. Unless you're going to get like Micron or something. I don't know if they even offer stuff like that. But, you know, I don't know how much they're running nowadays either, though. I got mine before, you know, kind of, like, I kind of bought mine on the high. Kind of. I'm excited to see what happens today. I mean, again, I think that we're going to get Powell saying the same stuff as usual. But I want to see the summary economic projections and if the year-end target for Fed funds rates has changed or not. So we'll cover that. It's 10:54. I'll get into that in like 15-20 minutes. Like what I'm going to do is we'll go back and we'll go look at where and how many rate cuts they kind of said last at the end of the fourth quarter back in December. I don't know if you guys remember that or not. And then compared to where they are now, like if they're saying, man, you know, we're only pricing in like we thought we were going to do 3 or 4, it might only be 2. You know what I mean? That's probably going to mean that the market's probably going to be like, oh, shit. Like, they're going to be too late. Spreads are already widened. I talked about that this morning. Like, just go look at even the 2s and 10s. You know, look at the spread. It's nearly, like, right. So when I looked at it, we'll just use today, right? We'll say 4.67, 4.68. We'll say 4.7. All right, 4.7 versus 4.2. You're talking 0.5%. A little, you know. We're talking 0.5% there. So it's pretty decent spread there. But yeah, I don't know why the heater's running. I gotta go turn the heater off or down. Missed out on NVIDIA, SMC, and AMD? No, I did not. I didn't miss out. I was debating between a Ryzen 7 or i5 where I should go with some overkill CPU. I mean, the two, I think you'd be cool. Like I would do either. I wouldn't even think about it too much. I would go with the Ryzen 7 or the i5, honestly. I mean, you could go with overkill. You could. I mean, the thing is, you could always replace it later on down the road too. It all depends on what, you know, what you're doing with it too. I mean, the bigger the better. The more the merrier, I guess, right? It's not going to hurt you at the end of the day. Let me go. Give me 1 second. What time is it? 10:56.
The high appeal to develop value engineer products to offer customers a great value without deep discounting, we were able to maintain our average transaction value in the fourth quarter, and we will continue to, to really support the value of natural diamonds in the category. They're rare, they're special, and they signify love.
And what about the balance between e-commerce and traffic that you're seeing in stores and how that's evolving in a post-COVID world?
Yeah, e-commerce has been a great story for us. We got, after digital and e-commerce, even before COVID, every jewelry consultant with an iPad, and that really allowed us to come through, otherwise difficult period pretty well and with some momentum. We have quadrupled our e-commerce business since the beginning of our transformation, but while still only about 20% of customers buy their jewelry products online, almost 80% search and browse online before they buy.
Got it. Jenna, thank you very much. It's really good color. Really appreciate you joining us here on the earnings.
Thank you, Sarah, and thanks to our team.
Jenna Drosos of Signet. Stock still down 11%.
Stock's not doing well.
It's a big mover on earnings, always.
Notice that. All right, a lot more of Sarah coming up in the next hour.
I gotta use the restroom real quick, but guys,
Sarah Lab.
don't forget, if you guys are planning on playing Fed Day, whether like the indexes, like the SPY or the Qs, write down your options. Make sure you guys are taking note of how much your options are and at what strike price. So you understand, hey, we're down here at support. They were at 25 cents earlier this morning. They're down to 4 or 5 cents. I should have at least 10 cents to work with. It's just good to know.
The future isn't scary. Not investing is. 100 innovative companies, one ETF. Before investing carefully, read and consider fund investment objectives, risks, charges, expenses, and more. Prospectus at Invesco.com.
With the Fundrise Innovation Fund, you can invest in some of the world's top tech companies, including those leading the AI revolution before they go public. The future is now open for investment.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire. I need Indeed. Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
The more important thing to that too, though, guys, is the volatility. Are you seeing that, like, that the SPY is not moving, and that the options are pricing in a move because of the Fed meeting, right? It's just good to know what strike you were looking at and how much you are. I'm knocking out a bowl of cereal real quick. Why is having paper trading futures for the past week? Oh, cool, man. Well, look, here's the thing, Chris. I need you to understand something. You're saying that you might take a switch to futures, and that's cool. I get it. You know, the good thing about that is you don't have to worry about delta, theta. But you got to think about the market. The market cycle. The market's been really easy to trade the past week or two. You know what I'm saying? So just take that into perspective, right? Because these levels have been really easy to trade. I traded it twice yesterday. But I get it. You know, futures are nice because you don't really have to worry about. I don't know. It has its pros and its cons. I'm just going to say that. But these levels have been really easy. You know what I mean? Your support, you have your major support and resistance, your low and your high, and then these pivot levels, these like middle levels have just been holding. Like right now, if we can't break above this, you know, I think we're going to pull back to 514. I think the market's been really easy to trade lately. You know you can at least get back down to 515, worst case scenario. Anybody notice Carl Quintanilla's not on CNBC lately? I wonder if he's having a meltdown or something. Right. You know, but if there's something there that you like about it, that's cool. Sometimes we all need to recognize, like, I need to do it myself. It's like the market cycles, you know, and volatility finds itself in different places. I heard someone saying yesterday about, I don't know, like, I didn't really take them serious but they were just talking about changing around the markets, and you should. You should have access to futures, forex, and stuff like that, because volatility itself goes in different sectors. There's different things that happen at different times, and you want to be able to trade currencies when there's volatility in the currency department, we'll say. Europe, Japan, you want to have access to like some of those things. Give me 1 second. Let me eat this bowl of cereal real quick. What are some names you guys want me to throw up here? Palantir had a really nice day yesterday. I can't believe I forgot about Mobileye. I do really well. There's like some names that I do well with, and some that like kind of I don't. But I always have like made money every time I trade in Mobileye. Oh look, Tesla worked its way back up.
That the primary endpoint was achieved. That's Indigo really get shares bolted out. That
really depressed sentiment. A lot of the tailwinds that have been in the market for the non-IT part of the market are, a lot of the headwinds are turning into tailwinds as we continue to see a very
Bro, what the fuck happened here?
Again, we're starting to see cracks, which makes us confident that we will see those 3 rate cuts materialize.
Oh, awesome.
Today, though, if June is still 50-50, or if we're looking forward to August or September instead.
Yeah, we'll see if they, create more suspense about the next couple of months of data, which may well be the case. I wonder how you think an investor ought to be treating this gift of very good year-to-date returns. It's even been a global move.
Yeah.
If you've owned non-U.S. markets, outperforming bonds. You look at, there have been flows into equities, actually a heavy flow in the last week, but also into cash and also into bonds. Everything.
I can dig that. That makes sense. Because I mean, it's got to make sense, for somebody. They've got to make enough money to run equities as a business. I'm thinking the markets might pull back. I mean, I don't think we're gonna pull back right yet, but notice the cues, right? So here's the cues. I wish I could play this stuff for you guys, but I can't. They might cop. I don't know. They never did it before. I don't know why they're doing it now. But look at the SPY, right? You just saw the cues. Oh, come on, bro. All right. SPY is up here. Now let's watch. Let's see if the IWM is down. No? Okay, it's not. Then I might be taking that back. Okay, the Dow's. It's exactly what we got yesterday. You're seeing an outperformance in the Dow names. I mean, it did start this morning, but JP Morgan's just still ripping, guys. You could be long that name to 200. That's crazy, bro. That's insane. Wow, the Qs are weak, so I would keep your eyes on technology, and that looks to be where if we get a pullback, you would want to be short. Let's look at Snowflake. I'm still wanting to buy Snowflake for my long term, but I just feel like I'm not going to get the price that I want. I should be buying it down at the low hundreds if we get another chance. Let's look real quick. Let's go look and see what we got. NASDAQ Composite. Nice. So, I mean, so look. Really, it's in your Regeneron, Moderna. It's really the healthcare names in the NASDAQ that are hurting right now. ARM is doing really well right now. And I was looking at that the other day. I was just looking at that last night, I mean. Let's see if it comes into resistance there. So Moderna was an idea this morning. Moderna, mRNA. It's kind of playing out, but that 200-day moving average, it just doesn't it's holding up. So maybe we get a nice rejection up here and can drop this thing back down. I'm going to look for like a 103 rejection. But again, we had the Fed meeting today, so it's kind of like throwing a wrench into everything. What the fuck, man?
But if you take a look at the daily rate from Mortgage News Daily, you see that by Thursday the rate had crossed back over 7%.
Need
and
another
it
bowl.
Even higher to start this week. So applications to refinance a home loan, which are most sensitive to those weekly rate changes, fell 3% compared with the previous week and were also 3% lower than a year ago. Applications for a mortgage to buy a home fell 1% for the week and were 14% lower than the same week a year ago. And interesting on those purchase applications, with housing supply low and prices high, the average loan size for purchase applications increased to the highest level since May of 2022. Back to you guys.
Interesting. Now, Diana, you mentioned, and of course it's a constant with this conversation, that supply of existing homes is so low. Is there anything we're waiting for except for just time and for just the natural need to turn over your house to make that change at all?
Well, we are seeing a little bit more coming onto the market now because it's the spring season and that's when people tend to list their homes. But really what you need to see are rates to come down pretty dramatically because that helps unlock that rate effect of potential sellers who are sitting there with a 2.5% mortgage rate saying, I don't want to buy and trade up to a 7% rate, but maybe I would trade up to a 5.5% rate if I had to because I want to.
I'm really frustrated I missed PDD today. Pinduoduo. I want to know why the chat did that. It just like got rid of everything. Wait. No.
Plus, we'll look at
I'm gonna go. I'm gonna have this bowl of cereal, and then I'm going to. I'm going to. Shit! It won't let me do it. Damn it! I was hoping I could cheat code it. I'm gonna finish this bowl of cereal, and then I'm going to bring up the summary of economic projections. No, come on, bro. No. Oh, well, whatever. I'm not worried about it. I would write down puts, whether today, Friday. I would just keep an eye on the price of it as you get up to these highs, guys. Because the closer we get to like 12:30, 1 o'clock, 2 o'clock, the volatility, the price of them should start to go up as we get closer to the Fed meeting. Because, I mean, we know that this has been resistance. You know, chances are we break out, but I think we get a pullback before we get that breakout. I still think 522 just is calling us. The Dow's still got a little ways to go. So you may have the Dow might take the SPY up to new highs. That could actually be coming. You know what I mean? Well, you know what? No, right there. Look at that. Resistance, support. You break above it. It tries to hold it. Breaks back down. Gets above it. Breaks back down. You know, you could say, yes, like your resistance level is up here, like 396. But look at this level, right? It held. it was resistance, it held, was resistance. So I would say that that's the start of your resistance. And you can see you're kind of getting a pullback off of that level. This is the Dow, so I would expect a pullback to yesterday's double top and see if that double top can hold. Yeah, man, I'll see you, Chris. It should be a good afternoon though. But yeah, man, I'll see you. I appreciate you, bro. I really do. You have a good rest of your week, or until next time, man. If you need anything, you know where I'm at, bro. All right, I'm done eating. Let's get to work. Let's get back to work. All right, so we got a couple things we got to do. We got to get up the summary of economic projections from last month. Just write down. I'm pretty sure they said 3 rate hikes. I don't really think I need to bring it up, but I will just to make sure that I have it. So that I can use that in a comparison to what they bring out today. And if something changes that the market doesn't like, if I see the market, not really, trying to sell off and can't really hold any gains off of the FOMC release, then I kind of know how the market's going to take it, and I'd probably want to stay in that trade for a couple days. All right, that's going to be my plan. So I'm going to work on that right now, getting this up, and then we're going to get, we're going to go, also looking at our options price, right? The volume, open interest, all that fun stuff. We want to see where do we want to position ourselves. I meant to write it down yesterday, the volume and open interest yesterday, but I never did. So I could see, because you'd be able to see the changes that have taken place. All right. Okay, so where is Ford at? I think this is still Ford. So I have a limit order. Let's see. Where are we at here? Where do I need to get to? It's kind of just sitting up here consolidating, and that's okay. Figured it would. $12.60. It may pull back to $12.50, but we'll see. I don't know what the news was on Ford. I don't know why I couldn't find it either. Tesla stock is up. Update Ford accident following autonomous tool. Ford accident involved. Like, why would the stock go up like this? I don't understand.
And that's something that differentiates us from our customers, from our competitors.
So, said Tuesday that they are investigating February 25th daily crash with autonomous driving capability in Texas, the National Highway and Transportation Safety Authority.
Speaking of, can Intel compete with NVIDIA? We're going to look at the nearly $20 billion in grants and incentives that the White House is awarding.
There's nothing that they could really, I mean, they can maybe get the data out of the car, but I don't even like that. I don't like that they can just get the data out of your car and kind of see what you've been doing in your, like, I don't know. It's got its good and its bad with that. Because if something crazy happens that you can't control, which is so highly unlikely, it's not like your car is just going to be like, vroom, like steps on the pedal and it's just going to go. I'm not saying it can't happen with it, especially with an electric car where there's no like drive-by-wire and stuff like that. You know, I don't know how an electric car uses accelerators. I haven't really looked, how it transfers it from the battery to the pedal to the wheels, or from the pedal to the battery to the wheels. We could find out. We could find out right now because I'm kind of curious. But again, I still have an order out here for 12 cents. I have 12-cent order out here. I feel like I want to like get rid of it. It's up 2.2%. Man, this would have been a really nice long. Oh, look, we're getting a 12. Are we getting our 12s? Look, we got it. There we are, baby. We're in one of them. Probably the Philly Exchange or the CBOE. I'm not sure. Or no, we might be NASDAQ. I might be in the NASDAQ. Wonder if I could change it. Come on, give me my 12, dog. Give me my 12, baby. Come on, baby. Let's go. Let's flip the script. Flip the script. Come on. I've been waiting in line with this 12 for a while, so I should be first. I should be first. Man, what a whole asshole, bro. A whole one. Not a half of one. What a whole one, bro. Come on. Come on, you just getting ready to empty the clip on those 11s. I'm not dropping shiz. I want my 12, bro. I actually got to look to make sure I'm still in it. Because I don't think that, yeah, I'm still in it. I'm still in it. I wonder where the, I wonder what we have here. Look. I know it. You got 13, 17, 25, 32. Who in the hell gonna sell it at 32, bro? That's crazy. We did it. We did for a minute. And then jerk offs freaking lowered it. Raise it to 12. Raise your order to 12, fool. What are you doing? The Dow's going strong. Ford is a Dow blue chip name. Blue collar, blue chip, blue everything. Go to 12. Just throw your orders at 12 and don't lower it. Stop being a little witch. Replace that W with a B. Stop being one of them. 197 plus 67 of y'all is a bunch of bitches. Y'all a little bunch of bitches. Oh my god, I gotta go out. It's at its highs. Oh my god. Look, there's the Dow pulling back too. They're gonna look. They all gonna start adding it in now. They see the Dow pulling back. They don't have much faith. They don't know what this game is about. Tell them, let's go. Take their order and scream higher. I'm keeping my 12. Let's go. Let's go. 1260 on the table, baby. 1260. Bro, they need to stop lowering their order like a little witch. Come on, man. My boy, I might tag along with my boy down there at 13 shares. Or 13 cent ask. We all piling up at 12 cents. Here we go. We got a bunch of little punks trying to underbid us. It's so funny. It's so funny. 1259, 1258 bid ask spread. Bro. There should at least be a penny difference. Yeah, I don't want a premium. I'll just give it to you for a penny more. I'll collect a penny on each share. Wow. Wow, are you serious? They all just left? Wow, that's so funny.
Yeah, Sarah, that's the debate in the market right now. Kering losing over $7 billion in market cap, as you mentioned, down 14% at the lows. European luxury stocks down by over $30 billion in market cap. Kering warned that sales are going to be down 10% in the first quarter. That's largely due to a 20% drop in sales at its flagship Gucci brand. Kering saying that Gucci decline is, quote, notably in the Asia-Pacific region. So, investors worried here about China.
All right, again, I'm going to leave it alone. I'm going to just let it do its thing. All right, so here we go. So, Tesla back down below yesterday's price. Let me pull this back. Right there. AMD. Yo, just knock this 157.67. Just knock them out of there, and then start working on us 12s, because those 11s are a bunch of scammers. They're actually just they're a bunch of punks that want to get out of the ring. Stay in the ring. Raise it to 12. Do a couple more rounds. Stop being a little bitch. Which, I mean. Excuse my French. I'm sorry. Look. 196. And I know some of y'all 12s. Don't even lie to me, because I know some of y'all 12 centers is trying to, like, push yourself to be the first in line to get, because you nervous. You want to get filled. I'm going to let them fill all y'all, then I can get filled. I don't care. Look, my boys, tell them, bro. Tell them what it's about. Listen, we run the show. Not the bids. We run the show. I wonder if I could take one thing to see where I'm at. I don't know if it would show it, though. Let's see if I could take one of my orders and see if I can find out what exchange I'm sitting at. Let's see here. 25. I'm going to do 26. Watch this. No, I don't want to move my order because I should be like first in line to get filled. That's the other. Well, if I take one of them, it would only be one. Look at Tesla going. Tesla going. Tesla going.
Hundreds of thousands of Palestinians have fled to that city to seek shelter from Israeli strikes in northern Gaza. The State Department says
I wonder what would have happened if I chose the weekly. I probably should have chose the weekly.
a New York judge set an October trial date this morning for the former Marine who allegedly choked a homeless man to death last May on a subway car. Daniel Penny faces second-degree manslaughter and criminally negligent homicide charges in connection with Jordan Neely's death. He has entered a plea
I know it.
guilty. And Pope Francis once again limited his public speaking at his weekly audience. The 87-year-old Pontiff has been suffering in recent weeks from a cold and other respiratory issues. He skipped reading most of his prepared text today, but did call for peace in Ukraine and Gaza. And hopefully he'll be feeling better by next week for Holy Week.
Yeah. Bertha, thank you. Bertha Coons. Former Federal Reserve Governor Randy Krasner joins us after the break. His outlook for rate cuts ahead of this afternoon's big decision. Stay with us.
Crypto Watch is sponsored by Grayscale.
Here comes the flush. Bro.
Only at Vanguard, you're more than just an investor, you're an owner. Our financial planning tools and advice can help you prepare for today's longer retirement.
Okay, let's pull him back.
That's the value of ownership.
Over 1 million people have put Super Beats by Human blood pressure support supplements to the test. And the numbers tell the story. We have over 70,000 5-star ratings and reviews. We're trusted by over 120 pro and college sports teams. We're America's #1 selling beat brand. The only #1 doctor, pharmacist, and cardiologist recommended beat brand for heart health support. See why we've won the hearts of people across America and get a free month supply on all bundles at superbeats.com.
Whatever weather comes your way, WeatherTech has you covered. With our laser-measured cargo rings, no-drill mud flaps, and floor linings. To secure your phone, don't forget the cup phone. Order yours today at WeatherTech.com. You never know when it's going to be a WeatherTech day. Perfect weather today.
I'm Patty, and this is my TimberTech story. In our previous home, we had wood. I never liked it. It was such upkeep. I wanted a sustainable option, and that made TimberTech the obvious choice for me. I want others to know when they come over, it's the first thing I tell them. When they go, I love your deck, what kind of wood is that? And then I go, it's not wood. I love the indoor, outdoor living. The decks have made it even better. I wake up every morning and I look at it and I like it. I'm so happy with it.
At Corient, we provide unlimited access to the collective knowledge of experts across the country. Because the more personal your solution, the more powerful it is.
as less Fed easing in the system here. It has been a pretty good bet. I think what we're going to have today is a little bit of frozen in time. I'm really interested, Frank, and this is what I expect, that the Fed will hold on to this phrase in here from the last statement. I'm going to read it to you. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence inflation is moving sustainably towards 2%. If they repeat that from January, what does it tell you? It tells you they don't have the confidence yet. It tells you we still need several more months of data to get that confidence to cut rates. So there's really going to be no change at all. Obviously, we'll watch the projections. You guys were talking about that. Right. Some concern that they go from 3 expected rate cuts down to 2. But that's really where we're at. And to me is the unknowable question, which your guys around the table are more expert in answering than I am, which is how much does the market really care? Better growth, better earnings on this side versus less Fed easing and maybe some more stubborn inflation on the other side. It seems to have paid off so far to be Terra Nova chill. Just leave it there.
Terra Nova chill. We're gonna coin that phrase. I'm gonna trademark it and make some T-shirts. Steve, before we let you go, I want to lean into your expertise for a minute. So had the chance to talk to New York Times reporter Gina Smilik earlier today. She put out an article that essentially people are wringing their hands over sticky inflation, but she was pointing to CPI, headline CPI, in fact, at 3.2%. I thought that the Fed's preferred gauge is PCE, and when you look at PCE, that's a tick under 3%. It's a different story, and especially core PCE. That's core PCE, just a tick under 3%. Right. Why aren't we looking more towards that PCE number as opposed to back towards that CPI number?
I think we are. I think what happened, Frank, is that people take the PCE and the CPI, or the PPI and the CPI, and they come up with a forecast for, I guess it's next week, we're going to get the Fed's preferred indicator. Usually that runs about a half a point cooler than the CPI does. So really the question is we're kind of stuck at this 2.8 to 2.9% range. So when we get the number next week, the chart on your screen there is going to flatline a little bit. It's not going to go down as it's been going, and that's really the concern. So what I think is going to happen here is I don't think Powell is going to be too exercised by the last 2 months. I think there's an argument that certainly January was a kind of series of one-off price increases. You've had a little bit of pressure come from the energy industry. I don't think he's going to abandon his general forecast, or the Fed will abandon the general forecast that it's going to come down this year. Their forecast is for that core PCE number to hit 2.4 this year. And if it's on the way there, that's enough for the Fed to probably have confidence to begin cutting interest rates. It's just going to take, again, like I said at the beginning of this conversation, a couple more months of data to show that we're back on track to get there. And then, Frank, there's this tussle that will happen, which is this idea of how much concern is there that if they stay too high for too long, it could cause something of a more severe downturn than anybody's looking for here. Right now, there is not the indication of that, but I'm pretty sure the Fed is sort of on the edge of its seat, really combing the data, looking for just how severe the slowdown might be and whether or not it's going to have to react from a policy standpoint.
All right, next PCE report coming up on March 29th. Steve, Joe Terra Nova, or Terra Nova Chill, we should call him. He has a question for you.
Steve, in our best effort to keep everyone nice and calm surrounding this meeting, one of the continual questions I keep getting from financial advisors surrounds the regional banks. And the question is, does the Federal Reserve have a handle on it? Now, I don't even know if they need to really have a handle on it at this moment, but do you think today that's something that we hear about, and how important is it to hear about it?
So he talked about this a lot in his testimony recently, and the word or the message from the Fed is that they have a handle on it. That's what they're telling us. They've told us that they are looking extra carefully at those regional banks, at their exposure to higher interest rates that are out there, and that's something that they're on top of. In general, the stuff that gets you is the stuff you're not aware of. CRE is on the list of stuff that they're looking at, the commercial real estate, especially the office side. The banks and their exposure to interest rates is something that they're looking at and on the list of what they're looking at. So I don't expect a shock to the system would come from those two areas. There may be a whole panoply of things out there that we haven't thought about that might be the stuff that bites you in the you-know-what, but I don't think it's going to be those two, Joe. It's something that investors have to be cognizant of. I think there's possibility of, another bank coming up and having another surprise out there. But so far, it has not been systemic, and in part, that's because the Fed has appeared to be on top of it. One interesting question is that fund they created, which allowed them to finance that is going away. So we'll see how they operate, perhaps without a net here.
All right, Steve Leisman, we got to let you go. You got a hot date with the Fed that you got to get to. Thank you so much for your time
Thanks,
and your
Frank.
insight. Steve Leisman, senior economics reporter. All right, now on to the big tech story of the day. Intel set to receive up to $8.5 billion to build chip plants. Our Christina Partsinevelos joins us with those details. Christina.
I'm going to use the word finally. Finally getting the funding after a year and a half of negotiations to expand semiconductor factories across the U.S. This is the largest award thus far. So like you said, $8.5 billion with a big tax rebate on CapEx spending, so capital expenditure. And Intel is promising roughly $100 billion in spending. That means at least $25 billion in tax savings, along with $11 billion in government loans, which Intel CEO did promise yesterday that it was going to be at low interest rates. I asked CEO Pat Gelsinger on a call last night if the money meant they had to build lagging edge military chips. He said no, the money was for commercial use, and they weren't expecting any additional money from the Department of Defense. Pat Gelsinger, though, was on CNBC earlier today, speaking with John Ford,
right,
promised
got the little
advanced
nap out of the way.
capabilities by next year.
Been up
with
since 3
hopes
o'clock
to
this
sign
morning,
on
so
AMD and NVIDIA
I knew it was
as
going to come.
customers. Still not the case yet. Shares, though, let's take a look at the stock, though. They're off earlier highs. They were, 3% higher. You can see in the red right now because much of this was already
29.
expected, priced into the stock. Since it's not really an AI play, it has a lot to prove on its foundry business and market share loss to AMD. Frank?
Christina, you're saying it's not really an AI play. Earlier
Trying
today,
to fix
Megan
the
Cassella
chat.
also did some reporting on this, saying it's
I don't know
about
what's wrong with
leading-edge
it.
technology. So for investors, can you clarify? You do so much great reporting on the chip sector. What exactly does that mean? What's leading edge?
So leading edge is more advanced, I was going to say advanced nodes, advanced chips that are used in, let's say, a GPU. But these manufacturing hubs will take several years to come online. Pat Gelsinger promised that one of those factories would come online next year. So when we're talking about AI play, we're talking about an AI play right now. Intel does not specialize in these more advanced GPUs. They're known for the CPUs and a bunch of other products that we've used in our electronics for years. And so that's what I meant by it's not an AI play right now. It's more geared towards NVIDIA, AMD that's launching its own GPU, et cetera. Marvell, Broadcom. Intel is going to be the guy that makes those AI chips for the other players. That's how they're going to play into this whole AI ecosystem, but it's not going to be immediate.
All right, some big news for Intel today, getting about $8.5 billion, as you mentioned. Shares just slightly in the red. A lot of this was priced in. Christina Partsinevelos, great to see you as always.
Thanks,
We're going to hear
Frank.
more from Intel's Pat Gelsinger on Overtime today. That's at 4 p.m. Eastern with our John Ford. And now we're going to come back to the investment committee. Steve, you own Intel. What do you make of this news? What do you make about $8.5 billion through the CHIPS Act?
Well, I would have thought there would have been a slight uptick. I mean, if I gave you $8 or $11 billion, you'd all of a sudden be very popular.
Was higher in the pre-market.
Yeah, no, I know, and then it sold off. But yeah, I mean, look, this is a market where it's just waiting on the Fed. So there's really nothing to new there. This was news despite the hiccup with the Department of Defense. Nothing new here. I own Intel because of the foundry business, because they will be having pretty good capacity. They were an early adopter of ASML's new EUV product, which is going to, again, revolutionize, shrink the chip in terms of what you could put on it. So, look, I think it'll do quite well. And Gelsinger made some strategic plays a few years ago when he first started, and you'll start to see them come to fruition.
Yeah, Bring, I'm going to come over to you. You are actually not an investor in Intel. You're not a big fan of the company. Give us a sense why. I mean, this CHIPS Act award right here, grants and loans, given the stock an early boost in the pre-market, obviously now selling off, as Weiss mentioned. But why are you in general not a fan of this company?
Well, no, it's not that I'm not a fan of the company. It's that I don't want to own the stock. And so I think semiconductors are very volatile. I think Pat's been doing a nice job of turning this company around, which prior to him coming had been frozen in time. They missed multiple chip cycles. So to me, the challenge is around execution. Can they catch up? Because while they're catching up on the chip side outside of the foundries, AMD and NVIDIA and the other companies are running 1,000,000 miles an hour. And let's just be clear, Intel would never have built these foundries unless they got the $8.5 billion, because it's incredibly expensive to build this in America. So I think this is a great win for America. It's great to be onshoring. It can be a great company. I'm just not interested in the stock because I don't see meaningful earnings growth over the next couple of years.
All right, we got some other chip news. Broadcom's investor meeting kicking off just moments ago. Joe, you own this one. I know you're keeping your eye on the investor meeting and the stock in general.
For sure, and this has been, the reasonable alternative, if you would, to some of the higher valuation semiconductor and AI stories. Right. The stock has pulled back, though, recently, and it has not recovered from that pullback. Pulled back off of earnings. You're approaching the 50-day moving average currently. So you're looking for something to jumpstart this stock. I believe you will see that opportunity present itself here.
Today?
Well, no, not necessarily. Listen, we're not market timing today's event, but I think the opportunity is somewhere in front of us where the pullback you're witnessing is ultimately going to be a pause that refreshes, and you go back to the previous highs up at 1438 as I see it here intraday back earlier in the year. But I think you have to, and Bryn's spot on with Intel. Broadcom, AMD, NVIDIA, they're spending their time, they're spending their effort, they're spending their capital dollars towards advancing generative AI, right? I don't know that that's what Intel is doing. I know Intel is there to a certain extent, but Intel seems to me like, okay, they're building out chip plants, which Bryn's spot on. It's great for America, but I'm not sure that's good for Intel. And if you look at Intel, down 16% year to date, that's telling you something about it relative to its peers. So again, I think there's clear winners.
Right.
Clearly, Broadcom is one of them, AMD, KLA Corp, Lam Research, and then certainly we all know what NVIDIA means.
I just want to respond to Bryn's comments. You're actually going to see pretty nice earnings growth from Intel going forward. You know, that's.
But what are you basing that on?
Well, maybe. I mean,
I'm
not
basing it on. I'm
necessarily.
basing it on the estimates. I'm basing it on 10% revenue growth that's forecast. I'm basing it on the earnings growth and the fact that everybody's still so bearish on it. So firms have sells on it, like a Goldman has a sell on it. So what am I paying for? What's assumed in the stock? Really nothing. So low expectations versus an NVIDIA that the highest expectations possible. So to me, it's not a core position, but I think it's a good position, and they don't have to catch up on AI. There are plenty of other chip products out there to manufacture, right? And you're starting to see a rejuvenation in the laptop business, which, by the way, will be driven in part by AI. So
well, that's what I'm going to say to your point. And I remember you were here. We were talking about Dell after their earnings. They're talking about AI laptops. You hear other phone makers, including Best Buy on their call, talking about Samsung's AI phone. So I know you're saying there's other chip plays outside of AI, but doesn't that seem to be where the trends are going? And if Intel's not playing in there, aren't you concerned long term? I mean,
well, they are playing there from the foundry standpoint. You know, that's where they are playing it, right? Like I own a lot of Taiwan Semi. That is a core position, right? They're not developing their own AI chips. They're the foundry. They're manufacturing for guess who? NVIDIA, AMD, everyone, right? And that stock is very cheap.
Yeah. I think with Intel, from an earnings perspective, year over year, they lost 4 cents Q1 of 2023. Their earnings come out Q1 of 2024. They're looking to make 14 cents. So that's definitely moving in the right direction. But to me, on the last call, Pat was talking about, we're really excited about the laptop PCs. I think that's going to be marginal. This is a company that needs to execute, but I think that execution is going to come 1, 2, 3 years out. In the meantime, NVIDIA's earnings estimates are looking to be up 400% year over year. So I have $1 to spend in chips. I'm going to buy a Broadcom, an NVIDIA, or an AMD, and just step to the side on Intel because it's too early to me.
I don't blame her. I mean, look, it's not a cheap stock. Numbers, I've got higher numbers. You know, the consensus is higher. It's not cheap, but it's tough turning around companies. Look at what happened with GE, right? How many doubters there were, me being one of them, turning around. Now look at it.
That was quite a long turnaround story, though. I mean,
so is this.
I don't know if this is apples to apples, but just one quick point. Today's Broadcom event, we got to get to the break after this. It's about enabling AI and infrastructure. That's something Jensen Huang talked quite a lot about. He was excited not only about the chips, but the software and the infrastructure. I'm not saying Intel is totally on an island away from AI, but they're not talking infrastructure, they're not talking software. That seems to be what's getting investors very excited.
Investors are paying a premium for two things: having the exposure to generative AI and the subsequent revenue growth, And then just overall, universally, they want growth.
Right.
They want growth from a semiconductor name. And I don't know if you look at Intel where you could characterize that company as a growth company.
Let me be clear, Intel's a small position.
Coming up next, Chipotle pops and Bitcoin, it drops. The trades on these committee stocks and much, much more. We got much more halftime and much more conversation coming back in 2 minutes.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
All right, guys. I know it's hard. I gotta stop doing that, but y'all gotta understand.
Feds.com.
I've been up here. I've been up since 3 o'clock this morning. All right. Appreciate you guys for voting, liking.
All right, welcome back to the halftime report. Let's hit some committee stocks on the move. We're going to start with Chipotle announcing a 50-for-1 stock split. Joe, you own this one in the Joe T. 50-for-1 stock split. I don't think you hear that too often.
You don't hear that too often, but this is phenomenal for the stakeholders. This is phenomenal for the employees.
Right.
You're getting a one-time special equity grant that's going to be given to the longest tenured employees as well as general managers. It's making them shareholders in the company. That's what you want. Now, as far as the stock split, negligible. You know, I don't believe it has such a dramatic effect.
Even on sentiment, though. I mean, we're looking at it. It trades at basically $2,900 a share. You divide that by 50.
Excellent point. Excellent point. Yes, it matters for sentiment. I don't think it matters directionally for price. I do think you invite in a different class of investor that maybe wasn't there previously. If there is one element, though, that I think is important that we don't talk about is liquidity. I do think it adds to the depth of overall trading liquidity, and that's important.
Which should calm down, by the way, the moves that you're seeing in it, because you have to change. But there's no economic benefit, right? And what a lot of retail investors still don't get is if they buy one share at $2,900 or 60 shares at whatever, 50, it just doesn't matter. You get the same return.
That was weird. The sound was
off. Let's not get caught up in the stock split, what it's going to do to the price overall. Look at what management's doing, and I think this is really, it defines the management of Chipotle and how exceptional they are, and why in quick serve you pay the premium for this company. And oh, by the way, they're seeing the traffic in the store. Consumers are paying for the price hikes that they implemented last summer, and they're bringing out new products as well.
I've never seen a restaurant stock hold this kind of premium valuation for so long. And it's been deserved because they continually beat. You know, they surprise the upside.
The product they're delivering is phenomenal. Fresh food, perfect.
Brent, any quick thoughts on either the stock split, the burritos, the queso, anything? Any general thoughts about Chipotle?
Yeah, queso is great, but I will say this: why the stock split is so important. Companies that split their stocks only split their stocks when they're successful. And so it's just validating the success of a company, unlike a Citibank in their financial crisis, which does a reverse split. And so it just validates the soundness and the growth trajectory of a company, and it's exciting for investors. So no,
I'm
it
just
doesn't do
looking up a
anything
couple
to the
things,
fundamentals,
guys.
but
I'm
it
here.
validates the strongness, and I think the continued growth and the excitement around the name, which definitely has a lot of positive sentiment.
You know, I just agree with you. It's a chain with so much Gen Z, Gen Alpha following. The idea of making these shares attainable and someone can buy one share, I think just from the sentiment perspective, could have a big impact. All right, so what happens after the big stock split? Well, we have a story right now on CNBC Pro exploring that exact topic. It's beyond my speculation about retail investors. Scan the QR code or go to cnbc.com/ProPick. Now, we got to turn to Bitcoin. So it's down double digits, down 11% since hitting a record high last week. Weiss, you own Bitcoin. Bryn, you own the Grayscale Bitcoin Trust. Bryn, I'm going to come back to you first. What do you make of this downside move?
Oh, I just think it's the price of admission for being in this space. It's had such a meteoric run, by the way, this year. So I just think it's selling off. I do think Ethereum's interesting here because the ETHE, the trust, is still trading at a 20% discount to Ethereum. So if that ETF did come out, that 20% would collapse instantly. And so if you think it's going to come out, that's actually an interesting trade right now.
You know, I know you switched over to Ether, but back to the Grayscale Bitcoin Trust. Do you think the moves, the outflows that we're seeing there in particular, is that about fees?
Yeah. For sure, right? For sure. I think the reason why you're going to stay in there is because you have a realized gain. Outside of that, all the flows are going to really IBIT, which has just a fraction of the fees, and that's going to continue to go that way. I think GBTC will be forced to lower their fees to meet with the rest of the market.
I mean, Weiss hit a record high last week.
Yep.
The decline we're seeing, I mean, it's obviously a very volatile asset. Do you think it's profit-taking, or is there some change in the way that investors are viewing this?
I did sell 25%, so it was profit-taking for me. It just had huge. And to Joe's point, you know, Joe T, momentum buyer, I looked at it into Joe's psyche, and he
or
said,
Terra Nova Chill.
And Joe Chill said, hey, take some off the table because momentum's dying a little bit. Look, it's going to keep going. There's still no use case for it. It's still ridiculous. We had somebody on the air on CNBC earlier talking about how it's a store of value, except it hasn't been, but it will be. You know, so give me a break. I mean, it's an asset. It's a legit asset class,
right.
And I think you can make money. And my bet still is on the major marketing budgets of Fidelity and BlackRock and everybody else. So when those budgets dry up, that's when I'll get rid of the rest of it unless it doubles from here.
So really quick, it hit the record high. Do you think some of that was some of the Bitcoin companies telegraphing that they were going to buy more, leading to some momentum, and now that they've already made the purchase, the momentum's gone too?
The momentum's clearly gone right now, but it's a moment in time. We've seen this before. It's very volatile. And it's very emotional because there's no underlying fundamental case. So it trades purely on emotion. So, you know, unless you're one of those who think that the fiat currencies are going away, you can't invest in bank systems and ignore Sam Bankman-Fried and ignore the guy where they found 33 million worth or billion or whatever the hell it was of Bitcoin in his house.
It makes me so happy that my good friend is finally coming around and acknowledging the fact that momentum matters in the market, and it matters in the futures market. And I really believe that Bitcoin trades most like a futures contract. And momentum is the most significant indicator that you want to be observing in that environment. And back to what Bryn's saying, the price of admission. Okay, the price of admission in the futures market is volatility.
Yep.
And that's what you're going to have if you're participating here.
Diamond hands, though, Frank. At the end of the day, diamond hands.
You got me with that last week. All right, quick turn to financials. JP Morgan raising its dividend by 9.5% to $1.15 per share. Joe, you own this one.
Stock's at an all-time high. I mean, what else? This is the classic example of the calm that I see in the market right now. This is a classic example of there are alternatives beyond the Mag 7. great leadership, executing. They narrowed the footprint in prior years to their advantage. They invested in technology, billions of dollars to their advantage. It's a company that I've been very happy to own for the last year, and I will continue to own it even as it approaches an all-time high here at 195.59. I think goes well above 200.
All right, and JPM shares up just about 0.75% right now. All right, time for our headlines. We're going to be joined by Bertha Coombs. Bertha, good afternoon.
Good afternoon, Frank. Donald Trump will be allowed to appeal the ruling that let Fulton County District Attorney Fani Willis continue to prosecute his election interference case. The judge granted the request today to ask the state appellate court to review his decision. Judge Scott McAfee allowed Willis to remain on the case so long as Special Prosecutor Nathan Wade resigned, which he did on Friday. Israeli Prime Minister Benjamin Netanyahu said that the operation in Rafah will take some time and that he was close to approving an evacuation plan of Palestinian civilians from the area, a point the White House says President Biden expressed concern about in his call with Netanyahu earlier this week. And the U.S. is no longer one of the happiest countries in the world.
Sorry, guys. I'm just trying to fix something over here on my laptop.
And Oxford, which reported that the U.S. fell 8 spots, knocking it out of the top 20, putting it behind Canada and new entrants Kuwait and Costa Rica. One of the reasons why the U.S. fell, the younger population was the least happy. Well, you know what they say in Costa Rica, pura vida.
Our Bertha Coombs, thank you very much. Good to see you as always. All right, coming up next, our cause of the day, bullish analyst activity on Netflix, Delta, and Adobe. We're going to see how the committee is playing.
So the markets haven't really moved yet. Oh, shit. Yes, we made it to 230. Clap it up to 230. Yo, I'm excited to do this giveaway. Y'all aren't gonna believe what we got. For real. God bless you guys. God bless you all.
Liquid IV powdered hydration. Now it's sugar-free. Scientifically formulated to deliver 3 times the electrolytes of the leading sports drink. Packed with flavor and 0 artificial sweeteners. Liquid IV. Now it's sugar-free. I'm the richest guy in the world.
I have inherited the best traditions.
I have a great boss. It's me.
I have people I can count on.
I have time to give.
And a million stories to share.
If that's not rich, I don't know what is.
The key to being rich is knowing what counts.
A new year of members-only C-suite experiences is here. Join us for exclusive insights from a preeminent collective of chief executives, industry experts, decision makers, and game changers. Register your interest at councils.cnbc.com to learn more.
All right, welcome back to the halftime report. Let's hit our calls of the day. Netflix getting a big boost from KeyBank, raising its price target to $7.05 from $5.80. Analysts say Netflix's content quality is improving. Why do you own Netflix?
I do. I wish it were a bigger position. I bought it on a day it was dislocated in the market. Didn't buy enough of it. Look, the stock just gets cheaper. I mean, when you go out a year, in 2 years, you look at mid-20 multiple on this, who clearly is the leader, clearly the only profitable streaming company, and the only one that is not harmed by the major debt load and distractions with their other businesses. So they're the only successful player here. And I'm not talking about how many viewers they have. I'm talking about financial. So as True Pioneer would be. So I'm continuing to hold it. I'm not going
to learn more.
All right, welcome back to the halftime report.
I'm still here, guys.
Don't, the day.
You know,
Netflix getting a big boost from
just
KeyBank,
doing a
raising
couple
its price
things
target
real
to
quick.
$7.05 from $5.80. Analysts say Netflix's content quality is improving. Weiss, you own Netflix.
I do. I wish it were a bigger position. I bought it on a day it was dislocated in the market and didn't buy enough of it. Look, the stock just gets cheaper. I mean, when you go out a year and 2 years, you're looking at mid-20 multiple on this, who clearly is a leader, clearly the only profitable streaming company, and the only one that is not harmed by the major debt load and distractions with their other businesses. So they're the only successful player here. And I'm not talking about how many viewers they have, I'm talking about financial. So as a true pioneer would be. So I'm going to continue to hold it. I'm not going to add to it because it's had such a nice move, but yeah, they're the leader.
So Brent, over to you. I mean, Weiss likes the financials. They also seem to be the winner when it comes to these content wars. They keep coming out with shows that people like. They seem to also continue to buy reruns or older shows that people like as well.
This is the difference between innovators that execute and then fast followers, right? So NVIDIA, I mean, Netflix continues to be an innovator in the space. They were so smart during the writer's strike. When you have the other companies, whether it's Disney or Paramount, they're just trying to catch up. And so that's never a good strategy to win. And so I think Steve's, spot on. They will continue to be the winner. They will continue to take market share, and everybody else is just going to try to unsuccessfully ride their coattails.
All right, up next, we got Delta Airlines. UBS initiating coverage with a buy rating and a price target of $59. Joe, you're in this one.
All right, so normally my response to speaking about the airlines, and yes, the Joe T ETF owns both.
All right, here we go. See if we start to run it up to the opening price. We still have a lot of time.
It's based upon momentum. It's really not a study of fundamentals. I think most would agree with me on that assessment. But here's where I'm beginning to look at this a little bit differently, okay? All right, my son is playing in the USA Youth Hockey National Championships in 2 weeks.
Congratulations.
By the way, sponsored by Chipotle. So now I'm out there researching.
I admire how you stuck that in as a proud
dad.
dad.
So now you're out there, you're researching the airlines, you're looking for flights, and you're seeing the unbelievable prices.
Oh shit, did I get filled, guys? I might have got filled on Ford.
And there's no seats on the flights.
Oh shit.
The capacity is absolutely remarkable.
This is why.
The demand is absolutely there.
I got filled on Ford, y'all.
Normally I would just
I'm out of Ford. I got filled.
Ownership towards technical conditions, but no.
I knew it. I
there's
told
clear
you
fundamental
guys.
factors that's benefiting the
I got
airlines
filled
right
20%.
now.
Same story. You had the heyday of the airlines, which was post-COVID. Everything was phenomenal. These things, it's where value money goes to die because it always looks cheap. They never perform. And Joe's right. It's like beer. You're renting it. You're just not going to own it.
By the way, the championships are in Las Vegas. Dinosaurs in the desert.
Delta shares up 2.5% on that upgrade. We want to turn now to an IPO. Astera Labs just started trading. Taking a look at Astera Labs right now. We're seeing it trading currently at $52.95. Looking back, it was priced at $36, and that was above the target range. Again, right now, Astera Labs at $52.82. Seen as a test of just how bad investors want AI. It's a cloud computing AI connectivity play right now. Looking at the shares, a lot of activity right now, but again, right now at 53, basically 70, 85, moving a bit right now. Astera Labs just starts trading. Initially priced at 36. We're seeing a lot of upside move when it comes to that stock. All right, coming up next, Mike Santoli joins us with his midday word. Coming up tomorrow, 1 p.m. Eastern, join the virtual CNBC Equity and Opportunity Forum. I'll be speaking with corporate leaders about how they're navigating DEI efforts. Just scan the QR code to register or visit cnbcevents.com/equity and opportunity. Halftime back right after this.
Or when they sell you what they want. Yeah. The more we understand you, the better we can help you. That's what US Bank is for.
Huge relief.
Yeah.
Diversifying into Bitcoin? Type GBTC into your investment account today, or ask your financial advisor about the world's largest Bitcoin ETF. Grayscale Bitcoin Trust, ticker GBTC. Bitcoin investing begins here.
Sorry, I had to go check to make sure. I just heard something and the wind is blowing a little bit. So I'm out of Ford. I'm going to put that in the chat so that order is filled.
Join the club now. Go to cnbc.com/gym.
Here's why you should switch from Google to DuckDuckGo on all your devices. DuckDuckGo comes with a built-in search engine like Google, but it's private and doesn't spy on your searches. And DuckDuckGo lets you browse like Chrome.
So I just threw that in the chat. Again, I got filled while I was sleeping. Took a little nap before this Fed meeting. Let us go in and give me 1 second because I want to get everything up here and ready. And all right, let's go to the SPY. Let's see what happens here. I wonder if they're gonna like try and run this thing one way or another. This is a crazy Fed day. This is still kind of like showing me like, bro, when was the last time we had a Fed day like this? Usually you like, we would either like sell it off or do something like completely different than this.
Obviously matters what they say if they really want to upset the projected rate path, but the fact that the market really, despite all indications that it was ready to have a little bit of a break and a pause and a pullback, it's only happening in pockets. It's almost best case scenario.
That's so weird. I'm really wondering if like today is going to be
We'll see. I think the key to me is do yields use whatever happens later as an excuse to attempt a decisive break out of this.
And we are back on halftime. Senior markets commentator Mike Santoli joins us with his midday word. Got to imagine the words Fed.
Yeah, can't avoid it. And I think, one of the maybe silver linings is that it hasn't really been a Fed-fixated market this year. Obviously it matters what they say if they really want to upset the projected rate path. But the fact that the market really, despite all indications that it was ready to have a little bit of a break and a pause and a pullback, it's only happening in pockets. It's almost best case scenario. The momentum parts of the market have been kind of cooling off. Tech's losing momentum. Other stuff's hanging in there. So
I'm going to have to run out and go grab the trash can real quick.
Do yields use whatever happens later as an excuse to attempt a decisive break out of this range higher? If that's the case, maybe that's a gut check. If not, it's game on.
Let me ask you the question I'm sure you've been answering all day long. S&P hits a record yesterday.
Yeah.
The market's expecting at least 3 cuts this year. If we get an indication that it's not 3, that it's 2, that it's 1, what does that do for this rally?
I think we can make our peace with it because we've gone from 6 priced in to 3 priced in now, and the market's up 8%. The S&P is up 8%. The equal weight is up 4.5% on a year-to-date basis. Look, under the right circumstances, it's slow easing cycles are actually better than rapid ones. Rapid ones means it's an emergency. Slow ones means it's trimming around the edges, and that brings you back to your 95 scenario where you had only 2 rate cuts separated by like 7 months. That's the ideal.
So it kind of echoes what Wells Fargo Chris Harvey saying today. As long as the cuts are coming, that's kind of all that matters.
That's all it is. It's the carrot out in front of the horse.
All right, Mike, thank you very much for the midday word. All right, coming up, the earnings set up on 3 key names in Joe's portfolio, how you should be trading Accenture, Darden, and Lululemon. We'll be right back. Much more halftime after this.
For me, a change maker is someone who forges their own path and makes it wide enough that others can come along with them. One thing I wish I'd known when I was starting my career is that there is a difference between something that is impossible and something that is just hard. And the reason why that is important is people can do hard things. You have to ask yourself, okay, is this just hard or is it impossible? Because impossible is impossible to do, but something that's hard may be a self-imposed constraint, and people can do hard things.
What if you could put aside your doubts and look to retirement with excitement? At Bright House Financial, we specialize in annuities and life insurance that help protect what you've earned and ensure it lasts. Bright House Financial, build for what's ahead.
Personalized financial advice from Ameriprise can do more than help you reach your goals.
I can make this work.
It can help you reach them with confidence. No wonder more than 9 out of 10 of our clients are likely to recommend us. Ameriprise Financial, advice worth talking about.
To build the electric vehicle of the future, you need partners, mining partners, technology partners, education, supply chain, energy. What if one partner could do it all? That partner is Ontario, Canada, with all the critical minerals to make electric
65,000 STEM graduates per year. One of North America's largest IT clusters, a fully integrated supply chain, all powered by one of the cleanest grids in North America. Innovation partner.
All right, high, low.
You founded your kayak company because
Opening
you love
price
the ocean, not
is
spreadsheets. You need to hire. I need Indeed. Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
515.75.
Work with the best research and trading tools designed to help them outperform the markets. Meet them at Interactive Brokers Investors Marketplace for advisors. Advisors at Interactive Brokers keep all they earn on our low-cost platform with no ticket fees or custody charges, low margin rates, and high interest earned on idle cash. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
Stevens jumps up the court. He stops for the championship.
Nice shot, Marcus.
Sweet. Time simulation off.
Tisk, tisk, not so fast.
What? Why?
Did you forget, Marcus?
All right, let's go look for the summary economic projections from last month.
Scary. Not investing in it is. 100 innovative companies, one ETF.
At Invesco.com.
All right, welcome back to Halftime Report. Taking a look at Astera Labs. Its IPO begins trading today. Right now, you can see trading at about $53.50 right now, up over 17% right now. Astera Labs, a company that does intelligent connectivity for cloud and AI. Just how bad investors, or I should say, excuse me, I'm looking at the wrong one. Not the net change, the percent change. Up about 49, 50% right now. I misspoke earlier. So again, seen as a test of just how bad investors want to get in on this AI trade. Ticker ALB. Astera Labs up just about 50% right now on IPO day. All right, turn our attention now to the setup on three key names in Joe's portfolio, all reporting in the next 24 hours or so. Let's just go on through them. Why don't we start with Accenture, Joe? Shares down about 0.25% right now. What's your outlook on Accenture?
Well, first of all, this company, I think, would surprise a lot of people in terms of its size. This is a 250 billion plus market cap company. We've had ownership of it in the strategy since November of 2020. The high price point was in December of 2021 at 417. This is going to be interesting because you're going to get a glimpse into commercial IT spending, which has exhibited a degree of friction. So we're going to need to see bookings increase. Growth is going to decelerate for this company. So the analyst expectations have been lowered recently on this, somewhat muted expectations going into this earning. This could be a critical earnings report because I really believe this could potentially break the positive momentum that the stock has, or it just keeps it in place and takes out the 2021 high. This is a critical one.
Yeah, also important to note, Guggenheim initiated Accenture as a buy yesterday, saying that the company's well positioned for shareholder returns. Bren, any thoughts on Accenture?
Yeah, I mean, this is one of those stocks that you're like the Costco. Like, why don't I own this stock? It's a sleeper stock, great company that we really don't talk about enough. Actually, for the March 21st, earnings estimates for 11.5% growth. The stock of the last 5 years is up 120%, handily outperforming the S&P. And so I think they have a very captive audience. They're growing. So I think this is one of those names. If it is weak, to Joe's point, this could be a good entry point for people who haven't had the opportunity to buy it.
All right, another one reporting Darden Restaurants, probably best known for Ruth Chris's Steakhouse, number of different brands. They're kind of a fast casual to almost luxury dining company. What's your outlook on this?
Expectations on this one are high. They really have to come in with a very strong quarter because I think a lot of it is already priced in. We know that the consumer is resilient. We know that their business is doing well, but they need to exceed the expectations for continued price appreciation.
Yeah, a number of their brands, Longhorn, Yard House, like I said, Ruth Chris,
Olive
also
Garden.
Olive Garden. Olive Garden guy?
I'm not even an olive guy. I can't stand olives, so I'm not going to place
I
like
gave you
Rosa.
2 Italian restaurants last week. You weren't here. Premola and Bamonte's in
Really?
Brooklyn.
All right,
Those
got to
are
write that
places.
down.
Okay.
Last but not least, Lululemon. Thursday after the bell, you own this one as well. What's your take? We've seen some of their rivals, not quite the same business, but like a Nike under a bit of pressure. Foot Locker, totally different business, just different brand of consumer under some pressure as well.
Yeah, this is a great example of, what do you want to look at when you're measuring performance. So far year to date, Lululemon versus the market, not so good. Lululemon over the last year up 59%, S&P's up 30%. So this is going to be about a gross margin story, direct-to-consumer story. You want to see the direct-to-consumer figure coming around 15%. That gross margin's got to be in the high 50s, 58, 59%.
All right, there we go. You want to stay with us. We got final trades coming up on halftime, and I have to mention, Lululemon shares down about 0.5%. Much more to talk about. Stay with us.
Prudential.com.
All right, we're back on halftime. Let's get a quick check on Broadcom right now. As we mentioned earlier, the investor meeting is underway right now. You can see shares are up almost 2%. They just announced a third AI customer and will begin shipping them products later this year. Didn't name the customer, but said they have a third AI customer. Again, shares up almost 2%. All right, now time for final trades. Bryn, we're going to start things off with you.
COWS, COWZ. If you want one screen free cash flow yield that consistently does well, this does it for you. It rebalances quarterly. It's got a current free cash flow yield of 7.9. It's up 9% year to date. It's a great long-term strategy.
All right, Weiss.
You stole my final trade.
Archer Daniels, Joe likes it for momentum. I like it because they're close to resolving the accounting scandal, and it's a way to play a commodity.
Wait, we do have consternation?
So Steve obviously cheated and looked at my final trade. FMC Corp, it's playing a bottom in the agriculture space.
All right, that's going to do it for us here on Halftime Report. The exchange starts right now. Thanks for watching.
Frank, thank you very much. Welcome, everybody, to The Exchange. I'm Tyler Matheson, and here's what's ahead on a busy Wednesday. Less than 60 minutes to go to the Fed's decision on interest rates. No move expected on that front, but the markets could move on what Chair Powell says. And our panelists are looking for some very specific clues from him today, and we will tell you what they are. Plus, Reddit, the first major mainstream company set to IPO this year in the tech area, and one of our guests says he wishes it wasn't. He's here to explain what he means by that and what it means for the overall state of the IPO market. And shares of Chipotle topping $3,000 for the first time ever on plans for a historic stock split. Can the company keep cooking up gains? That's all ahead, but we begin with today's markets and Dom Chu with some numbers. Hey, Dom.
They are numbers and they are in the green, but they are very modestly so. You can't get much more, Ty, in a holding pattern ahead of that Fed rate decision than we're at right now. So let me just take you through the percentage gains. It's about pretty much flat, flat, and flat for the Dow, the S&P, and the NASDAQ. The Dow Industrials currently at 39,158, up 50 points. That's the outperformer, up 0.1%. And we're pretty much spot on, up 2 points in the S&P to 5181. And by the way, just for context, again, very tight trading range. We were only up 6 points at the high of the session for the S&P and down 6 points at the low. So very much a tight trading range. The NASDAQ composite, 16,175, up in 8 modest points there. Again, pretty much flat on the session overall. We are seeing some movement, though, in some catalyst-driven, news-driven stocks, specifically with regard to the computer chip business. Intel, after the news of that big kind of chip grant, the $8.5 billion in loans and totaling $11 billion up to, Intel shares were up more solidly today. They're now down 2/3 of 1%. NVIDIA shares are down about 1% as well after its big developer conference and unveil of its next-generation AI chip. Advanced Micro Devices down 3%. Micron reports earnings after today's closing bell. Keep an eye on that. And the semiconductor ETF ticker SMH just about down 0.1%. And then Tyler mentioned it, from chips to chips and guac. Chipotle shares did at one point top 3,000. They're at $2,903 right now, still up about nearly 4%, but up 8% at the high so far. Just to give you an idea, the 50-for-1 stock split obviously puts some of these shares closer to like that $57 to $60 range when they do kind of split adjust at that point. But Tyler, this is a company that's now worth roughly almost $80 billion. And just to give you an idea, it's not necessarily AI returns, but an up 80% over the year means it's now bigger than Target, the big box chain. I'll send things back over to you.
Holy guacamole. Dom, thank you very much. Let's start in Washington. Steve Leisman with what we should expect from the Fed chair and the FOMC today. Hi, Steve.
Hey, Tyler. Yeah, I think it's possible the most important answer to the most important question of this meeting, when might the Fed start cutting rates, could come right at 2 p.m. in the statement, not necessarily from the press conference, from the statement, if the Fed repeats a critical line from the last announcement. In January, they said, quote, the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. Well, they repeat that. It's going to be like going back in time, resetting the clock once again, telling investors they still don't have that confidence to cut rates, need additional data, maybe months of data showing declining inflation before they're ready to firmly tell telegraph any rate cuts. Along with the statement, new projections could provide clues to the policy outlook as well. They projected in December GDP at 1.4%, running a little hotter in the first quarter, 2%. Unemployment, they projected at 4.1. Well, they're creeping up to it towards 3.9%. Core PCE, you can see there 2.9 in January, maybe 2.8, 2.9 in February. So running a little hotter than their year-end forecast. And there's the Fed funds rate with that projection for a 4.6%. There is some concern that the individual Fed members, once they get done projecting it, could take off one of those rate cuts from the projection there and raise their outlook for the Federal Reserve funds rate for the end of the year. It would take only 2 members to do that. I'll leave it there, Tyler, throw it back to you. We'll look at the projections and also looking for some information perhaps on the balance sheet and what's expected to be the start of a discussion about ending that balance sheet reduction. Tyler?
I would love it if you would give us a little bit of a tutorial about a phrase that I'm sure is going to come up multiple times over the next hour and a half, and that is the so-called dot plot. What is the dot plot? Why is everybody paying attention to it? How often do they plot the dots? And just walk me through it.
Okay, so the dot plots are the individual forecasts of Federal Reserve members for where they believe the federal funds rate should be at the end of this year, next year, 2026, and the long run. They take all those dots and they create a median out of it, and it's what is the general or average projection of the Federal Reserve for the funds rate that they set. The problem with the dot plot is it is confused for policy. You have 19 Fed officials, they give you the dot, it comes up with an average, and that average is 4.6, and people confuse that for being the policy of the Federal Reserve to reduce it to 4.6. It is not the policy. It is simply a derived average of 19 different Fed officials. You can kind of guess policy from there. Yeah, they look to be cutting, and if there are fewer dots at a lower range, it might mean that they're going to be projecting fewer cuts. But it doesn't mean that's the policy of the Fed. It's just their outlook, all things being equal, Tyler.
This is their forecast, in other words, a forecast of what's going on.
And you know what they say about forecasts?
Tell me.
Well, I was just going to use the joke about what they say about assume, right?
Yeah.
Put it this way, they're almost always wrong.
Almost always wrong. Steve, thanks very much. We'll see you a lot during the next hour here. Unanimity is the name of the game today. Next guests are unanimous in their view that the first cut in interest rates will not come until the summer, and that Jay Powell will want the committee to be as close as unanimous as possible before that cut is actually delivered. Let's bring in Julia Coronado, joins us on the phone, Macro Policy Perspectives President and Founder, Subhadra Rajappa, Head of U.S. Rate Strategy at Societe Generale, and David Balin, Citi Global Wealth, CIO. Welcome to all of you. Subhadra, let me begin with you and just get your sort of baseline view of what's going to happen today. And then what would be your outlier view? In other words, if the baseline doesn't come through, what would your next alternative be?
Yeah, so like Steve was mentioning, I think that the Fed might upgrade its growth forecast as well as its maybe a tick higher on inflation for this year. But really the focus is going to be very much on the dot plot. So we're expecting that the Fed retains 3 cuts for this year. Our call is that the Fed will deliver the first cut at the June meeting and then stick to a 1 cut per quarter schedule for the remainder of the year. But really the surprise for us will come if they move the dot for 2024 to suggest only 2 cuts for this year. And there's also a chance that both 2025 as well as the long run dot gets pushed higher. So that to us would suggest that the Fed is looking at a much, perhaps a higher trajectory, a higher terminal Fed funds rate. And that, I think, would be a clear hawkish signal that the Fed is sending to the markets. And that, in turn, I think, would push Treasury yields higher.
Let me turn that same question to you, David, and ask you what your baseline scenario is. And do you agree with Subhadra that the possibility is a more hawkish tilt?
Well, I think the only place where I would take issue with that view would be, I think, first of all, the Fed may start, one meeting later Once they start, I think it's more likely than not that they're going to have a series of cuts. Right now, everyone's expecting 3. That's sort of the average, right, of what people's views are. Once they begin to cut, having a regular systematic approach, a sort of baseline of 25 basis point cuts this year and beginning of next year, I think is more likely than not as a baseline because they want to normalize their policy. The Fed tends to be an activist group. They tend to look at all the data from time to time. But once they get going, right, they want to be in a direction, right, where they actually begin, to normalize the curve and to normalize policy associated with buying back bonds, right, ending a portion of QT. Then the outlier scenario for us is the other way, which is the economy actually weakens more than we expect in the area of employment. And with that, I think we would see the Fed move a little more aggressively in terms of the amount that they might decrease rates at one of those subsequent meetings. So we tend to lean that way because ultimately the Fed's higher rates and QT, is ultimately going to be a brake on the economy. It's been wildly resilient so far. But when that break happens, the question is, does it happen gently or do we see an actual more sustained decline in employment?
All right, Julia, let me turn to you and get your sort of baseline thought here. And if the Fed turns out to be a little bit more hawkish than we anticipate, what do you expect the economic response would be in terms of inflation and growth and unemployment? And what do you think the market's response would be?
Right. Yeah, that's a great question. So I think we all share a similar baseline that they'll keep it largely unchanged, but the risk is that they'll take a cut out. One of the conversations that's happening in markets and at the central bank is whether potential growth might be a little bit higher this cycle because of immigration, because of better productivity. That might signal a higher, longer run rate, and or it might lead them to take a cut out of not this year, but next year. So I think there's maybe an intent to balance the risks here by keeping the current baseline unchanged. Nobody thinks the neutral rate is 5.5%. Inflation's coming down. They're going to start the cutting cycle, but they're going to proceed carefully and cautiously, again, outside a deterioration in employment. They can proceed to be careful and thoughtful, as Chair Powell indicated, but they don't necessarily want to delay forever because the longer you stay at this rate, the greater the risks are for that sudden turn that David just described.
Subhadra, how and why did we go from last year's forecast where many people thought there may be 6 rate cuts in 2024 into 2025, now down to 3 or maybe 2? How and why did we get from that to this?
So, I mean, full disclosure, we were in the same camp. We were thinking that the Fed could potentially cut rates by 150 basis points this year. We changed our call because the economy has been extraordinarily strong. I mean, the third and fourth quarter of last year, growth was very strong, and that momentum seems to be carrying into the first quarter. Jobs market, the labor market's extraordinarily tight, and inflation is high and sticky. So I think that that's really what the market is recalibrating to, is a much stronger trajectory for growth. We've taken out our call for a recession for this year. So in that sort of context, it makes sense that the Fed cuts rates a few times, maybe 3. They might need to cut rates even to orchestrate a soft landing in our view. So, but then 3 cuts might be sufficient for the Fed to provide some level of stimulus, but at the same time, make sure that there's a soft landing.
So, David, should we be happy if the Fed indicates that it may cut only 2 times this year or maybe 3 times this year? Should we be happy about that, or should we be, because it would suggest that the economy is growing nicely and unemployment is not rising all that much, if at all, or should we be worried because it would be a suggestion that inflation is stickier and more intransigent than we would like?
So let's deal with the inflation question first. I think Citi's view, our view is that we are really in a situation where our highest confidence is that inflation is definitely going to be down at the 2.5% level, at the end of this year, which is very much the Fed's target. There may be some noise along the way, but January and February were a little hotter in point of fact because price increases took place at that time. And we really see the vast majority of the inflation indicators heading down, with the exception potentially We just increased our earnings per share projections from 5% this year to 7.5%, which is a large change for the average stock for the S&P. And with that, we're building in the idea that the markets can go higher based on those earnings. But the Fed, at the end of the day, has to come up with a plan to normalize that rate curve, right? To actually see it, right, have an upward slope. And the longer it waits to do that, it actually adds risk to the market, and it takes away that possibility of resilience. And I think that Jerome Powell sort of said that at the last meeting when he said that the idea of normalizing, right, he doesn't have to wait for every signal in terms of inflation to be in place in order to begin lowering rates, because he knows that leaving them at this level with this level of QT actually is itself a danger to the economy.
That's very interesting. Julia, let me conclude with you to pick up on what David just sort of referenced there, and that is the idea that that the Fed might cut rates before. It doesn't have to wait for perfection. It might cut rates before inflation gets to 2%, not waiting until it does.
Yes, absolutely. The Fed still believes in long and variable lags in monetary policy. And Chair Powell has said point blank, if we wait till we get all the way to 2%, we will likely have waited too long. Again, nobody thinks 5.5% is the neutral rate. So this is not the right place to be once you've gained confidence that inflation is moving in the right direction. Some judicious cuts are in order. And likely, when Chair Powell spoke before Congress in recent weeks, he said they need just a little bit more data showing that inflation is moderating. January and February probably didn't meet that bar. In fact, we had some firmness in January that was beyond expectations, but we do expect that March and April are going to deliver that downward trend on inflation. It's going to reassure the Fed, and they'll be good to go with the June cut. So I think Chair Powell is going to very much want to keep that on the table, very data dependent. But I think moving to a two-cut baseline would be probably a bridge too far.
All right, Julia Subadra, David Balan, thank you very much. Appreciate your time today. See you again soon. All righty, let's turn to housing and another sign of just how sensitive buyers are to any movement in interest rates right now. Diana Olick has the very latest. Hi, Di.
Hey, Ty. Yeah, it's all in the weekly mortgage demand numbers. You see it there, and they're getting more and more sensitive to the small rate moves around bigger numbers like 7%. So mortgage rates rose last week for the first time in 3 weeks, and as a result, demand came down for the first time since February. The average rate on the 30-year fixed rose to 6.97% from 6.84%. That was last week's average from the Mortgage Bankers Association. But if you take a look at the daily rate, and that's from Mortgage News Daily, you see that by Thursday, the rate had crossed back over 7%, and it rose even higher to start this week. So applications to refinance a home loan, which are most sensitive to weekly rate changes, fell 3% compared with the previous week, and were also 3% lower than a year ago. Applications for a mortgage to buy a home fell 1% for the week and were 14% lower than the same week a year ago. And interesting on those purchase applications, with housing supply still so low and prices still so high, the average loan size for purchase applications increased to the highest level since May of 2022. Tyler.
All right, Diana, thank you very much. Diana Olick. Coming up, Reddit expected to price its long-awaited IPO this afternoon. We will look at what Wall Street will be watching for and whether Reddit's path to profitability is the biggest wrinkle for investors. Plus, Box CEO exclusively on the heels of the company's Investor Day just made a big acquisition in the, yes, artificial intelligence space, and we'll ask him about that. AI will create more jobs instead of replacing them. 43 minutes until the Fed decision, folks, on interest rates. The Exchange is back after this.
This is The Exchange on CNBC.
Welcome back to the Exchange, everybody. Astera Labs surging in its public debut today, up 69%. The chip firm priced its IPO at $36 a share and opened at $52, giving the company a $9 billion valuation in total. Biggest IPO since ARM went public back in October. At the same time, we are waiting another big IPO expected to price after the bell today, and that would be Reddit. Leslie Picker has all the details. Hi, Leslie.
Hey, Tyler. Yeah, that performance should bode well for Reddit. Just given
Wow, I
it
can't believe we
shows that
just
there's
sold off that
momentum
much.
in the IPO market. Reddit, though,
That quick.
very anticipated IPO. It's been 827 days since Reddit announced it had
I'm
confidentially
making some
submitted its paperwork
coffee.
to go public.
So
It
just
appears, though, that long-awaited day is
give me
nearly
1
here.
second.
Reddit is expected to price its IPO after the close today with a trading debut tomorrow. It sounds like the discussions are leaning toward pricing at the high end of the range it had been marketing, about $34 per share. But there are still 4 hours to go before that final decision call where the bankers, the advisors, the company all gets together and decides a final price for this IPO. Reddit has been marketing a price point between $31 and $34 a share, which implies a fully diluted valuation as high as $6.4 billion. That's a 36% decline from the $10 billion valuation Reddit received in a 2021 private funding round. In the prospectus, Reddit calls itself a, quote, global digital city where 73.1 million daily active users collaborate through different communities with common interests. The headlines, just while the company was on its roadshow over the last week and a half or so, encompassed a letter from Nokia alleging infringement of some of its patents, an inquiry by the FTC into Reddit's agreements to share content with third parties to train AI models. And in talking with investors, some of them were surprised that Reddit,
If this
despite
thing
being a
goes-
two-decade-old company,
Hold
was
on.
not yet profitable, and that the pursuit of profitability had upset users last
I
year,
think I fixed
leading
the
to
hotkeys,
a
though.
short blackout during the summer of 2023. But others see, the markets are doing well. The S&P near record highs, a company that has decent top-line growth, very decent, of 21%, and a scarcity of new issuance as a reason to buy in.
why
And
is
of course,
AMD
there are certain
trending?
tailwinds we see from Astera Labs as well, given that performance today. So we'll see what happens this evening and tomorrow with trading. But so far, we've seen a pretty decent test in the IPO market today. We'll see if it kind of carries over for Reddit.
For Reddit, yes, that would be, if it does well, we will, it certainly would augur well for the IPO market generally. Leslie, thank you. Our next guest predicted Reddit to lead the mainstream wave of IPOs back in January, but he says he wishes some other company was leading the charge. Let's find out why from Duncan Davidson, partner at Bullpen Capital. Duncan, welcome. Good to have you with us. Why would you prefer to see another somebody other than Reddit sort of at the point of the spear here?
It's because of all the skepticism of Reddit. I hope it's a successful offering, but the most ironic part of this is one of the biggest Reddit communities, Wall Street Bets, has sentiment which is highly negative of the IPO. They think it's going to be a pump and dump situation, not a sustainable situation. I hope they're wrong.
They say short it, right?
Yes, the sentiment's highly negative.
Yeah.
It's kind of ironic, I think. But if it turns out it captures their attention, then it turns into what people call stonk, a meme stock, and it could run up like crazy. But I do not expect that to happen, nor do I expect to pop. I think it's going to price high, as you said, but I think it's going to be a little bit of a volatile offering given the range of sentiment on it.
Does the Astera Labs IPO tell you that, hey, this is a good time to go public? And if Reddit has a good debut, does that say, hey, IPOs may start coming to market at a greater pace?
Well, I would like to say that, but I'm not sure. Astera is trying to ride the AI wave. It's not really an AI stock, but it's certainly getting bought by data centers that have a huge demand from AI. Reddit's arguing it's an AI company, but it's really not, because it's selling its data to, in this case, Google, maybe later OpenAI, ChatGPT, but it's not really the core of what it does. It's not AI. So you're seeing the market really is hungry for AI. It's not quite as clear it's that hungry for social.
So let's talk about social there for a minute. Here, this is a company that has something like 800 million in annual revenues. I think I'm right on that. I'm not sure. But how do they not make money? This is a company that has something like 800 million.
Well, there are they haven't really tried. They're now trying very hard. They're going to be $1 billion of revenue next year if you believe their plan, $1.2 billion after that. This offering on the surface looks amazing. This is the #3 social site with attention in the world. Meta or Facebook and Google. It should be doing much better. Professor G, who a lot of people are reading, I find very entertaining and very insightful, thinks it's got 100x upside. Well, I don't think
I should have did that better.
But this thing does have upside. If they actually go toward profitability,
Oh,
and keep growing,
snap.
this thing could at least double or triple.
My boy Wiz, what's up, bro?
I just don't think that'll happen quickly. There's a huge overhang in this company of private investors.
I didn't know you were here. I was out making coffee. I was getting the notes from last week.
If it doesn't become
That started to get a little crazy actually with the guys talking. With CNBC talking.
6-month lockup's over with. Now to look at buying holding it.
I was making some coffee, but I was bringing up
them to offer the stock to their so-called
last.
I think it is. I mean, it does create some volatility risk in terms of
retail
investor. But their community is their strength, and they need to feed and support the community. The community is actually very skeptical of the advertising model.
So I was trying to bring up last month's or last year's or the last FOMC meeting, the notes, the dot plot and whatnot. So we could see what's changed. Not that it really matters, but you know.
All right, let's talk about
because it's always wrong. It's not like this ever like pans out.
$3,000 a share. That's a lot.
This is just where they hope to be at, and I just wanted to see if there was like, well, we thought we would be cutting now. We're not. Like it's just higher for longer, and the market's going to start worrying about a recession. And just wanted to see what they had from last meeting. I'm pretty sure they had priced in 3 cuts. But having it up, you can like, you know, what you can do, what I like to do is be able to go back and identify what's changed, and it'll give me kind of like some conviction. You know, okay, this is why the market's doing this. You know, stuff like that. But again, my bad. I did not see that you messaged me. I didn't have the chat up, and I was out getting coffee. Let's do this.
So talk more specifically about how your clients are actually leveraging AI.
We're actually working with 2 clients right now. They're looking to increase their assets under management by 30 to 40%. In doing so in the best way, they certainly can't increase their workforce by the same amount. So these firms can leverage AI to do things such as answer questions from their limited partners in a more efficient way, leveraging technology in their existing workforce.
Tim, thanks so much for sharing your expertise.
Thank you.
Oh, come on. Where's the remote? It's just loud. I want to hurry up. Alright, let's get it done. Let's do this. Let's do this. Let's do this. Let's do this. Alright, I wonder what Neo's doing.
Welcome back to The Exchange. I'm Bertha Coombs with your CNBC News update. The U.S. is warning that foreign hackers are targeting water and sewage systems across the country. In a letter to state governors, the administration warned that the attacks were perpetrated by Chinese and Iranian hackers in particular, citing a case of a Dow facility in Pennsylvania. Cybersecurity professionals have singled out water and sewage plants as targets because of the critical service they provide and their lack of adequate defenses. The Environmental Protection Agency issued new rules to curb carbon emissions from vehicles today in a push toward EVs and hybrids. The new rule says as long as 56% of new vehicles sold are electric by 2032, the auto industry could meet its carbon emissions. Welcome back to The Exchange. I'm Bertha Coombs with your CNBC News update. The U.S. is warning that foreign hackers are targeting water and sewage systems across the country. In a letter to state governors, the administration warned that the attacks were perpetrated by Chinese and Iranian hackers in particular, citing a case of a downed facility in Pennsylvania. Cybersecurity professionals have singled out water and sewage plants as targets because of the critical service they provide and their lack of adequate.
So what do we have here? Tesla, Nvidia, AMD,
Agency issued new rules
F.
carbon emissions from vehicles
We had a
today
lot going on.
in a push toward EVs.
A lot
and
going on
hybrids.
today.
The new
What
rule
else did we
says
have?
As long as 56% of new vehicles sold are electric by 2032,
Intel.
the auto industry could meet its
Shit.
carbon emission limits. The EPA says the
Intel.
rule will avoid over 7 billion tons of emissions
Intel BA.
over the next 3 decades. And the Mega Millions jackpot is
Bro.
close to $1 billion ahead of Friday night's drawing. The pot has been building for 29 straight drawings.
All right, so
now.
we have
December's last
Apple,
ticket.
Tesla,
Jackpot,
Nvidia,
$977
MSFT,
million.
MSTR,
They're gonna have to
SMCI,
rewrite that old song, Tyler. You know, if I had $1 billion.
Yeah,
instead of
exactly.
just a million.
Coinbase.
I still got a chance here. I'm going to go out and buy one.
Go for it.
Bertha, thank you. Coming up, Box CEO Aaron Levy will join us on the heels of the company's Investor Day. In the past, he's opposed the overregulation of artificial intelligence. We'll ask him if he still feels the same way. That's next.
SoFi, PLTR, we have Palantir.
Fisher Retire Right Kit. Call now. 1-800-305-2930.
Should you retire the way you choose? If your portfolio is 500,000 or more, call us today.
SMCI. The wind is going. I can hear it. TC. Oh, come on.
U.S. municipal bonds, providing an added layer of security to improve any portfolio with guaranteed income that helps investors reach their goals. Be part of building America. Build a better portfolio. Invest in BAM insured bonds.
Fans, you always turn up. You make the game what it is. So we think you deserve a better betting experience. Every time you bet at Fanatics Sportsbook, win or lose,
TradingView.
5% of your wager back in fan cash. Spend it on jerseys, bonus bets, and more. And for a limited time, bet and get up to $1,000 in bonus bets over 10 days. Welcome to the most rewarding sportsbook.
Here's why you should switch from
That's so sick. We know who they're talking about too.
Go comes with a built-in search engine like Google, but it's private and doesn't spy on your searches. And DuckDuckGo lets you browse like Chrome, but it blocks cookies and creepy ads that follow you around from Google and other companies. And there's no catch.
Yo, what? I feel like I'm missing tickers.
They don't follow you around. Join the millions of people taking back their privacy by
Tesla, Microsoft, Nvidia.
I think of ambition as being the desire to do something greater than oneself, pushing above one's own personal limits to achieve something that's for the greater good. Isn't that what makes us succeed?
It always does. It always says good, and I don't like that. Goog, and then AMZN, I guess I could do. NFLX. I can still do more? Wow. What am I forgetting? Palantir. Nope, I already have it. Rivian. Rivian. Oh shit. Blick. Black.
Welcome back to the exchange, everybody. Shares of Box up more than 10% this year, outperforming the S&P
X.
as the software and data
X.
content management company shifts to
All right.
AI. Box counts 67% of the Fortune 500 as among
Let's
its
see.
customers, and is working on
December.
implementing an enterprise-grade AI into its offerings, enabling businesses to use it safely and securely. Joining us now is Aaron Levy, CEO and co-founder of Box. Aaron, good to have you back on CNBC. We appreciate your time.
Awesome. Thanks for having me.
Great to be here. How is AI going to change your business, which I think is broadly defined as the content management business? What is it going to allow you to do? Is it effectively
All right, so here's the release.
2.0 for Box?
All right, here's the release that when it comes out, hey, look, these are the changes that they're Fed funds rate they had, or September projections 5.1 Fed funds rate. This would be, I think, for December up here, Fed funds rate, September projection, and then obviously a I guess a 20. I don't know. Hold on.
We can help you automate more and more.
Yeah, 2024. There should be the year end, real change in GDP.
So for the first time ever, AI is able to actually go through this content and deeply
Fed funds rate. This should be year end.
underlying
September projection in a year. Maybe they're only doing it till September, I guess. So I'm just going to take it as that. We're going to watch these two numbers here and the rest of these to see where we are. Yo, so look, they're actually giving us clues that they're taking it down to 3, guys. The longer run, they want to be back down to 2.5, bro. Get your popcorn ready. Holy Nikes.
I guess what I'm hearing you say, and I am
Oh,
a dunce
snap.
when it comes to AI, but
Yo, where'd my
your
one person
business,
go,
which
bro?
was in the business of managing,
Huh?
storing data. Now,
I know it's from Twitter.
With AI, it will
I know it's
allow
from Twitter.
the user, the company, to
Um,
use that data, manipulate that data, access the
So
data.
that's what I'm going to do. I'm going to be watching all this stuff here as it comes out, kind of see how the market reacts, see if there's some quick changes. Now let's go to the federal. Let's go get the let's go get it up.
And your sales team needs access to answers quickly about what products are selling or competitors in their industry. Today, within any kind of knowledge-based environment or content management environment, the sales rep or the engineer on that account would have to go and find exactly.
You really tap into the underlying knowledge inside of your organization.
And I can go in and find out the precise paragraph in a contract, for example, that I need to help me understand. This is where the acquisition of Cruise comes in, right? An acquisition you did about a month or so ago. It helps you vault into this area.
January 31st. What's today? March 19th. News and events. It's the news and events. It's the news and events. I need some news and I need an event. I have to go get a cup of coffee real quick. This comes out at 2 o'clock and then 2:30 or 2:30 then to 3. 2 o'clock. All right, let me go knock out the coffee real quick.
Maintaining the Treasury Department's transaction.
Yeah. We know what you're doing behind the scenes. You just trying to keep the poor man poorer. No, I'm just playing. We're not going to do a whole bunch of conspiracy theories here. All right. Transcripts. Press releases. What's up, bro? How you been, buddy? How was your day today? Did you get any of that what the hell was it? There was a few small caps this morning. Did you grab any of those? There was a couple. Let's see if I still have it. I was late on one of them, but there was one this morning I almost took. I think it started with a T. I want to look at Moderna. See if she ended up pulling back. Nah, she's not doing nothing. I tell you what, though, guys. If Moderna does pop itself back up to like, this level here at like 103.70 and it can't get back above it, I think I might go in for the kill. If we can get that thing back up to like yesterday's close or something.
More growth typically means more people. Aaron Levy, thank you very much. We appreciate it. All righty, coming up, Intel receiving more than $8 billion in grants alone, courtesy of the CHIPS Act. We'll hear from Intel CEO Pat Gelsinger next.
Yo, there's no way. Yo, are we really gonna go visit right now? 14. The market's telling you early. What's she feeling like? She's being a little freak early. Oh, you took off? That's cool, bro. I get it. I get it. Bro. She's getting freaky early. She's like, or coming in with an attitude, I should say. She's coming in with an attitude early. Early. Last time we had it moved this late, Powell tried to take it back. Alright, I'm gonna go grab my coffee real quick. Let me just throw some water in there, throw a little coffee. The Fed explained. Here, let me show you, let me tell you about our little monopoly. You see this thin air here? You just mix this thin air. You throw a little bit of this, you throw a little bit of that, you add in a little bit of air, and then here you go. $7 trillion bucks, baby. Calendar. I hope it's under this. So it should pop up March 19th. Today's the 20th. Alright, so give me just a couple minutes and I'll be right back. Not like a couple minutes, but like, 2-3 minutes. A couple. So this is just our high and our low. So once we understand, like, hey, we've left this level here, I might start. I'm really thinking, guys, like, I might front run a move. Especially if we get ourselves back down in this area. Because we should be up. We should, by the time this comes out, we should be close to around where we opened. Unless the market's already decided what we're doing. And it wouldn't surprise me because the Qs are already really weak. So, like, it's just like the Qs have not made back any of that upside, really, in my opinion. Look at that. It's just continued to put in lower highs, lower highs, lower highs. The Dow and the SPY have been, like, hanging on nicely with highs up at that resistance. The Qs are still, they just they just got injured. They're hurting. They fell behind, if you know what I mean. So, I think we're seeing here that, like, something's going on here. Something's going on here. We may be coming up to our little bit of a pullback is what I'm getting at. Alright. So let me go grab my coffee and I'll be right back. What do you guys want? SPY or the Qs? Or both? At the same damn time. Well, you know what? The SPY is actually pulling back and the Qs aren't. That is funny.
We have taken our investors on a journey. We said very clearly this is 5 years to turn the company around, 3 years.
Alright, let's do this. I gotta go get this coffee before this Fed meeting. Dude, I don't know why it's been lagging all day. It's been, like, laggy. I'll be right back in 2 minutes. Let's go, guys. Get your head on the swivel. Let's go. We already got a couple green trades.
Intel is in line to receive as much as $8.5 billion in grants on top of billions more available in loans from the CHIPS Act. But shares are down 30% since CEO Pat Gelsinger took the helm 3 years ago. And here's what he told John Ford about Intel's turnaround.
We have taken our investors on a journey. We said very clearly this is 5 years to turn the company around, 3 years into that journey. The end of the tunnel. We would hope to be manufacturing the most advanced AI chips for all of them, for Intel's products. And NVIDIA and Apple and we want all of those chips to be manufactured in advantage of the R&D that's done here unique.
And you can watch more of John Fort's interview with Pat Gelsinger on closing at 4 p.m. Still ahead, it's one of the biggest stock splits in history. Chipotle shares $1,000 a piece for the first time on News the Board. A 50-to-1 timing and what history reveals about returns. Next.
All my income and spending, and even built me a personalized budget, so it's easier to save more.
This is amazing.
I know. It is. Yeah!
Do more with your money. Hi. Save 50% today at Quicken.com. That's a lot of money. Liquid IV powdered hydration. Now it's sugar-free. Scientifically formulated to deliver 3 times the electrolytes of the leading sports drink. Packed with flavor and 0 artificial sweeteners. Liquid IV. Now it's sugar-free.
This tiny home trend, not for me. Now this is more like it. The same goes for my footwear. So I went hands-free with Wide-Fit Skechers slip-ins. Just step in and go without bending down or touching my shoes. Wide-Fit hands-free Skechers slip-ins.
Tonight, Kramer's one-on-one with CEO Jensen Huang concludes.
Don't we want this ourselves in a consumer fashion, not just business to business? Every device will run artificial intelligence software.
Mad Money, tonight, 6 Eastern, CNBC.
I'm Craig Whitten, and I want to buy your jewelry. We make house calls to buy entire jewelry collections and estates.
And who does find jewelry? We know that well-made jewelry is valuable.
Let Wittens find a new home for your unwanted gold, diamonds, and watches.
We belong to the National Association of Jewelry Appraisers and know your jewelry's true value.
There can be thousands of dollars just sitting in your drawer safe deposit box.
I'm Craig Whitten, and I help people find new homes for their unwanted jewelry and watches.
You're probably not easily persuaded to switch mobile providers for your business. But what if we told you it's possible that Comcast Business Mobile can save you up to 75% a year on your wireless bill versus the big 3 carriers? You can get 2 unlimited lines for just
I ain't gonna lie.
all on the most
I ain't gonna lie. That Dunkin' Donuts coffee smells so good. It really does. It smells so good.
Samsung device with a qualifying trade-in. Don't wait. Call, click, or visit an Xfinity store today.
All right, welcome back to the exchange, everybody. Shares of Chipotle climbing to an all-time high today after it announced its first ever stock
So,
split.
if anybody else is new here, let me know. Say what's up. I'm coming back in 1 second. The camera kind of just took a poop on me. It's really not the camera. It's OBS. I think I gotta download the new. I gotta reset the new OBS or update it. And that's all. I just gotta update it.
Restaurant analyst Webb Bush and our very own Kate Rogers. Kate, welcome. Good to have you with us.
Great to be here.
What do you think of this stock split?
Well, I think exactly.
So looking at that, I didn't realize. Maybe I did.
All right, welcome back to the
It
exchange,
just
everybody. Shares of
kinda-
Chipotle climbing to an all-time high today.
It just
after announced its
reiterated
first
it.
ever stock split.
But yo, they're talking about rates being back down to like 3 to 2.5. That's crazy, bro. Like, there's gonna be a ton of opportunity, gang. Save your money if they're gonna keep it this way. Look at this.
Currently just above $2,900. That means if the split were
Look at
approved
this.
today, shares would go down and trade about $58 a piece. which
Look
would
at
have
that. 2.5,
for everyone
3.
today. Joining us now to discuss is Nick Setyan.
I didn't think they were gonna get but to like 3.5 or so. So listen, here's what I'm gonna do. I'm gonna write down. I'm taking pictures of this shit, and I'm going right to the Fed building. Hey, dog. Y'all told me 3. I ain't bought this new house because y'all told me 3. For 3 years, y'all told me 2. Y'all told me that at least 3.5. And now y'all talking about stopping at 4. Y'all owe me 2%. I want my 2%. Y'all put these papers out for the public to see, and you need to stick to it. Now, I've been sitting here for 4 years, waiting on you asses to get it down to 3 to make some moves, and you ain't done nothing. That's a problem. We need to fix it. Get your ass up on the balcony or the podium and take us to 3 right now. That's all you gotta do. You gotta just. Oh, you don't even have to literally like pull a lever. You don't have to do nothing. You just gotta get up on a podium and say, "Yeah, we're just gonna bring it down to 3%." That's it. That's it. Rates will go down. Rates will go down. I promise you. My other half works in real estate. I promise you. They will be coming down. And they would not put 2.5%, 3%. Not today. Maybe it's not clear what I'm saying. I'm talking 2026. I'm talking 2025. I'm talking longer run, like it says here. All right? I don't have a whatchamacallit. I got to download it. But I'm talking about this. All right? They keep putting this paper out. That's what I'm saying. Nah, listen. This is like a joke. Right? I'm kind of like making a joke, but I'm kind of not. But I'm saying the point of this is this longer run, they're saying and have been saying that people think they're just going to stop at 3.5 like I thought. They have the longer run target at around 2.5 to 3%, not 3.5, not 4, not 3.5, but 3 to 2.5. So what I'm saying is I sit here and I save and I just hold on to my money and I make no moves for 3, 4, 5 years. And these motherfuckers just stop at 4.5, 4. I didn't, like, I'm not, like, y'all should have just said 3.5 or something. What I'm saying is what I'm joking about, but not joking about, is not putting money to work for another 4 or 5 years. Because I want my 2.5, 3, like the Fed said. And if they don't give it to me, I'm going to be hot. And I'm going to be at that Fed building like, yo, here's your paper. Matter of fact, here's 23, 24, and 25, bro. Where are my 2.5? We're not there. It's been 4 years. Where's my 2.5? I waited because you all said you was going to do this. All you got to do is say this is what you're going to do. All you got to do is just stand up in front of millions of people and say, yeah, we're going to bring the target rate down to 4.5 or 2.5 or 3. Because I'm going to put some money to work. We are the new Japan. This is what this is saying. We're the new Japan. There's been a fundamental shift. They kind of like where zero rates went. You can tell. Longer run, 2.5. Since when has that been a thing? The longer run should technically be like 4. Or it should be like 3.5. We're going to find out here in a couple minutes to see if the longer run has been bumped up. We're going to find out here in just a minute. Yeah. No, I wasn't saying today. Like, I'm kind of leery. You know, I think until something happens, and I watched, because I was up at 3 o'clock this morning. My cat woke me up, and I was watching Christine Lagarde this morning, and she was like talking about, like, you know, we just, and we're going to get the same thing. You know, they want to wait for, they need a couple more months. That's probably what he's going to say. The same thing Christine Lagarde said. Let's see if he says that. Let's see if he says we want to get like 2, 3, maybe 4 more months worth of data before we make a decision. Let's see if he says that. And if he says it like that, the market's going to take it dovish. That means he's going to have rates in his mind to cut. You know, if he says it in a good mood. You know, if he comes in talking that, I don't know why y'all keep talking about rate cuts. Like, we need more data. We're not happy with where we are. It's just, we're going to find out how he comes out. We'll see what the paper says. And then if the paper's dovish, is he dovish? Or does he try to talk it back down like he does? Or has done on like 3, 4 different occasions during this whole process. He did it Jackson Hole, and then I think it was like October. Remember when the paper came out and the paper was talking about stopping rates? And he's just like all bullish. And I'm like, no. That's all bullshit. But the market went with it. Like, I was like, nah, hold up. Like, the market's smarter than that. Like, it should not have did what it did that day. I'll never forget it. But I seen it. I'm like, yo, I just instinctively was like, there's no way Powell is going to let this just go unhinged. There's no way he's going to talk like this paperwork. All right, so that's that. So, guys, again, 4.6. All right, we're going to go with Fed funds rate. We're going to go with, we could go with the September projection or just a federal funds rate for next year. We'll see if this is higher, lower, if nothing's changed, but you get the longer term changed. That's what I am looking for. And I think I have it this time. It should pop up right here. It should pop up. Let's see here. And then we will have Powell on. All right, so who's with me, all right? So y'all going to save you money if you can. If you have an apartment, if you want to wait to refinance and you didn't, for whatever reason, do it when you should have. All right? We're going to print this paper out and we're going to take it to the Fed building. We're going to rate the DC 3, 4, 5 years from now if they do not get us to 3% and just hold this paper and get up on them and say, yo, where's our 3% at, dog? Where's our 3%? I know you ain't playing with my money. I know you ain't playing with the public's money. We try and put this shit to work, bro. We've been sitting here for 4 years. Powell, where's our 3%? That's what we want to know. Where's our 3%, bro? Yeah, there's a whole gang of us out here, bro. We want our 3%. That's crazy. I don't think that they get to that. I don't know why they would think that like 2.9 unless they think we're the new Japan. 2.5, guys? That's crazy. Unless this is like, okay, this is our recessionary number. Because we think, homes aren't going to be selling. GDP is going to get extremely low. I think GDP is obviously going to go lower over time. But I think it won't be until 2025, 2026. It's going to take some time, I feel like. There's been $7 trillion worth of liquidity and, they keep adding more. I think they got another 1.2 that they're trying to go through with. All right, what time is it, guys? All right, we got just a few minutes. Get a little nervous, man. Is anybody? I still do it. I've been through fucking not thousands of these, but at least 100 of them, and I'm like still like, the blood gets flowing a little bit. Not gonna lie, might have to poop. Just like when we was a kid and the man came in, bringing the goods. Oh shit, man! All of a sudden I gotta take a dump. I got the bubble guts now. No, I'm just playing. Oh shit! No, I'm just kidding. I don't think it's gonna be that crazy, guys. Honestly, it might be. It depends. I'm not gonna sit here and take any guesses, but I think it's gonna be the same thing as usual. That's my guess. I think we're gonna say. We're going to get the old, we need a little bit more data. Let me make sure I'm logged into my... Yes, we are. Let me go to the SPY. Fuck, you know what I didn't do? Excuse my language. I did not write down the option prices and volume for the end of the week. I didn't do that. Now the volatility's already hit. See, like, it's no use doing it now. Now they're throwing volatility into it. What I'm going to do is I'll write it down now, or I'll just take a look at which ones I want to be in. 419 or 519. This is for Friday, I'm pretty sure. 21, yes, this is for Friday. Damn, there's a lot over there at 510. Watch the 510s for Friday. 510, and I am out of those forward calls. It did get filled. All right, we got just a second. Here we go. Click, 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 clack. I'm just gonna keep refreshing. Hopefully, it doesn't mess my shit up. All right. Okay, we know that's a 5.5.
5.25 to 5.25% range. Does not expect to cut rates until it has greater confidence inflation is moving substantially into 2% target. Projections show 2024.
There we go. This is what we need. Okay, 2.6. So they raised. Okay, so not really 3.1. 4.6. Okay, cool. We should pop. We should wait. 4.6, 4.1. 4.6, 3.9, 5.1, 4. Okay, so they lowered. Okay, they're lowering 2025. Market should pop. We getting a pop? I knew it. Yep, I didn't even have to look. I knew it. Yeah, I knew. It's going to rip. I already know. 2020, it's going to pop. All right, so look, we broke out to the high. See if we do not get if you get a pullback here, you got to buy that motherfucking dip, boy. I'm going to. Yeah, they've just lowered. I'm going to tell you why right here. So they've lowered. This is from here. Look, 3.9 to 3.6 for 2025, and they had 2020. Wait, hold up. 2025, 3.6, 3.9. Okay, so 20. Wait, 3. Why is the market popping? Hold on. Hold up, fam.
GDP at 2.1% in
4.65.
52.57 up the.
Hold on. Yeah, I was thinking the market should pop, and it did, obviously.
10-year Treasury yield at 4.257%.
Oh my God.
Falling after the Fed decision.
0.6. Yeah, I know. Okay, 2020. Nothing has. Okay, September projections.
52.60 now. Futures continue to pop here.
There's a growing consensus among the members of the board around that 4.6% year-end number, right? That's a good way to put it, Tyler. Almost everybody except for one person
GDP.
on 4.6 or higher.
No, see, that's not going to happen. I can tell you that right now. We should get at least a. That's GDP right here, 2026, 2025. It might happen if they keep borrowing money. Unemployment rate. I knew, I had a feeling it was going to pop, but I all right. Let's see here. Give me 1 second here. Yeah, hold on, guys. Don't get too crazy right now. I would wait because there's nothing has changed. Everything is just like frozen on my end here. TV, everything. All right. Damn. Let's see here, guys. Yeah, I had a feeling that they were it was gonna pop there. But then I look back and I'm like, wait. Hold up. Okay, do we have the Dow? Because the Dow was leading. You want to look for tech. Watch yields. The best thing to do without even looking at this data is to see what yields are doing. So the yields pulled back, but they're bouncing right back to where they were. So let's see what Powell has to say here. And I feel like, damn right, I hear you. We're doing 604. Damn. God damn. Look at all that. Look at all that. Damn right. I just straight cash, homie. 10-year. Hold up. I gotta. What is going on with CNBC, bro? My man was getting ready to come on. Fuck. Let me play it. All right. Let's get to work. Let's get to work. Bloomberg. All right. So the Qs are popping. Watch the Dow. The Dow was our leader at first. Yeah, so the Dow's breaking out to highs. Just follow the Dow. At least that's what I'm going to do. I'm going to follow the Dow right now. Dow's getting ready to come into resistance. I honestly nothing's been changed. So, I don't know. I think you just have a lot of money being put to work. I'm not too sure. I thought the market would rise, and then I forgot why. I don't know. It just looked bullish, and I'm like, wait. Hold up. Literally nothing's changed. All right, SPY right at resistance. So the SPY and the Dow are tied up. Where are the Qs? Come on, hurry. You're a fast fucking computer, bro. You should be going. You should have no issues here. Come on, let's go. Damn, look at the IWM. Ripping. The IWM's your ripper. The neutral rate.
Time for Powell to really shock the market and change expectations. That's in the past. You know, that was necessary when we had a big inflation problem, when he really needed to do a lot of work to get that under control.
So what has been strong?
He
Microsoft.
can be more consistent. He
Okay,
can be
Qs.
more stable. He can be less surprising. You know, I think that was the message 2 weeks ago. That would be the message today, and I think that will be the message, you know, over the course of the year, is a more consistent, stable Federal Reserve. And I think that's actually helpful from a market's perspective.
I know.
as
I'm
it
trying,
allows
guys.
investors
Sorry.
to kind
I
of
was
set
just.
expectations and invest based
I
on
was
things
getting
like
a
Chrissy
little.
just mentioned, fundamentals, rather than trying to guess what the Fed's going to do.
Rick, I know you're with us. Tell
All
us
right,
how
so
the bond
yields are
market is
pulling
reacting
back.
and what you
Here
took
we go.
away from
Yields
what
are
we saw
still
from
pulling
Steve
back
so far.
here.
Equity markets, they're happy as long as rate cuts aren't taken off the table. So they're happy. The bond market saw 460 trade in twos, so it dropped a bit. It's back up to
That's true. Rate
462,
cuts
down
aren't
about
taken
6
off the
basis
table.
points. Tens, they traded
Everything
down
is
around
still business as
422.
usual.
We're back up to around 4.25, and I do point out both those rates are definitely lower than they were just several days ago, but they're definitely higher than they were several weeks ago.
I'm gonna have to
In
look
my
into it
opinion,
again.
The whole ball of wax probably leans on the unemployment rate,
Nothing
which I'm sure
changed.
he'll get to
Nothing
in the press
changed.
conference. If you recall, it moved up to 3.9%, which means the last
It's
3
in the
months
red
are
and
3.7,
okay. Black
3.7,
text appears to
3.9.
in both statements.
3.9 happens to be a half a
Really
point
since
above
early
the
last
low
year,
in
but
January and
remain
April of 23, which was 3.4%. And should we, the next jobs report, get an unemployment rate, and I'll guess what it is. My guess for the next unemployment rate is going to be 4.1%, because 4.1, 3.9, 3.7, the 3-month rolling average there is 3.9%. A 0.5% above the 3.4. It's the SAM rule.
I gotta
Boy,
get
this has been
some.
brought up so
What
many
what
times
are
over the last 36
semis doing?
hours, which basically states when the unemployment
I know
rate comes to
AMD's
a
been a
certain
little
level,
weak. Oh
it seems
shit!
to
Look,
accelerate
AMD's
a bit.
below the
Fed's
50
gonna
day.
be paying very close attention
Wow.
to that. But don't believe your lying eyes. Pretty much as Steve said, inflation's higher, growth's higher, and there's still pretty much 3 eases built
damn,
in.
watch out.
All the markets are happy.
Look, they're-
but I'm telling you, as Sherlock Holmes fans used to say,
Dude,
the game's
AMD,
afoot.
there's a
The Fed's
problem.
really threading the needle on guidance here and public opinion, but in the end,
So semis
can
are
they
weak
really
right now.
cut rates
Okay,
when
MU's
growth and
MU's a little
inflation
bit
are still
stronger
this
than.
sticky?
I just don't know if I want to be long semiconductors
Steve,
right
you wanna
now.
react? Yeah, I mean, what Rick just pointed to is something
Let's
that
see
I'm
here.
sort of gathering
What do
a
we have,
question on.
technology-wise?
I like the way Kelly put it. By the hair of our chinny chin, we escaped having that third cut go
Okay,
away.
so Google,
It is
Meta,
interesting here,
AVGO,
higher growth,
ARM.
more inflation. I think
So PDD,
when Powell
Tesla,
was
so
asked
your
about this
consumer
apparent
discretionaries
inconsistency,
doing
the
real
way he
hot
will
right now.
respond is to say, well, we think we're
Coinbase,
tight enough
obviously
here in order to
Bitcoin.
handle
All right, so
some
these are
upside
names you want to look
surprise
at.
or less of a decline in inflation
and
more
your
growth than we
information
previously
technology,
thought,
but
and it's a measure of how much restraint we think we're putting on the economy here that we
AVBT,
believe we don't have
no.
to change our forecast, or the
Mara.
average official doesn't have to change their forecast. I think that's how he'll probably
Bro, okay,
respond
I
to
was
that
gonna
question.
say,
But
my
I think it's
computer's
coming out. Let's
lagging.
remind folks, there's another shoe to drop here,
Dude,
an
I don't know
important shoe.
why it's
We know
doing
the
this
Federal
today.
Reserve began
Okay,
discussion.
anyway,
We
back
were
to
told
the.
anyway that they would. Of
So
the,
Qualcomm,
potential end to the
ENPH.
reduction of the
Oh,
balance
look at
sheet.
your solar
And so
names
we'll hope to
today.
get some information, some details about when the Fed might bring quantitative tightening to a close here, having brought the balance sheet down by $1.5 trillion, but still remaining. If it keeps going at this pace for another year, it would even stop at $2 trillion above where it started this whole thing back in 2020.
I want to get rid of that. I'm sorry.
Very
just
interesting
real
stuff. And
quick.
if I can go back to David Kelly, when we're talking about the balance sheet, we don't have the details. As Steve said, maybe we'll get some here in the press conference. What feels appropriate to you, knowing
SMCI is
what we do
down.
about where the Fed stands
Adobe,
right now? What
Crowd,
should the timeline look like, and what can the market take?
Well, I think what's really interesting is the Federal Reserve really doesn't know how far they can push down that balance sheet before they have a repeat of what happened back in September 2019, where short rates
Okay, so
suddenly
obviously
bounced up.
Coinbase
They're using
names.
this
Okay,
ample reserves
Mobileye.
regime. It's right now, it's abundant reserves. They've got all these reserves.
Tesla,
so they're gradually draining reserves from
NBLY.
the system, but they don't know how far they can go.
That's
And they're
not
really
me,
making
that's
some guesses
CNBC.
here. I've seen some research coming out of the St. Louis Fed saying that maybe if you
It's
get
breathing in the
reserves down
mic.
to between 10 and 12% of GDP,
Okay,
that
so
might be
keep an
right,
eye
but
on,
it seems to be very loose
Wiz, good to
logic.
see you, buddy.
But if they do that, yes, go ahead.
Maybe you could answer a question for me. If they have the
All
standing
right, the
repo
Qs have
facility,
not. I'm
which
just
is
gonna.
like
I'm gonna be
something you
patient
can,
a second.
break glass if in
let's see,
case
we've
of a
already
fire
pulled
here.
back.
In other words, if they don't have reserves, they can go to the Fed for those reserves. What's the difference? I'm trying to figure out a reason to be concerned the Fed could go too low on the balance sheet if this
All right.
standing repo facility is
Because
something that really exists.
if we're going to
and will
have
work. So I
upside
try to be
movement
concerned.
based
I
on
agree with
rates
you. I don't
and
think they should
yields,
be so concerned, but
technology,
I
tech
think
is
they're
going
worried
to
that they
be
will
where
get
you want to
blamed
be
if they
to
have
either
a
be
repeat of
short.
September
If it's going to be
2019.
to the
They can
upside,
mop
if
up the
yields
mess very
rise,
easily. I
you
think
want to be
that's
short
exactly
tech.
right. But
If
what's
yields are
interesting
pulling
is
back,
if
you want to
use
look
that
to
measure,
take some of
they're
these
quite right. I mean, they were
tech
$4.1
names and see if you can't get the
trillion
Qs
of
to
balance
get back in the
before
lead or
pandemic.
match up with the
They
Dow
could
and the
stop
SPY.
$2 trillion higher than that. But if they do that, and this is what's going to be interesting from the press conference, it's possible that Chairman Powell will indicate that they may
I did not
begin
mean to
tapering
interrupt
this
there.
year. And I
I'm going to
think
go
that
pour a
would be
cup of
positive
coffee.
sign for the bond market, because it
I
says
think
there's
this
gonna
is
be
a
lot of
little
support
bit.
still at the long end of the bond market from the Federal Reserve.
Kristen, why don't you react to the thoughts about the balance sheet and where the equilibrium value might be, and how far away are we from it?
I absolutely agree with all the comments that have been made. If you look at where we were pre-pandemic, there's still a lot of room to go. We're at like $7.5 trillion right now, but I think that the market will actually react quite favorably to this. If we get commentary from Chair Powell, just the fact that there is a discussion.
This doesn't surprise me
around
that we're turning
quantitative
it back
tightening,
around.
and when we will see either the slowing of that or
So
the
take
ending of
notice,
that.
guys.
Remember, that's
Take
adding
notice to
liquidity
where the
into
SPY and the
system.
Dow
So I think a lot
and
of
the
things that
Qs
we're
are able
receiving,
to
whether
match
it's
up,
the
and then maybe,
cuts,
hopefully,
that's
technology
still
brings
priced
us
in, a
out,
discussion
breaks
around
us out to new
quantitative
highs.
tightening. And I go back to what I said earlier
SPY.
in terms of the data points that he's paying attention
Because
to.
right now,
Chair Powell
the
has shared
Qs
in, whether it was
and the
congressional
SPY
testimony,
should start
some
to
of
be
the other
matching
conferences, he
let
has
me
shared the
see
fact
this.
that
I
he
just
is
want to find
anticipating
out
rate
where I
cuts
want to be.
this year.
I know
that
this
we don't
might
have
sound
to break
crazy to you
employment
guys.
to actually get our first
See how
rate cut.
far back
And just to
down the
put all of
Qs
this
have
into
been
perspective, we're
because of
talking about 3
technology?
rate cuts
See, I
of
needed the
25
Qs to hold that.
basis points. Those
All right,
25
watch out. The
basis point
Qs did not
cuts
hold
are
that
far
flat
from
top pivot high
accommodative.
there.
And so I think we also just need to put it
They did
into
not
the
get
larger
through that.
context as well.
I was hoping that they would.
John Bellows, a final thought.
You know, David highlighted the risk with regards to reserves.
I am
I think the
sorry
other
that my
side of this
computer's
is the
doing
point
this
that was made,
today.
is they bought a lot of bonds in 2020 and 2021. You know, they expanded the balance sheet tremendously, and I think that's going to mean that their bias is going to be to continue
Wow.
the QT
It's got a
for
long
while
ways to go.
and try and get that back down. Again, they bought a lot of bonds. There's a long ways to go to kind of undo that. And so I wouldn't be holding my breath for them to start buying bonds again.
They'll use liquidity as an excuse to stop.
All right, let's see what we do.
Steve,
Rick,
you go ahead.
What's the bond market want to hear from Powell when it
Let
comes
me turn
to
this up a
QT?
little for you. I'm
Obviously,
gonna go pour
they
my
wanna
cup of
know that
coffee
there's
real
a
quick.
whole bowl of lollipops that are out there.
All right,
which is,
we're coming back down like I thought.
thinking
Like I
about
thought we
this.
would.
Okay, go ahead. Tell me what they're
yields
thinking,
are
Rick.
already, they're moving higher, and here's what they're thinking: that quantitative
Yep, they're
tightening
moving
is gonna
higher.
stop
I knew it.
well
This was
shy
just
of
a.
any number.
I got. It's so funny. I got caught off guard, and I feel like the market did too. I'm like, yo, the market should go higher. Oh, it is. Oh, wait, hold on. Why is the market going higher?
And it's going to stop because of the.
The only way I could say
reverse
that it would be
repo
going
parking
higher is
lot
because
getting
nothing has
empty.
changed.
And the bond market doesn't like if the balance sheet is much higher, in my opinion, than 6 or 6.5 trillion, which in and of itself, as you pointed out, is still 2 trillion higher than when they stopped after the credit crisis.
All right, so
and
where'd
you
he
know
go?
they want to use that balance sheet again should any type of crisis develop in the future. And we all know know, the crisis calendar seems to have a higher frequency than it used to.
How did I know that Rick would have an opinion?
All right,
on the
AMD.
balance
If we
sheet,
get a
guys? How did I divine
pullback,
that?
we got to look at names like AMD. At least that's what I'm going to look at.
History.
Let's
A
see what
long and
AMD's doing.
glorious history. Thanks, guys.
AMD's still
and ladies,
underneath the
appreciate it.
50-day.
All right, coming up.
So
we'll get
there's a
more
chance
reaction to
if
the
Powell
Fed's
does
decision.
talk this
And we're
market
just
down,
minutes
this
away,
market
of course,
does
from
go
Jerome
down.
Powell's press conference. We'll
I mean,
take you there
AMD's
live
down
when it begins at
2.7% right
5:30.
now.
But first, a quick break.
Let's see
Stick
what.
with us.
182. Oh, it's already done its ATR. That's brutal, man. Dude, when did AMD just straight up fall out of bed like this? Obviously during my nap, but damn. Yeah, I got to use the 15-minute chart there. All right, so the AMD here, you can see this is a nice little setup here. It's making that area resistance now at 177.71, guys. That could be an entry. You just got to watch. You just got to watch. You don't want Powell messing your trade up. All right? You don't want Powell messing your trade up there. And it's been doing this. You can see just a nasty sell-off. But you got a little bit of volume coming in here. You can see the volume is trying to change a little bit here. But it's still not enough for me to say, wow, look at that, actually. Look, it just held that 176 level right here. I'm looking at this level right there. It just held it and put in a higher high. So, and that's your 9 EMA. Let's see what happens. It could just fall out. It could just, this wedge that's getting formed here, you may not see it, but I see it. There's a wedge there, and it could just start to fall out and kind of shake people into it. So, I'm going to wait for Powell. AMD is on my list I'm going to take that back. It's not on my list, but if there's a stock that's going to be weak, going into the end of the week, it's got to be AMD. It's already, I feel like, made its move today. But I will watch it. Let's see here. Let's see if the SPY holds. There's a lot of people probably going to be trying to buy pullbacks on this. I'm going to go pour a cup of coffee. I'll be right back. CNBC is still on. It's a commercial break right now. And I don't know what's going on. I might have to turn my TV off and back on or unplug it or something. Let's see. See if this works. All right, and we'll have Powell on. He'll be on in 10 minutes. So let's go get us a Powell set up. And we'll see what the man says. We're sitting there right at highs. Pretty much saying, all right, pal, what you going to do? You going to hold this as support? It's too much sauce. Yeah, we too good for that. We too good for commercials, bro. We don't sit through no commercials. Stop playing yourself, bro. Stop playing yourself, bro.
Welcome back to Power Lunch, everybody. The Fed leaving interest rates unchanged as expected and sticking with an earlier
I hope you guys have had a wonderful day.
Cuts by the end of the
Be patient. Don't just trade just to trade. Make sure you got something there.
Mr. Lockhart,
don't just give your money away.
I guess I don't.
Make sure you got a trade.
Much in the statement or the action,
or you got a tight stop loss. You got something, right? Make sure that risk is in your favor.
But I do sense.
Please do us a big favor, guys. If you guys could just hit the like button, subscribe. If you are subscribed, a lot of you guys already know. Once we get to 1,000 subscribers, obviously I'm not going to say this anymore. But two, I want to do this giveaway. All right, we're doing a giveaway at 1,000 subscribers. I think it's going to be pretty sick, and y'all don't even know what y'all in for. Two, it's going to help us help others find us that would like to be here. We do trade live every day. We come up with the game plan in the morning and all that fun stuff. I'll be right back. Thank you, guys. Be patient. Let's see what Papa Powell has to say.
3 moves this year, and I think that's the takeaway, that the
ES is at all-time high.
What about the big boost to the GDP forecast to 2.1%
Oh,
from
you meant
1.4%?
that was earlier. I don't know why I
What do you
thought I
make
just
of
seen
that?
that.
And is that sort of the Fed setting themselves up for saying, look,
Yeah, be
the
patient.
economy's getting
This-
stronger.
nothing's
That's why we've got
nothing's
these three
changed.
cuts
I don't
planned.
know why the market's taking that.
Yeah, I think they're recognizing that the underlying
that's
demand
not a
in the
reason for the
economy,
market to go
underlying
higher.
strength is pretty robust.
Unless it was expecting
and
doomsday,
that's why I
then
think they're
that's a different
sticking
story.
with 3 rate cuts because they see that they have that strength of the economy to deal with.
Take us inside the meeting.
I
Since
wanna
the
see what
last meeting,
Tesla's
we've had
doing,
a couple
too,
of
'cause I think I might wanna
inflation
take a Tesla
numbers
along.
that have been to some a little bit worrisome. What is the discussion
All right, 10
like
minutes.
about
Be
numbers
right back.
about numbers that were above what Wall Street and economists were forecasting?
It's too much stuff.
Well, they're not dismissed, but they're looked at in the context of being, just one report or one or two reports. So there's not generally not an overreaction to that. I think, as Jay Powell has said frequently, there's no expectation that this disinflation will be linear and it just will come down in an even fashion month over month over month. So I think they reserve judgment, and I believe that the reports we've seen recently,
I want to let you guys
to
know
a
real
small
quick, too.
degree,
I'm going to be
reset
listening
the
to
clock
Powell.
because they need to look
I'm
at
gonna be
another
listening
2
to
or 3
Powell, and
months
if
of
I take
inflation
a trade,
reports
I will let you guys
to
know
be
what I
sure
take.
that what they're seeing is just a bump and not something that's signaling a real change of direction.
I know
And that's sort of what I was going to ask is how many reports do you need to see in a row to consider it a pattern for inflation, for instance? Obviously, inflation has sort of been this sticking point. And how do you know when it's just a bump or it is a new trend that the Fed should take appropriate action on?
Yeah.
I think different
Okay,
members
it
of the
wasn't.
committee might have different answers to that. I would personally say I would be looking for 3 to fully interpret what's gone on with the January and February reports. So it would be, past, in all likelihood, past the May meeting.
Is
I
there
want you
an
guys to be able to see the
unemployment number?
volume.
Rick Santelli just mentioned the idea that unemployment is about a half point higher than it was at this time a year ago. His prediction was that it may go above 4% on the next number that comes out in about 10 days. Is there an unemployment number that would cause the Fed to begin to worry about that? Because full employment is part of its mandate.
Well, first, there are good and bad reasons why unemployment numbers rise. When you have people coming into the workforce and increasing participation, that's a good reason for the unemployment rate to rise. So they would look within the numbers to see what the dynamic really is. But if you're seeing layoffs and you're seeing widespread downsizing of companies and so forth, beyond 4% would begin to, I think, get the attention of people on the committee.
Characterize the economy that you see, Atlanta Fed, Atlanta, one of the more ebullient forecasters of it. What do you see around you?
I see a solid economy from a very, very of 2023, somewhat less strong, but still strong fourth quarter. And this quarter, if you believe GDP Now, the Atlanta Fed's tracker, is coming in around 2%. So that's a slowing top line growth number. Very healthy labor market. The inflation going moment. So a bit more ambiguity around, particularly the inflation picture would have had 2 months ago, for example.
Mr. Lockhart, always a pleasure to have you with us. We thank you.
Thank you.
We are just moments away from Fed Chair Powell's press conference. We will take you there live as soon as it happens. Been anticipating this all week. Power Lunch is back in 2.
Don't forget about hedges. Don't forget about a little UVXY or something to back your calls up or something. Vice versa. I want y'all to succeed. We got 5 minutes. All right. So I'm going to write down Friday's options. Be careful. Listen, if we get a big move, I would make sure you understand what you're doing for anybody that's new here. All right, you don't want to pay up too much. It's okay to pay a little, but if you get caught when this thing moves and you're like, okay, I'm finally going to buy it, you might get messed up, especially if you're buying a Friday call or a Friday put and it makes a big move and you just bought the whole premium. CNBC. All right, so they're talking now. Bloomberg. All right, he's getting ready to come out, gang. He's getting ready to come out. Something is not quite right. Oh, okay. Bloomberg. I'm talking to my TV. Bro. It's too much sauce. Okay, these are 60 cents right now. So we rallied and we took it back. We pulled back and we did hold. Are we going to, here's the question, is Powell going to hold previous initial morning high? Are we going to hold this high? At what point is it almost safe to say that we can expect to go higher? I would say a break and a hold above, obviously, 518. We're holding 517 right now. All right, I would watch the ES or the SPY. You know, you start breaking out, then I think, you know, if you guys need help with anything, let me know. If you could, do us a big favor. Hit the like button, subscribe if you haven't already done so. Or just even hitting the like button, commenting. It'll help others that would like to be here, is the point. Alright, so let's turn this up. Hopefully this is up on it. It's not too loud for you guys, is it? I mean, I can hear them. I can hear the people. Alright, where's Intel at? That's probably what Powell's doing right now. Breathe in. Did he just open the door?
To slow down the economy. So what I'm interested to hear from Chairman Powell, apart from obviously quantitative tightening,
It's
I'd like
on.
to hear why they pushed
All right,
up
so oh shoot, sorry.
employment growth.
This CNBC is a little
in an economy where
a little
the growth in the
behind.
native-born population is pretty slow. So I'm wondering, is there an immigration component to this? Are they thinking we're getting a lot of immigrants maybe
Where's Apple?
coming in a very chaotic fashion, but adding to the labor force, is that what's pushing up their growth targets? Is that why they think this economy is capable?
Again, one more
of growing
time. Look
this
at Apple
strongly
making
without
highs,
actually pushing
guys.
up
I'm going to be
inflation?
watching Apple for a 180 for the upside.
Yes, exactly. Because
Apple,
that's
I feel like
above
is
their
our
long-term
is
estimate of
our
economic growth, and
is where
why
the
they
strength
think we
is
can
right
do
now.
that. I mean, I think we can, but I'd be interested to know why they think we can do that, given their sort of previous calculations on the issue.
Let's talk a little bit about quantitative tightening and what and where. I mean, Rick sort of gave the idea that wherever they stop, they're going to be higher than they began in terms of the size of the balance sheet.
Yeah, I think they are. I think they are, and I think that's because they've got such a complicated web in their ample reserves regime. They've got all these regulations on the banks. They've got the Treasury Department changing their behavior. They've got what individuals do in terms of holding currency. It's extremely complicated for them to figure out what's ample. So their view is, and Chairman Powell has said this, is they want to stop before they reach ample. But since they don't know where ample is, they're likely to stop short. So that's actually good news for the bond market. It means there's a lot of support from the Treasury Department, from the Federal Reserve in holding down those long-term interest rates. So it's good for the bond market. I don't think it has much impact on the economy overall, though.
We're seeing a lot of the bank ETFs jump, so the KBE is higher by more than 1% here. Obviously, they do well on higher interest rates environments, but the Fed is
He's
still
going to be
holding
getting ready
steady
to
on
come
the
out any
idea of
second,
3
guys. Look at
potential rate
KRE.
cuts.
KRE had a nice bounce.
What do you think?
Regional
why do you
banks.
think the market is so excited, at
Regional
least in the
banks.
financial bank sector, to see?
We have some
what
room
we-
there.
we've
50
heard
day.
so
Let me
far?
make sure I
Because
got
what
it.
we've got is
Come on,
patience
bro.
and
Come on.
predictability.
I know Powell's
The
coming
beauty
out
of 3
any
rate cuts
second.
is you do it in June, you do it in September, you do it in December, you do it in one of these meetings where you release the summary of economic projections. People can kind of figure out what you're doing. If they'd gone to 2 rate
Yes,
cuts, and
financial
then there's a lot of
conditions. I want to
uncertainty.
see
Was
how
that
he
July?
responds
Is
to
that
financial
September?
conditions.
Could this all vanish?
That's
so,
a big
so long
one.
as they are patient and consistent in what they do, that I think helps financial markets in general.
So do you see
I knew
3
I was
cuts
gonna
this
do
year
that.
beginning in June or what?
Yeah, I do. I think they will have enough evidence in underlying core inflation coming down by June to justify a first rate cut. Because remember, we're very tight, and I think they can give us another rate cut in September, another one in
we're
December,
struggling
and
with
then
the
we'll see
50
about
the 100-day
2025.
moving
I think
average
they
on
can keep going
KRE.
for a while here, but I think they'll just wait for the evidence.
I know
They-
there's a lot
think they'll
going
have
on,
enough
guys. I'm
evidence in
sorry.
June to start this process.
And as you say, you're not concerned about a rate cut reigniting inflation.
No, because this economy is actually pretty good at growing at a solid pace without causing inflation. We've had inflation come all the way down from 9.1 to 3.2 without economic growth
Okay, so
slowing
it just
down.
made the
We've had
100-day
27
resistance.
months
Watch
with the
regionals for
unemployment rate
weakness.
at or below 4%,
If we get
and yet
weakness
inflation
out
is
of the
still
SPY,
basically
look at that.
cut
That's
in
a bang.
to
Let's
third
break above
of what it
the
was
100-day
back in
moving
June
average. Try to
2022.
hold it.
So this is a pretty impressive economy.
You
and I
break
think
it,
can
it's
kind of
resistance
do its
now,
thing
baby.
here.
And you got
that's,
the
I think, good news
what?
for everybody.
Got that volume
All
with
right,
it
David
too.
Kelly, thank you very much for your time today. We don't have
That's a
Chair
keeper.
Powell yet,
That's
but
a
why don't we
keeper.
just take a look at where the markets stand right now?
Long hair, nice
the Dow
eyes,
and
big old
the
butt.
Equity markets have
That's what
basically
I
gone
see
from
right there with
flat to what I
KRE.
would
Oh, what you
characterize
got,
as a
pal?
very modest.
Walking in like Obama. Fuck. God, who's
afternoon.
behind?
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual, but inflation is still too high, ongoing progress in bringing forward, and the path forward is uncertain. We are fully committed to returning
All right, we're
inflation
good,
to our
guys.
2% goal.
I just got to keep an eye on
Restoring
that.
price stability is
If you
essential
guys
to
could hit
achieve
that
a
like button,
sustainably
subscribe.
strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
And to continue
Our
reducing.
restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks
515 to the
achieving our employment
downside
and inflation goals
on
are
the
moving
SPY.
into better balance. I will have more to say about monetary policy after briefly reviewing economic developments.
Can you guys hear it okay?
Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as
Okay.
well as improving
And
supply
it's-
conditions. Activity in the housing sector was subdued over the past year,
It's,
largely
it's
reflecting
pretty ahead,
high
too.
mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years.
Some issues here.
Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs
It's a
per
double
month.
top.
The unemployment rate has edged up but remains low at
All right,
3.9%.
I think the market's telling us.
Strong job creation has been
Market's telling
accompanied
us
by an
everything
increase
we
in
needed
the
to know
supply
right
of
there
workers,
already.
reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC
What did I say,
participants expect the
515 or
rebalancing in the labor
514?
market to continue, easing upward pressure on inflation.
Oh my gosh, come on,
The
bro.
median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%.
Well,
longer-term inflation
I
expectations
think I just missed
appear to
that
remain well anchored,
opportunity. Fuck.
as reflected in a broad
I was
range
looking
of
at Friday,
surveys of
5/10.
households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
What?
We are strongly committed to returning inflation to our 2% objective.
Look at that
The committee
pop. They
decided
just
at
got
today's
blasted,
meeting to
bro.
maintain the target range for the federal funds rate at 5.25% to 5.5%.
That's why you gotta watch.
And to continue the process of significantly
If you just
reducing our
got-
securities holdings. As
Oh my
labor
gosh.
market tightness has
This thing's
eased
just
and
whipping
progress on
around.
inflation has continued, the risks to achieving our employment and inflation
Back to
goals
66,
are coming
okay.
into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly prepared to maintain the current target range.
I
for
have
the
to
federal
keep it
funds rate
going.
for
It'll
longer,
lag.
if appropriate.
Just a little bit.
We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation, and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does
All right,
not
so that's a
expect
test
it to be
of,
appropriate to reduce the target range until it has gained
close right
greater
there.
confidence
Or that
that
open.
inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will
And
continue
we
to
know
make our
that there was a
decisions
lot of
meeting
layoffs
by
coming,
meeting.
so
In our SEP,
they're telling you
FOMC
right there
participants wrote down their individual
that,
assessments
you know, if
of
something
an
happens,
appropriate
we're going to
path for
act.
the federal funds rate,
You know, if
based
we get
on
a
what
big
each
job
participant
labor
judges
market
to be
number,
the most likely
hey,
scenario
we're going to be
going
cutting
forward.
rates.
If the economy evolves as projected, the median participant projects
that
that the
shady
appropriate
ass
level of the federal
cell
funds
there.
rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026.
Y'all heard him,
Still
right?
above the
2026,
median
3.1%. Save your money.
longer-term funds rate.
He giving us 3% rates.
These
2026,
projections are
roughly.
not a committee decision or plan. If the economy
Who's coming
does
with
not
me if we
evolve
don't
as
get it?
projected, the path for policy will adjust as appropriate to foster
We want to
our
own an
maximum
apartment. We want to own a
and price
shopping
stability
center.
goals.
Come on, bro. You said you was going to
Turning
give
to
us
our
that.
balance sheet, our securities holdings have declined by nearly $1.5 trillion since the committee began reducing
Look at
our
that
portfolio.
15-minute candle.
At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings. While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon.
Oh, that's
consistent with the
bullish.
plans we
Watch out.
previously issued. The decision to slow the pace of runoff does not
Sorry.
mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us
Bullish.
to approach that
All right,
ultimate
give me
level
them
more
calls,
gradually.
baby.
In particular, slowing the pace of runoff will help ensure a smooth transition,
So
reducing
they're
the possibility that money markets
easing
experience
now.
stress, and thereby facilitating the ongoing decline in our securities holdings, consistent with reaching the appropriate
I'm
level
going to
of
try a
available
weekly
reserves.
here. Let me, where are the cues at?
We remain committed to bringing inflation back down to our 2% goal and to keeping our
Yeah, the
longer-term
cues are-
inflation expectations well anchored.
Yeah,
Restoring price
let's see
stability
what we
is
got for
essential
tomorrow.
to set the stage for achieving maximum employment and price stability over the long term.
Oh no, come on,
To
bro.
conclude,
I see my
we
computer's
understand that our
lagging.
actions affect
No!
communities, families, and businesses across the country. Everything we do is in service to our public mission.
Okay.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
All right, so they just said right there that they are going to
Leisman,
stop
CNBC.
with the
Mr. Chairman,
balance sheet, not stop, but
the,
slow the balance sheet runoff.
Projections show
So
somewhat higher core
even
inflation.
more easing.
They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow
I gotta
the
turn this up.
economy
I'm sorry,
to
guys.
achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming as I pointed out in my opening remarks, we did mark up our growth forecast, and so have many other forecasters. So the economy is performing well. And the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their inflation. But nonetheless, we continue to make good progress on bringing inflation down, and so.
When you just to follow up, when you say that you're
This
willing
market
to
just does not want to go
either
higher,
maintain
guys.
the rate
Take
for
notice
longer,
to this.
what is the
1,
tolerance
2,
of the
3,
Federal
4
Reserve
times
for
we have tried to
inflation
break out
coming
on the
in
cues on
above
a
its
1
2%
minute.
target?
So we're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that outcome, and we will bring it about.
4:45 for tomorrow? Is that what I'm looking at?
Hi, Chair Powell, Rachel Siegel from
4:45.
the Washington Post. Thanks for
We're
taking
just
our
a few
questions.
points away. We're only
You and
point
others have been
6.
saying that relief on housing inflation.
I'm
is
looking at
coming,
contracts
but
for tomorrow.
It still hasn't shown up meaningfully in the CPI or the
Yeah,
PCE.
we can get to 4:45,
Does that
baby. We can
challenge
do
your
that.
assumption about when the shift will finally break through, since it hasn't at that point?
So I think there's some confidence that the market rents, lower
Damn it.
market rent increases that we're seeing will show up in measures of housing, services inflation over time.
Oh
There's
my
a little bit of
gosh,
uncertainty
guys.
about when that
I
will
tried
happen,
getting the
but there's real
445s
confidence
here
that
at
they will show
440.
up eventually. Over time, but again, uncertainty about the exact timing of that.
And will you be able to get
I
overall
think I
inflation
just
down
missed
to
my
target
trade, guys.
if housing doesn't break through quickly? And does
It's
that
just really
affect the
hard to
timing
pay 10
for
cents more
eventual
for it,
cuts
but
this
I'm
year?
looking at the
We will
445
get
on the
aggregate
cues.
inflation down
He's
to
just
2%
told
over
you
time.
balance
We
sheet
will.
reduction, not balance
I
sheet
would assume
runoff.
that what we'll continue to see
or like
is we'll see goods prices coming into a new equilibrium where they're going down.
they're
going to
slow the pace of balance sheet runoff
this year.
All right, and
where
to,
housing
to get a
services
full
inflation will come
to
back
get
down
a
as
clean landing,
as
pretty much.
current market
They don't want to
rents
do
are
too much.
suggesting will happen.
Is what he's saying.
Where non-housing services will move back down. Some combination of those three things, and it may be different from the combination
tone
we
has
had
changed
before the pandemic, will be achieved and will bring inflation back down to 2% sustainably.
Yes, it will eventually, but that doesn't mean you're going to do it, Powell. It's just going to do it on its own.
Nick Timmeros of the Wall Street Journal. Chair Powell.
Nick
during your
Timmeros, this is his
congressional
boy.
testimony this month, you said that your test for making the first change to interest rates does not require you to be terribly comfortable that inflation is at 2% because interest
I
rates
just want to make
are
sure
well
that
above
we're
neutral.
ahead of the game.
At the same time, you said here after the last
good.
meeting that the first cut is highly consequential. Can you reconcile these views for me? If rates
Fudge.
are
I'm
well
sorry for
above
cussing, I'm
neutral,
sorry.
why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019, which itself was modeled on the mid-cycle adjustment of 1995?
It's more, I would put it more in the context of what I said in my opening remarks, that the risks are really two-sided here. We're in a situation where, you know, if we ease too much or too soon, we could see inflation come back, and if we ease too late, we could do unnecessary harm to employment.
And that's what he wants to avoid.
And,
oh,
you
look,
know,
the
people's
cues did not
working
hold.
lives. And so, you know, we do see the risks.
The
as
market's just
two-sided, so
struggling to
it
go
is
higher. I
consequential.
don't know why.
We want to be careful.
It's telling
Unfortunately,
it-
with the
it's-
economy growing,
you're
with the labor
getting
market
easing.
strong, with inflation
I don't
coming
know
down,
why we're
we can
struggling like
approach that
this.
question carefully and let the data speak on that.
Look at that
That's really
tail.
what I
I
was
knew
thinking.
it. That was my buying opportunity.
We've seen so far this year, do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
I want to start by saying
there it goes.
I always try to
knew
be
it.
careful about
You can
dismissing
see I'm lagging.
data that
You guys
we don't
can
like.
see it. I'm
so
lagging.
you need to check yourself on that, and I'll do that. But
Oh,
so
you say
I would say
check
the
yourself before
January
you
number,
wreck
which was
yourself,
very
bro.
high, the January CPI and PCE numbers were quite high. There's reason to think that there could
Now
be
I
seasonal
can't pay
effects there.
114.
But nonetheless,
oh my
we don't wanna
God!
be
How did I
completely
not
dismissive
buy
of it.
the 445s for
number
tomorrow
was
at
high,
90 cents
higher
when
than
I had a
expectations,
chance?
But we
How did I
have it
not
at
do that?
Currently, well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I
We
take
break
the two
above
of them
here.
together,
We're going right to
and
444.
I
This
think
gap
they
fill
haven't
right up
really
above us,
changed
guys.
the overall
I'm just trying to get
story, which
a
is
price here.
that of inflation
Oh my
moving
God,
down
you gotta be
gradually
shitting me,
on a
bro.
sometimes bumpy road.
I had the
toward
chance to get
2%.
these at 70 cents.
I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to
You gotta be
to that
fucking
point.
kidding me,
but
bro. Why didn't
you know,
I
we
just
didn't,
fucking take it on the
last thing I'll
pullback?
say is we didn't.
Sorry for the cussing again. For
Excessively
anybody that's
celebrate
here.
the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more, that we could. We wanted to be
them up
careful
right
about
now.
that decision, and we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
Hi, yes, Chair Powell. Could you speak a little bit more about the timing? Is there enough
Sorry,
data
guys. I'm sorry. I'm
between
sorry.
now and, say, May to be able to get the kind of confidence that you say that you still need, or by June?
Sorry.
Is there enough data for you?
Buy new
Just
high.
give us
Yeah,
a
I
sense
know.
of your
I know.
thinking there.
We're going higher.
Yeah, so
we're going higher.
We make decisions meeting.
He
by
just
meeting,
told you that
and we
the
didn't
balance
make any
sheet runoff
decisions or, about
is
future
coming to an
meetings
end
today.
too, along
Those
with
are gonna
rates.
depend on our ongoing
They don't want to
assessment
do
of
too
the
much.
incoming data, the evolving
So
outlook, and
that's what I
analysis of
mean.
risk.
This
So
is why I'm frustrated
I really don't have anything
that
for you on
I
any
missed the
specific meeting looking forward.
70-cent entries on the Q long. I think the Qs is where you want to be. I mean, that's where I want to be.
We'll
because,
take,
especially if rates are going to pull back. I want to be long tech.
Things can happen
and
during an
it
intermediate
has more
period
meat
to
on the
look
bone
back.
as well.
Unexpected things. So I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data that gives us
Oh my
higher
God,
confidence
yo.
that inflation is moving down sustainably toward 2%.
Did
I also
anybody get
mentioned,
that? Did anybody
we
that's
don't
here?
see
You guys
this
seen that I've been looking
in
at
the data
tomorrow's
right now, but if there were a
445s.
significant weakening in the data, particularly in the labor market, that could also be a reason for us to begin the process of reducing rates. Again, there's nothing in the data pointing at that, but those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
Hi, Chris Regaber, Associated Press. Thank you. In the projections, there is an increase in the neutral rate, as you know, and higher rates, a quarter point higher rates projected in 2025, 2026. Can you speak about why might be behind that? Is there a real sense here?
Please
that the
be careful
economy
for
has
anybody
perhaps
that's trying to
changed in
buy
some
up
way
here.
That higher rates will be needed.
You
in the
probably
future?
get the extension,
Thank you.
but I would wait for a pullback off of 444.
So you're
Bro,
right. they're
these
pretty
things are
modest
about to be
changes,
in the
but you're
money
right, there was
already.
an uptick in the
Oh my
longer run
God.
rate, and
I'm such an idiot, bro.
and also there's a 25
How did I
basis
not get
point
that?
increase
How did
in
I not push the
25
button?
and
I
26.
had
in
them
terms
up.
of
I had
are
20
rates gonna be
contracts
higher in
for the
in
Qs,
the longer
440,
run, if that's really your
445s.
question. I don't think we know
right
that.
there for 90 some cents.
I
It gave me
think,
the second opportunity.
It's
You
we
gotta
think
be
that
kidding
rates
me,
were
bro.
generally low during the pre-pandemic, post-global financial crisis era.
No, I don't
for-
have. I'm not
for
piling
reasons that are
on
mostly,
a bunch of money on these because they're for tomorrow.
important, slow-moving.
But I'm okay with 20
large
contracts. I
things
got the
like
confirmation that I
demographics and
needed that
productivity
the bull
and
case
that sort of thing.
is to be
Things that
had,
don't
and the
move
next thing would be
quickly.
to keep my
But I don't
stop
think we
loss,
know. I mean,
where it needs to be.
My instinct would be
and
that rates will not go back down to the very low levels that we saw, where all around
I
the
feel
world
like
there
the
were
Fed
long
meeting
run
could be
rates
over
that were
now.
at or below zero.
They could stop it now.
In some cases, I
Oh,
don't
did
see
you?
rates going back
It is
down.
what
to
it
that
is,
level,
man.
but I think
That's
there's
how the market
tremendous
is, right? It
uncertainty
goes up, pulls back,
Great. And
you
just
get a little
quick
nervous, you
follow on
second
the
guess to see if it's
projections,
going to
you
go
also
lower.
have 2.6% core inflation for the end of this year. It's
But
already
yeah,
at-
those
or you mentioned
445s,
it being
man.
2.8 in
You're at
February.
100% almost
That
right
doesn't
now.
sound
Well,
like
you're
much
coming up on to
disinflation at all,
100%.
So are you still
That's
confident?
crazy.
Or
I could be done for the week right now.
Last press conference you sounded
If not
pretty
the
optimistic
month.
you would
Not really
get
the
more
month,
confidence
but
in
I
the
could
end
be
of
done
this
for the
year.
week.
Is it right to say that this
That's
suggests
an extra
you're not seeing
$2,000
a lot
bucks
of
right there, along with the other trades
disinflation
that we
this
had
year
on.
compared to what we've seen?
And I got that get back
and so
from
forth?
Disney.
I think that higher year-end number reflects the data we've seen so far this year.
Unfucking-believable.
Because you're now
And
in
we still
this
got
year,
more
so,
room. There's still more room to go.
I think that.
Look at
sorry,
Disney.
say your-
Disney's
say
been
your last
strong.
part of your question again. I think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the incoming data. It is. The other thing is, in the second half of the year, you have some pretty low readings, so it might be harder to make progress as you move that 12-month window forward. Nonetheless, we're looking for data that confirm the kind of low readings that we had last year and give us a higher degree of confidence that what we saw was really inflation moving sustainably down to 2%, toward 2%.
Gina Smilek, The New York Times. Thank you for taking our questions. Per your comment to Ann that a weakening in the labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut, would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor
That's a
supply
good question.
continued to rebound in 2024 the way it did in 2023, what would stronger hiring and possibly stronger growth mean for the path forward on policy?
He's still going to bring up the lag effect. That's a good question. It's a really good question.
And a lot of demand, and that supply is actually feeding demand because workers are getting paid and they're spending, and that's, what you would have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can have that if you have the continued supply side activity that we had last year with both with supply chains and also with growth in the size
I'm
of the
tired
labor
of
force.
this monitor.
But so strong hiring in and of itself would not be a reason to hold off on rate cuts?
No, not all by itself, no. I mean, we saw, you saw last year, very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Wow. I can't believe this, bro. I cannot believe this, dude. You're kidding
Hi, Chair
me
Powell. Neil
right
Irwin
now.
with Axios. How do you assess the state of financial conditions right now, and particularly,
There we go,
do you,
financial conditions.
view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
So we think there are many different financial conditions indicators, and you can kind of,
Yes,
see different
leverage,
answers to
risk,
that question. But
credit.
ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market. where
I
you've
thought they
seen
were gonna
demand,
rise. And we
cooling
never
off a little
got
bit from
that.
the extremely high levels. And there I would point
At
to
least yet.
job openings, quits, surveys, the hiring rate. Things like that are really demand. They're also supply side.
I hope you guys are
things
having a
happening,
wonderful
but I think
day.
those are demand side things
Yeah.
happening.
Just
we
listen.
saw that's been a question for a while. We did.
There's
see
somebody
progress
out there
on
that's
inflation
miserable
last
right now
year.
that just lost a ton of money. Not me.
Significant
I'm just
progress,
hopefully nobody here.
despite,
I pray nobody
financial
here.
conditions
But somebody
sometimes
just got
being tighter,
ruined
sometimes looser.
because they thought that that they were going to pull rates back in and talk this mean talk and
Michael McKee with Bloomberg Radio and Television. Can you give us more color?
or just got the direction
how
wrong
the
and
committee
got
is
scared
thinking
and
about
stopped after this
inflation
big
dynamics
reversal. They
now?
went long and got the
What we've
reversal.
seen at the beginning of
Listen,
the year, are they
I need the
one-off
okay. The
increases
okay
that
to
will
me was the
fade, or
balance
is there
sheet.
more of
They're
a
slowing the
secular
balance
turn,
sheet reduction.
with goods
They're not
prices
going to
rising
let
again
it.
and service
It's
prices
where it's
staying
at. It's where they
sticky.
want it. And
And
you know what's
also,
funny?
housing
Is I
prices
literally thought
have
was
been
going to
sort of
tell
in
you
the
guys.
middle
Let's
of
see
this,
if it stops.
cycle in that you
Right
keep
here, look.
expecting them to
You
go
see how
down
it hits this
and they
pivot high
don't.
right there?
How
You're
does
right
the
there
committee see
already.
this playing out
That's
forward
your
since you've
support.
raised your inflation forecast?
So I see the committee.
When resistance gets broken on an increase in volume, it becomes support.
You're asking and saying
And then the
it's gonna
next one
have
we're
to
going to break
see
is
what the
that
data
one.
show.
And this one. Soon,
As I mentioned,
20, 30,
you can
40
look at
years from
January,
now,
which is very
this
high
9
reading.
billion
You can-
is
and
going to
I
be
think
your
many-
support, not your
many people
resistance,
did,
baby. Hallelujah.
see the possibility of seasonal adjustment problems there. But again, you don't want
Alright.
to. You got to be careful about dismissing the parts of the data that you don't like.
Again, sometimes I joke around.
Then February wasn't as high, but it was higher. So the question is, what are we going to see? We tend to see a little bit stronger. This is in the
cannot
data,
believe
a little
that,
bit stronger
bro.
inflation in the first.
I just
half of
missed
the year,
out on nearly
a little bit less
100%
strong
trade.
later in the year. We're going to let the data
Look at the
show.
volume.
I don't think we really
Like,
know whether
come
this
on,
is
man.
a
Let me
bump
get this
on the
back. Let
road
me get
or
that
something
get back,
more.
please,
We'll have to
Q's.
find out. In the meantime, the economy is strong. The labor market is strong. Inflation has come way down, and that gives us the ability to approach this question carefully, and feel more confident.
He's just talking dovish as
that
hell.
inflation is moving down sustainably at 2% when we take that step to begin dialing
Gotta
back
be long,
our
guys.
restrictive
Gotta
policy.
be long.
Well, you've talked about the desire to have confidence that inflation is continually moving down. Has the recent
It ain't long,
numbers we've
or
gotten
it ain't
for
wrong.
inflation data dented that confidence at all?
It certainly
I'm
hasn't
not gonna say
improved
that.
our confidence. It hasn't raised anyone's confidence. But I would say that the story is really essentially the same, and that is of inflation coming down gradually toward 2% on a sometimes bumpy path, as I mentioned. I think that's what you still see. We've got 9 months of 2.5% inflation now. We've had 2 months of kind of bumpy inflation. We were saying that it's going to be a bumpy ride.
All right,
We've consistently
15-minute
said that.
chart's going to be
Now
where
there are
my
some bumps,
entry's
and the
going to
question
be.
is, are they more than bumps?
See if we can get the 90
And we
MA
can't
and
know that.
VWAP. If we get a pullback into
That's why we are
440 one more
approaching this
time.
question carefully. It is very
441.
important for everyone that we serve that we do get inflation sustainably down. And I think the historical record, every situation is different, but the historical record is that you need to approach that question carefully and try to get
Yes,
it
you
right
do.
the first time.
When
and
you
not have
tell
to
us
come
we
back,
getting 3%,
and raise
2.5%
again,
rates, you
perhaps,
better
if
stick
you-
to
if
it,
you
bro.
cut
We coming.
inappropriately.
We coming for that ass.
Prematurely.
All right, we trying to own some shit.
Thank you, Mr.
All
Chairman.
right.
Edward Lawrence with Fox Business. I wanted
We
to ask
did
you,
New
you
Japan.
received a letter from, the Federal Reserve is an independent body, understanding Congress has oversight over that. You received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said, calling on you to lower interest rates, to cut interest rates, because it says, quote, the potential that it may remain too high for too long has halted advances in deploying renewable
It
energy
hasn't been that
technologies
long, bro.
and delayed significant climate and
This guy's
economic
the one who
benefits
don't know
from
what
these
he's talking
projects.
about. It's only
So has
been a
higher
year,
interest rates
year and a
caused
half.
that?
Have they? Well, first of all, I respect our.
Yeah,
in
has
our
he ever
system of
looked at a
government and
chart?
this Congress
That's
that
what
has
I say,
oversight
pal.
responsibility over
Have
the
they
Fed,
ever looked at a
we
chart?
place a tremendous
6
amount of
months in,
importance on
you're
our
raising
engagements
rates.
with Congress
Oh, we're
and
going to be in a
overseas
recession in 6 months. This summer,
in
this
this
winter,
case,
we're
I
in a
would say
recession.
those are,
Bro, they
our
just started
mandate- our
raising
mandate
rates.
is for
Have you ever
maximum
looked at a
employment and price
chart?
stability and the other things that we do.
Not you guys.
And
You
that's
know,
what we're trying
there's
to
just a lot of
accomplish.
people that are
We're
out
trying to
there
do that in a
talking
way
about
that
recession and shit. I'm like, bro,
sustains
you're
the
going to
strong
need a
growth we're
lot
seeing,
more
the strong labor
time
market
than
we're seeing, but
you know.
allows us to make
I was
further
saying like
progress with
March,
inflation. That's
April,
how
then
we
they
can
came
best
up with the
serve
backstop
the
for the
public
banks, and I'm like,
leave
okay.
the other issues in
Now
which
we
in many
have
cases are incredibly important.
them
such
trying
as
to take
those
out
you
another
mentioned,
trillion.
those to the people who have
We might just get a
responsibility for those.
soft
There's
landing.
another letter from 2000
or it
lawmakers
just gets pushed
saying
back.
that the higher rates are squeezing the working people. How do these
Higher
letters
rates are
affect what you guys are
squeezing.
doing policy-wise?
He said that's
We-
not my
we
job.
receive these
Not my
these
job.
letters with respect.
Talk
and
to
we write
Congress.
careful
Not my
responses
job.
And address concerns. We listen, again, because we're talking to the people who, in our system of government, have oversight over our activity.
Okay, cool. So when we-
that's but at the end of the day, we
I
take
like
that on
Powell.
board,
He
but
about
we
to
have
give us
make
3%,
our
2.5%
judgments, and we have
rates,
to
bro.
stick to
We
our
about to
knitting,
go
which
own
is
this shopping
maximum
center down the
employment,
street.
price stability,
Who's coming with me?
supervise and regulate the banks. work
So
on the
start
payment
saving your
system,
money,
things that we
people.
do.
All right, let's go get that 6, 7, 8 cap. All right, let's go get it.
Claire Jones, Financial Times.
Gotta be a doer, not a
thanks
watcher.
lot for the opportunity to ask a question. As chair of the FOMC, would you want to see unanimity on the committee?
Doesn't that sound like Kathy Woods? Kathy Wood? Tell me that don't sound like Kathy Wood right now.
Cutting rates. Thank you.
We're a very consensus-oriented organization, and we do try to achieve consensus and ideally unanimity. People do dissent. It's something that happens. Life goes on, and
He
it's
said
not a
life
problem.
goes on.
We've always had dissents, and so and you respect thoughtful dissents very much. It's like, you may not
I wonder
agree
if
with,
CNBC is
some
gonna have
arguments, but you really want
Jeffrey
to understand
Gundlach
them. So
on.
you may read a book that takes a position
Oh,
that,
look,
that
look,
you
look, look,
have long
look.
opposed.
It's
just to understand.
It's
that book.
already
So
back
I
to
treat
$1,
dissents
guys.
with real
Already
respect as
back
well.
to $1. Oh shit! Damn. Get him, pal.
Economist.
Damn,
can you hear
that
me?
data is
Yes. Okay,
killer,
great.
bro.
Obviously,
Be careful, gang.
inflation is some
Be
ways
careful.
away from target. Unemployment, though, if you look at the projection for the full year, 4.0%. In February, we were already
power
at
hour.
3.9%, so quite close to the median projection. Are you concerned
Whoa,
at all
whoa,
that,
whoa, whoa.
notwithstanding the very strong
I only need
jobs
one of
growth,
y'all yelling at me, bro.
that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
So we, of course, monitor it's one of our two goal variables. We all monitor the labor market very, very carefully, and I don't see those cracks today. And we follow all the possible stories that are out there about there being cracks. But the overall picture really is strong labor market. The extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved. You're seeing high job growth. You're seeing big increases in supply. You're seeing strong wage growth, but wage growth is gradually moderating down to more sustainable levels. In many, many respects, things are returning more to their state in 2019, which we can think of as normal for this purpose. That's job openings and quits, and surveys of workers and businesses are always interesting on this. How tight is how easy is it to find a job? How easy it is to find a worker? Those surveys have both come down. So the labor market's in good shape. You do see things like the low hiring rate.
Let's see, where are we
People
headed?
have made the argument that if layoffs were to increase, then that would mean that the net would be fairly quick increases in unemployment. So that's something we're watching, but we're not seeing it. Of course, initial claims are very, very low, and if anything, have tracked down a little bit. So watching it carefully, don't see it. And when I say something,
Dude,
I use the
wonder
term
if we could
unexpected
start to get
weakening in the labor market.
guys.
So,
This might
we do
sound
expect the
stupid right now,
unemployment rate to,
but I think I might long
the
AMD
forecast is that it
into
would
the
move
end of the
up, I think,
week.
closer to what we see as the longer sustainable
I think
level.
I see something
That's just
here
that's just
that
people's
might
forecasts,
suggest.
individual forecasts. But we're talking about something that's unexpected. That's where I'll leave
Guys,
it.
I think I'm gonna try it. The volume's pretty serious there, though.
Steve Matthews with Bloomberg. You mentioned at the beginning of the press conference that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon.
Yeah,
I'm
he from the
wondering,
South, boy.
When
I
you
can
say
tell
fairly
that-
soon,
that-
does that
that
mean that the
sweet
committee
tea
would
voice.
meet
Got that sweet
about
tea,
this
bro.
again in May, and a decision could be reached that soon? And
Sweet
I was wondering
tea
if
in
you could also
NASCAR,
just
baby.
describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature? Thank you.
So that is what we're discussing. Essentially, and we're not discussing all the many other balance sheet issues. We will discuss those in due course. But what we're really looking at is slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in Treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the idea, and that's what we're looking at. And in terms of the timing, I said fairly soon. I wouldn't want to try to be more specific than that, but you get the idea. The idea is, and this is in our longer run plans, that we may actually be able to get to a lower level because we would avoid the kind of frictions that can happen. Liquidity is not evenly distributed in the system, and there can be times when, in the aggregate, reserves are ample
Talking
or
about
even
the balance
abundant,
sheet.
but not in every part. And those parts where they're not ample, there can be stress, and that can cause you to prematurely stop the process to avoid
Look
the
at
stress,
regionals.
and then it would be
Ripping.
very hard to restart. We think so. Something like that happened in 19, perhaps. So that's what we're doing. We're looking at what would be a good time and what would be a good structure. And fairly soon is words that we use to mean fairly soon.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
So that our longer run goal is to return to a balance sheet that is mostly treasuries. I do expect that once we're through this, we'll come back
did
to
I miss it?
the other issues about the
Where are we?
composition and the
0.9%?
maturity and revisit those issues. But it's not urgent right now. We want to get this.
I can't pay $1.20,
this
guys.
decision made first, and then we can.
I can't do it.
When the time is right, come
I'm
back.
gonna
to
have
the
to
other
let
issues.
it go and accept the fact that I did not buy my pullback. It is what it is.
Hi, Victoria Guida with Politico. Also on the balance sheet, can you talk a little bit about how the outlook
So you
for the
guys
banking
understand why
sector
we're going
might
higher,
impact
right?
your balance sheet plans? Do you worry that as deposits start to shrink that we could see more turbulence?
Oh yes, the question.
We'll be
that
watching
is the
carefully,
question of the
but
questions.
One of the reasons we're slowing down.
We'll be watching.
We will soon enough.
He knows. They
fairly
ended
soon, I should say,
bank term lending
slow
program,
down,
so-
is that we want to avoid any kind of
Liquidity
of that-
issues with the
of
banks.
Turbulence. I wasn't thinking particularly about banking sector turbulence. But,
Yeah, you were. Yeah, you were. Don't lie, bitch.
And
Don't
we
lie,
had
mother-
some indicators.
Don't lie, Powell.
The last time.
Come
This is
on,
our
bro.
second time in doing
So-
this, and I think we're going to be paying a lot of attention.
I'm not
to
gonna interrupt him.
The things that started to happen.
He
and
is
that
the boss.
Foreshadowed what eventually happened.
He's the boss of all bosses.
At the end of that tightening.
The final
cycle where
boss.
where we wound up in a short reserve situation.
I'm gonna tell you
We
what
don't
he
wanna
said.
Do that again. And I think now we have a better sense of what are the indicators. It wasn't so much in the banking system as it was around, for example, where federal funds is trading relative to the administered rates, and where secured rates are relative to the administered rates. Those sorts of things. We will always be watching the banking system for similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the overnight reverse repo facility
Ends.
drops near at zero?
Yep.
I think we broadly think that once the overnight repo stabilizes either at zero or close to zero, that as the balance sheet shrinks, we should expect that reserves will decline pretty close to dollar for dollar with that. That's what we think.
I'm watching the market on that one.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask also about the balance sheet.
I can't believe
will
this,
you,
guys.
You said
well,
that
you know,
starting the taper sooner could get you
you
to
guys
a
got a
smaller
winner on
balance
your
sheet
hands
size.
if you're able to take it.
Does that
Again, I
mean you
told
don't
you
have
guys
to make a
tomorrow
decision on when to
4:45s.
end QT
Maybe I need
at
to be a
this
little
point
clearer. I don't
and,
know.
Will you be
But
setting
at least
up,
giving out the idea
the
that,
process
hey,
for deciding that
got to be bullish,
sooner,
guys.
or will you wait until we're close to the end?
So it's sort of ironic that by going slower you can get farther, but that's the idea. The idea is that with a smoother transition, you'll run much less risk of kind of liquidity problems, which can grow into shocks and which can cause you to stop the process prematurely. So that's where, in terms of how it ends, we're going to be monitoring carefully money market conditions and asking ourselves what they're telling us about reserves. Are they?
Oh,
Right
okay.
now, we would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant. Right? So.
It's gonna be a
there
while
isn't
before you get there, bro.
There's not a dollar amount or a percent.
Don't nobody
of GDP
want
or
that
anything
stuff.
like
You're
that,
buying
where
it.
We think we have a really pretty clear understanding of that. We're going to be looking at what these, what's happening in money markets, in particular, a bunch of different indicators, including the ones I mentioned, to tell us when we're getting close. Then, though, you reach a point ultimately where you stop allowing the balance sheet to run off, but then from that point, there's another period in which non-reserve liabilities grow organically, like currency, and that also shrinks the reserves at a very slow pace.
Oh, wow.
So you
learned something new,
a
folks.
slower pace of runoff.
He's teaching us the game right now.
Fairly soon. Then you have another time where you effectively hold the balance sheet constant and allow
Go to your local
non-reserve
bank. Say,
liabilities
hey,
to
did you know
expand.
this?
And then that ultimately brings you ideally in for, brings it into a nice, easy landing.
I knew it. I
and
knew
at
it.
a
How'd I
level
know
that
he
is
was going to say
above,
that, bro?
You know, above what we think the lowest possible ample number would be. We're not trying for that. We want to have a cushion, a buffer, because we know that demand for reserves can be very
Guys,
volatile.
real quick,
and we
if
don't
anybody's
wanna,
new here,
again,
welcome.
find
If you guys
ourselves in a
could, hit that
situation
like
where there
button.
aren't reserves, we have to
Subscribe if you
turn
haven't
around
already subscribed. We're doing a
and,
giveaway to
you know,
1,000
buy
subscribers.
assets
I'm
and
going to go
put
grab my
reserves
trash
back in
can
the
right now
banking
because
system
it
the
is
way we
windy
did
outside.
in 2019-20.
You know what? We're getting ready to get a pullback. What I'm looking for, guys, I'm going to tell you guys right now. This pullback, if we get another pullback, I don't mean to yell into the mic, but we get a pullback to 441, 15-minute 90 MA, I'm a buyer.
Can you just sum up
All right,
more
I'm a buyer.
specifically what data you're looking at that would give you that confidence?
Sure. So we're most importantly
I'm a
we're
buyer
looking at
for the flyer,
incoming
bro.
inflation data and the contents of it and what they're telling us.
Oh wait,
So
what did dude
that'll
say?
be- and also the
Yes,
various components.
yo,
So
this
obviously
dude said
that's what we
something
want. We're more
hilarious.
confidence that inflation is coming down
shit.
sustainably toward 2%. And I mean, of course, we'll also be looking at all the other things that are happening.
can't
in
even
the economy.
remember,
We'll
man.
look at the totality of the
But
data,
anyway,
including
if we
everything,
can just
essentially,
get a pullback,
as we
I
make
would
that
like to
assessment.
buy.
But the most
I
important
will
thing
not
be
buy
the
up here.
inflation data that come in.
Remember, Q's contracts are up over 100% now, or you know, right up around 100%.
Wages is one thing. We don't. Our target is not wages. It's really inflation. We would look to. the
Wages
fact
have
that,
stayed flat compared to everything else.
Wages.
I
are
don't even
still
want to hear that.
coming in very strong.
No,
but-
they aren't. Stop
but
it, pal.
they've been Wage
Stop it.
increases. That is to say, wage
Strong is
increases have-
college,
have been quite strong,
healthcare.
but they're
All right,
gradually
stop
coming
it, bro.
down to
Stop
levels
it.
that
Stop lying to
are more
yourself, bro.
sustainable over time. And-
College has
and that's
been
what we
going
want.
100 times
we don't
over
think
every
that the
year
inflation
versus
was not
flatlined,
originally caused, we think,
income.
I don't think, by mostly by
That's why
by
people
wages.
are
That wasn't
not
really the
happy on the
story.
happiest day we're
But
supposed to
we
be
do
happy.
think
On
that
a
to
happy
get
day,
inflation back
we're
down to
sad.
2%
Where other people
sustainably,
are sad.
We'd like to see, you know, continuing gradual movement of wage increases.
Yeah, you got a long way to go,
Still
buddy.
high levels, but back down to levels that are more sustainable over time.
All right, QQQ.
Thank you. Greg Robb from MarketWatch. Chair Powell, could you say at this meeting whether there were more officials
AMD,
who
I
wanted
knew
to
it.
be
Wow.
careful and go slower than
Hold on, was that the
about
Qs?
rates than were at the last meeting? Was there that
No,
sense
it was the
of
Qs.
maybe it's smart to wait? Thanks.
I guess I'd put it this way. If you look at the incoming inflation data that we've had for January and February, I think very broadly that suggests that we were right.
Wow,
to,
the Q,
to
the
wait
Nvidia
until
hasn't
we're
done
more
anything.
confident.
It's pretty
So
crazy.
I think you know, I didn't hear anyone dismissing it as not
Dude,
information that we should
bro.
look at or anything like that. So I think generally speaking, it does go in the direction of saying yes, it's appropriate for us to be careful as we approach this question.
Thanks, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask you about central bank digital currency stuff. We've been hearing a lot from Republicans in Congress about what the Fed is or isn't doing in a digital dollar. But folks, I know you have said to Congress that you are going to wait for approval before the Fed does anything, launches anything. But folks like House Majority Whip Tom Emmer have said that the Fed is either actively researching or hiring personnel to study the implications of a CBDC. Can you give us any clarity on what the Fed is doing right now on a digital dollar?
Sure.
Nothing.
So I think we've been pretty transparent on this, but I will. I'll try harder. So we are not getting ready to. We haven't proposed. We haven't come to a conclusion that we should propose, or anything like that. That Congress consider legislation to authorize a digital dollar. And it would take legislation by Congress signed by the president to give us the ability to do what we think of as a CBDC, which is really a retail CBDC with the public of it. So we're just a long, long way from that. What we are doing, and I think what every major central bank is doing, is we're trying to stay in the frontiers of what's going on in digital finance. And it has many, many different areas. You know,
Yep.
it has applications in wholesale finance, in the payment system, And so to serve the public, these issues have become very front burner in the last 5 or 6 years. We need to be knowledgeable about all that. So we actually do have people trying to understand things that are.
Wow,
but-
come
but
on,
it's wrong to say
computer,
that
let's
we're
go,
working on
dude.
CBDC, and then we've secretly got a lab here where we've got one, and we're just going to spring it on Congress at the right moment. We don't. I haven't at all in my own mind made a decision that I think this is something the U.S. should be doing. I just think it's something we need to understand, and we do have people who are keeping up with that as part of the broader.
Look at
payments
Meta,
landscape.
man.
That's,
Look at that cup
that's
and
how I would
handle.
characterize it.
Boom. I don't know why people think.
Thank
that
you.
they're
It's
gonna
Mark
do
Hamrick
something
with
like
Bankrate.
that.
Mr. Chairman, April 27th will mark the 13th anniversary since a Fed chairman began holding regular news conferences. How important has that higher transparency been in your view, both for the proper functioning of the central bank and also in accomplishing your mission? And is there more that you and your colleagues can do on the transparency front, and what might that look like?
Did anybody watch Bitcoin?
I generally think this movement actually started 30 years ago, when some academics posited
DJ
that
academics.
a more transparent central bank, if the public understands your reaction function, the markets will do your work for you. They'll react to the data, and so it all happens that way. And so there's been a march toward greater and greater transparency. And that certainly Chairman Bernanke advanced that, so Chairman Greenspan did, Chair Yellen did, and so we went from
Bro, I cannot get over this,
press
man. It's
conferences a
just
year to
pissing me
8. So
off.
now every
My
meeting really
computer's
is live
bugging
now.
right now.
I think that's a good innovation. I wouldn't want to turn it back. We also have done a bunch of other things. We
Watch
have
the lines.
annual,
Ready? Look.
Supervision report, financial stability report.
Look. I can't even keep
there's
up
a long
with it.
list of
It's
things
so
that we've
crazy.
done. I think nothing comes to mind as really desperately in need of doing at this moment. We're very transparent. We have no shortage of FOMC participants speaking to the public through the media.
Oh no! I should have held
So
the forward
that channel
calls.
is
Look
full,
at
I
them.
would say.
Oh no!
So I think it's generally broadly.
Let's see where they're at,
helped and
gang.
Made things better, but not every day.
Oh
and in
my
every way.
gosh!
Well, to follow up, has there ever been
If
a day
anybody
when you
took
wanted to put
those
that genie
next
back in the
weeks,
bottle somewhat?
They're at
course
18
not.
cents right now. We entered it at 10. That's an 80% gain on 4 calls.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance.
80%.
Not to harp too much more on
80%.
confidence and inflation, but she did say earlier in this press conference that the recent inflation data hasn't raised anyone's confidence. But when you testified before the Senate a couple weeks ago, you told lawmakers that you are, quote, not far from
God.
receiving the confidence
Here we
needed
go.
on inflation to begin cutting rates.
We got
so
one of them.
Are you still of that belief or not? What are we to take by those words?
I
Not
know.
far?
That's just
So
listen,
let me say
lady.
my
Listen,
main
lady.
message at that,
This is the boss. He
in
can
those
feel
2
how
days
he
of
wants to
hearings
feel.
was really that
You
the
come
the
in,
committee
you
needs to
read
see more
his
evidence to build
demeanor,
our
and that
confidence
is
that
what it
inflation
is. Don't
is moving
question
down
it.
sustainably toward our 2%
Don't
goal.
question Powell.
We don't expect that it will be appropriate.
He
to
is
begin
the
to reduce
dawn.
rates until we're more confident that that is the case.
He's the dawn of all
I said that
dawns.
any number of times. So those were kind of the main part of the message. We repeated that today in our statement. I also, to the language you mentioned,
she
I
pissed him off.
really pointed out that we had made significant progress over the past year.
Right.
And
So
what we're looking for
what
now
I
is
would tell you,
confirmation
bitch,
that
is
progress
stop seeing what you
will
want to
continue.
see. Make sure you get the whole
we had
thing,
a series of
not just what you want to see.
inflation readings
Come out
over
here
the
and make
second
me
half of
look
last year
like
that were-
I'm out here
were really
doing
much
what
lower.
y'all do over there at the House.
We didn't overreact,
in the
as I
Senate.
mentioned, but that's what I had. in
We
mind.
don't play games
But
over
given
here
that
at the
you said
Fed.
that PCE
Look,
for
look.
February
She's
is
gonna argue with him
2.8%
now.
the
Look,
estimate,
look at
and
look at
that
him.
you
Look,
have
he's
been
like, what?
seeing
Who?
PCE
What,
core
bitch?
PCE coming down
You gonna
by
argue me?
4% every month.
I just
mean,
told
wouldn't
you
be at about
what's gonna
2.4%
happen.
This summer,
Don't question
June,
it.
July, to a point where you could cut then.
Powell
Well,
will smack
you know,
a
we'll just
hoe.
have to see how the data come in.
He's
we would,
just
of
trying
course,
to see.
love
Look, he
to
just
get
took a
great
deep breath and
inflation
said,
data.
"Let me
We
not.
got really
Let
good
me not
inflation
do this
data
today.
in
I'm
the
having a
second-
good
the
day.
second part of last
Let me
year.
not.
Again, we
Let
didn't
me not.
overreact to it. We said we needed
You
to
know
see
what?
more, and we said it would be bumpy, and now we have January and February.
Let me
which
just
I've
let
talked
them
about a
know
couple of
you are
times.
no longer
So,
welcome back
you know,
in
we're
my
looking
house.
for more good data, and we would certainly welcome it. Thank you.
Yeah, look, he mad. He said, I'm done. You in the front, bye-bye. You're not coming back anymore. All right, bet. So what we got here? We got pretty much Powell stating balance sheet runoff is where they want it. No more. I didn't even think they started personally. I kind of missed that memo, but I'm not going to be the one girl in the front trying to argue with Powell about this, that, the third, and what he said 2-3 weeks ago. It don't matter what
The stock
he
market
said.
clearly likes what it sees
Shut
and
the
hears
hell
today.
up,
I'm just
bro.
looking at the major.
Clearly, it likes what it hears. You should like what it hears, bitch. That means liquidity. The liquidity concerns are going to be gone, bro. They're done. They're going to leave $7 trillion in the system. But anyway, that's what I was getting at. Clearly, Yahoo's guy does not understand what just went down. So I'm going to help you out with that. If you're just joining us, welcome. Market's ripping. Kinda. Other than the fact that this girl wanted to argue with Powell because he said one thing a couple weeks ago, and because he kind of like, I guess to her, she left the whole thing out and said that he said this last week, and why are you saying this now? Listen, bitch, this is the Fed. They will change their mind. If you ain't know. All right, but anyway. Balance sheet runoff. You've reached support. That's what Powell's telling you, bro. What Powell is saying, when resistance is broken, which is up here at 7 trillion, 7 billion, whatever you want to call it. When resistance gets broken, it becomes support. And he's telling you they're being supportive right now. They're done with the balance sheet runoff. They're going to flatline this thing and just let it hang out. That doesn't mean that... Now, you still have, depending on the dates, okay, these will just run off by themselves. The question I would have asked that we did not get, are you going to buy back whatever you have that runs off? Are you going to keep it at this level? Meaning, if you start to have assets run off, MBSs, whatever, everything, bonds, MBSs, shit that I don't even know about. If they start running off because they have come to date and they collect their cash, are they going to put that money back to work? That's the question I would have asked. That I don't think that question was asked, in my opinion. And I think that's an important question that should have been asked, and it was not. Are you going to put the money back in the markets if, you know, you have a continuous daily runoff of your balance sheet? So I guess apparently that, like, how you guys know what I'm saying? Like, not saying that you want to raise it, but do you want to keep it the same? You know? Are you going to just, whatever it is that you have now, you're going to continue to put that back to work? Because what's going to happen is your balance sheet's going to go higher once you collect interest off of that money that you put back to work. So, and if you just keep the cash, then this thing is just going to kind of flatline and pull back. They're going to lose cash. It's going to lose value because they're in cash. It would take a little bit of time, but again, you know, I think this is what they're aiming for. Slow motion for me. Okay? That's what they want, flat line. That sucks. Well, look what we did from 2014 to 2018. That's 2 years. Wait, no. 4, 5, 6, 7, 8. That's 4 years. I think this is what we're going to get into. And it makes total sense. That's crazy, actually. I think we're going to have a repeat of that. Bloomberg. Yeah, so all right. What do we got going on here? All right. All right, guys. So I'm going to watch the cues for this level here. Oh, they don't have. Wait, do they have
their
him?
employees
CNBC.
and their wages staying
I'm going to go
steady.
fill my
The
cup
thing
up
that
with
I
some
think
coffee
is
real
interesting,
quick.
they did lower the expected number of cuts in 2025. Now we're just kind
That's
of
what
pushing
I was
out
taught.
the
I knew
worry
it. That's what
into
I
the
was.
future
That's
even
what I saw
further.
that
So
I took
we came
bullish.
into the year thinking we were going to get 6 cuts. The market has completely weathered that storm. brought it down to 3 and been quite resilient throughout, but lowered what we think might happen in 25.
Rate-sensitive stocks, though, are moving. And I found this really interesting. The ARK names, the ARK ETF itself is up 3%. Metals and mining up 2%. The regional banks are up 2%. Like these jumped out at me. And then I think if you look at the Russell 2000 on the whole, so you're up 2%. If you finish the day where we are right now, it's the second best day of the year for that index. So those things were interesting. Also should not be glossed over. While Chair Powell was speaking, we printed a new all-time record high in the S&P 500 above 5,200.
Yeah, the Russell doing that with its biggest holding, Supermicro Computer,
certainly isn't hurting.
3.4%. There was also in those projections a slight rise in the long-term projected neutral interest rate. All right, this is a theoretical thing. It's 2.5%. Now it's 2.6. But what it suggests is that maybe the economic potential growth rate is better than we thought, or maybe we have a little more of a tendency toward inflation than we thought. And there's a slightly less room between where rates are right now and the neutral rate to say that, oh, they have a lot to cut before they get, less restrictive. Now, again, this is all on paper. This is happening in the lab, so to speak. And previously, Powell had said, well, we only know the neutral rate by its works. It's this concept we don't have to worry about. Nonetheless, it fits in with this idea that we have to at least acknowledge the economy's been performing better than a lot of the models would have suggested by now.
I think one of the points that he made, I don't know the exact quote, but something along the lines of, yeah, the neutral rate is higher than maybe we originally expected, but what we were used to pre-pandemic was abnormally low. Almost an admission that that was maybe a mistake, keeping it that low for that long. So get used to what would be more normal or what would suggest a healthier economy, actually, which is a higher neutral rate. And frankly, this whole higher for longer argument is not new. We've all been talking about that for a long time. So now their data, their projections is just showing us that they too expect it to be higher for longer. It's just a matter of, is it too high for the economy to be able to refinance the corporate maturity wall that'll start heating up in 25 and 26? Is it too high for the cost of funds? When will the yield curve get back to normal? Those are still the unanswered questions. But today's statement, as much as I want it to be dramatic so that we have more to say, wasn't that dramatic.
No, I mean, it's sort of dialing ahead by 3 months from more or less what they said in December. It gives them less time to get to those 3 cuts if they're going to get them in this year. Again, you can't always take that as gospel. CNBC senior economics reporter Steve Leisman, just stepping out at Chair Powell's news conference, joins us now. Steve, I know you asked him about, the interplay between the expectation for potential easier policy and the projections for inflation and growth as well.
Yeah, let me tell you behind the question I asked, which is that they raised the inflation forecast, they raised the growth forecast, they lowered the unemployment forecast, and yet they didn't do much change this year to the outlook for the funds rate. So you could come to a bunch of conclusions about it.
And here I am sitting here talking and the mic's not on.
Hey, does that mean you're more tolerant with higher inflation?
Lordy, I was asking you guys about this ARK 51 call for Friday, and it was at 30 cents. It's now 36. Sorry about that. I ended up having the mic off. Let me go grab my trash can because it's real windy outside.
We're
and
strongly
fill up
committed
with some
to
coffee.
bringing inflation down to 2% over time.
So,
that is our
if you
goal,
didn't
and we
get
will
the
achieve
memo,
that goal.
I kind of went
Markets
over
believe we will
everything.
achieve that
I
goal.
wasn't sure who was here and who wasn't.
That's what
but,
will happen over time.
Aside from the girl up front trying to get smart with Powell.
If we do resume the downward trajectory of inflation, then the Fed's going to be in a good place. The question becomes,
they're being really supportive now, so I'm long, guys. I'm going to remain long. Now we got to see what data points we have this week. Wait, what's today? Wednesday? We have the labor market tomorrow. Powell did say, keep this in mind. I want you guys to keep this in mind, and I want to tell what's his name to be quiet a little bit. Steve Leisman's losing it. He said, if we start to get unemployment labor market numbers that come in high, he didn't say this word for word, but he stated they will be, what do we call it? They will be supportive, I guess you could say, right? So if we get an unemployment number, because we have initial jobless claims tomorrow, If they start seeing a big number in unemployment, he is saying, and did say that they will act on it. All right. So keep that in mind. If they start seeing a consecutive big pop in unemployment, they will be cutting rates. Don't take it as a negative thing, unless the market takes it as a negative, like in fears that we are going to go into a recession, that they did too much too quick. I don't think they've done enough. I don't think they've done too much, in my opinion. Now, just because the fact that I feel like they haven't done too much or enough is probably why we could still get a recession. Bloomberg. But again, maybe we won't. Let me go grab my trash can. It's hella windy out. It's probably laying in the road. I'll be right back, guys. Thank you, guys. If you guys could hit that like button, subscribe. If you're new here, welcome. If you have any questions, throw them in the chat down below. We would urge you to do that, because if you have a question, someone else is wondering the same thing. You guys let me know what you guys want me to put up on the monitor. The SPY futures, AMD, Tesla, Nvidia, Amazon. I don't care. Tesla, AMD. I knew it. Look, guys, and I told you guys I should have took that long on AMD to get that gap fill.
We had serious acute issues with the banks right around now. And we also had a scenario.
All right, so let's see if I can get a pullback here on AMD.
And that was a very ugly place for a lot of people to feel comfortable. This is the opposite. Yes, it's true. Inflation is somewhat sticky.
So there's relative strength here on this. Is why I didn't.
The fact that people are doing really well right now, and actually wage gains.
I was looking for the 180 calls. They're already 288. That's insane, bro. There's no way. Oh, because it's at 188. It's at 180. That's not bad. $2-3 a contract. All right, 190.
They're not in a situation.
Watch out for 190, guys. If you get a pullback and hold VWAP or 50-day, watch for a pop. Watch pop on AMD.
Both of those threats seem to have been neutralized.
They did say that we're watching it as well.
A little bit of a box, but no emergency on the left, no emergency on the right. And so
I can't believe that girl got smart with him at the end, y'all. Yo, he said, "I'm not doing this with you, girl. I don't know who you think you but I am the Dawn. I am the Godfather here. I am the boss of all bosses. You don't come at me like that." He did the old put his head down. I'm looking at you through the top of my glasses. I'm not taking my glasses off. I'm gonna just put my head down and look at you like, what, bitch? When you know who you're talking to, right? Because I think you must have forgot. That shit was real. Powell was pissed, and he ended it off with that. It's kind of funny. He said, "I'm not doing all that shit y'all do. We're not doing it here. It is what it is. I don't care if I said I'm gonna throw us in a recession 3 weeks ago. I'm telling you right now what I'm doing. I don't care what I said 3 weeks ago. Whether you're seeing what you want to see or not. I'm Powell. I'm the Dawn. I can do whatever I want. You must have forgot. This is my house."
Maybe out of the stuff that was very obviously overvalued, very obviously crowded trades, and into some of the things that are still risk assets, but more cyclical, more attractive. We can sleep at night paying that much for that particular part of the market. And I think that's healthy risk appetite in this part of the cycle. I still think there's a pretty strong debate between whether or not we're late cycle or mid cycle. And if the Fed doesn't land this plane or doesn't stick the landing, we could accelerate into late cycle pretty quickly, overheat again, and that's the big question. But so far, it's working. And the broadening out, today especially, the broadening out is alive and well.
Might be better if we never get the first rate cut. And it remains this thing that's on the fishing line out in front of us, and asymptotically we just continue to move along and wait for it, and it really never even has to come.
I would say indefinite, if not never. But yeah, I mean, Steve, what are we now, do you think, going to start to look toward, right? We'll get some more Fed speak. I guess we're going to have the February PCE report. Is it the end of this month or so?
Well, you know, Mike, if you don't mind, I want to expand on what Josh said, which I think was really interesting. Guys, if you listen to the press conference, there wasn't something that folks were able to hammer Powell over the head with to say, how could you possibly not be cutting rates given that this thing is happening? Josh was right. We've moved away from the banking crisis of last year, which was an obvious thing. I can't point to something to say, you idiot. why aren't you cutting rates? That question, that pretense does not exist. Now, maybe missing something right here. It could be the CRE thing. It could be something going on in the banking system. But right now, I'm looking, obviously, to see, Mike, to answer your question, does consumer spending hold up? Does the delinquencies that we saw, it looked like they stabilized at the end of last year, do they remain stable? Are there systemic risk issues we'd have to worry about? Are they going too far with the balance sheet in terms of reducing it by too much? And does the sort of cumulative effect of higher rates have some impact that was just delayed and it's coming? But I think what Josh said should be expanded. There is not the thing out there that you say to Powell, how could you be missing this and why aren't you cutting right now?
Well, that's very clear, Steve. I think that's well said. On the other hand, you would almost imagine a scenario where you could pound him and say, how could you not be taking a projected rate cut out, right? We had these higher than expected inflation numbers.
Question.
And the economy
that was
needs
my
nothing.
question.
Yeah, exactly. And so, I mean, it's sort of like when he was asked, oh, you still are anticipating shelter inflation to kind of revert lower, and he's like, I think there's a lot of expectation it's going to happen. He wouldn't say when.
I think his answer is okay there, Mike, in the sense that, hey, we're very restricted. We got a lot of restraint in there, and we haven't taken it away yet, and we haven't promised you we're taking it away, which kind of leads to the thing I think Josh was just getting at when I kind of interrupted him. I'm sorry about that, which is, if it doesn't go, if the rate cuts don't happen, Josh, are you cool with that? Is that a sell signal for stocks?
I don't want one because I don't sell solar roof panels. I'm not a mortgage banker. I might feel differently if I owned a hotel chain. I might, seriously, but I'm not. And by the way, for the people screaming, they need to cut rates to support the economy because younger millennials need to buy a house. Well, what do you think is going to happen to the home price when mortgage rates come down 100 basis points? You think that's going to work in your favor? Are you crazy?
Well, I also think nobody actually has a real firm idea of what happens to the 10-year yield, which mortgage rates are more based on, if in fact we're starting to cut right here. Liz, you focus on the yield curve. 10s aren't moving much at all. 30s aren't moving much at all. I'm not saying that's going to be the way it is, but it's not an automatic.
I think, Mike, that's a debate we haven't had, which is this whole scenario sets up higher for longer on the 10-year, which sets up for higher rates or more competition for stocks down the road. That's really an interesting debate to have, I think.
That's right. Well, and I think the other thing about that is the 10-year is also going to follow what inflation expectations do.
Right. Sure.
And those have not moved much. So that's been working in the Fed's favor. Expectations have been reasonably anchored, except for at the 2-year portion, but they've been anchored over the long run, which gives them the flexibility to still say, we can wait, we've got the strength in the economy, we've got the time. If inflation expectations start to look more threatening, you're going to see the 10-year move pretty quickly.
Yeah, that is one of the many things we now have to turn to and watch in the next few weeks. Liz, Steve, thank you very much. Josh, seeing a little bit in the market zone. The S&P 500, as we mentioned, crossing above 5,200 for the first time, holding above that level. Joining us now is Sarah Malik, Chief Investment Officer at Nuveen. Sarah, it's great to see you. So we do have Fed basically more of the same in terms of its message. Same 3 anticipated rate cuts. Market seems fine with the Fed sort of stepping aside. What were the key things you would pull out to observe?
Yeah, it's great to see you. I think that there's 3 outcomes that the markets like about the Fed meeting. That's the economic growth upgrade to projections, also the dot plot that didn't change, and Powell did not sound incrementally hawkish on inflation. But under the hood, let's first look at the dot plot. That is teetering on the brink of moving to just 2 rate cuts this year. I think that's where we likely could end up. And also with inflation, Powell sticking to his 2% target. The question is, when will we reach that? I think it could be years rather than months before we get to that 2% target. So second is, where does the market go from here? Well, first of all, there's a lot of FOMO, trillions of dollars of cash on the sidelines that's been looking for how to get back into this market. And I think secondarily, for the S&P to continue to move higher than 5,200, we need this rally to continue to broaden. That's where I'm more of a skeptic. Just looking at earnings growth for 2024, tech by itself, earnings growth is expected to be about 20%. The rest of the S&P about 5% earnings growth. This strong economy needs to translate to the rest of the non-tech S&P 500 to boost that earnings growth. I think that's how the market will sustainably broaden from here.
Well, you said you're somewhat skeptical that that's going to kick in right away. Does that suggest the risk reward at this level for the market in general is not that great?
I mean, I think it's going to be tough to find that catalyst to have the markets move higher. If you look at the non-tech portion of the S&P 500, they are dealing with this sticky inflation. Wage inflation also is impacting their margins. Also, on the revenue growth side, they just don't have the structural tailwinds such as AI and the demand to increase productivity that's
This
benefiting tech
AMD.
companies.
I'm looking
The
for a
rest of the S&P
pullback to the
doesn't have that.
50-day,
You can see
guys.
that in the
I would
materials
like to
sector,
try and get
energy
along,
sector, and
but you know,
healthcare
you got to
sector,
watch the
which are
IV
under
on these
pressure in
things.
terms of earnings growth. And
I
those
think
are
you'll be able to
large
pick them
drivers
up a
of
lot
the rest
cheaper.
of the S&P.
You know, you mentioned that
Reduce to
certainly there are
185.
trillions of dollars in cash.
You could look for
You know,
next week's
the
too,
fair
though. That's
portion of
always
that is
another option.
retail
Now, you don't
investors,
have to
but
trade
if you're an
weeklies.
investor and you're involved at
But
all
if you
in the
do,
equity
I would
markets,
watch for.
hasn't the market itself kind of kept you involved and raised your exposure and kind of allowed you to have both at once, have the cash
There's so
cushion,
much
a
volume
little bit
there
of
at
income,
185.
and then be able to, you know, support whatever equity risk you want to take?
I think we are hearing from our clients that many of them are rebalancing somewhat out of equities because of the huge run that it's had, and they're just trying to be disciplined in terms of diversification. I think a lot of that cash, when it comes back into the market, what it should be looking at is fixed income. High yield fixed income from taxable to munis, you can lock in yields in the high single digits, even sometimes in the double digits, that you haven't seen in years. It should be a little bit more resilient because we still do expect 2 to 3 rate cuts this year. I think that's an area where you can get out of cash and out-earn the 5% that you can earn in cash and get more returns in fixed income.
And I guess, you know, raises the question about the rest of the world. You know, there has been global confirmation of this bull market. You've seen some strong markets elsewhere, but there's a lot of catch-up to be done. If you think that we need, so to speak, the market to broaden away from big-cap U.S. tech here, that would also suggest the rest of the market, the world would be less disadvantaged.
Well, first looking at Europe, I think Europe is in the disadvantaged camp. They have a similar inflation problem, but they just don't have the economic growth that the U.S. has because the U.S. is exceptional when it comes to technology and its leadership. China, of course, maybe some green shoots there, but still property issues and other issues in terms of China getting back to its historical growth rate. Japan looks promising. Japan GDP growth. The consumer in Japan, I think Japan is an area that investors can look at. And just thinking about the world on a global basis this year, something else to consider since it's already March is that we're going to have 77 elections this year, 60% of GDP. Normally that does cause more volatility for the markets. I think it's going to be a little bit more than noise this year because the less predictable the election outcomes are, the more volatile the markets are. So that'll be, and with the misinformation, with artificial intelligence, I think that could add volatility to the markets as we sit at 5,200 on the S&P.
Yeah, I mean, I know the historical patterns in election years absolutely say that's the case. After the, or during or after the summer, you should expect a little bit of turbulence. But for now, market seems pretty undisturbed by any of that. Within the U.S. market, then, are there spots you'd be able to pick outside of tech where you feel as if they're underappreciated, or is this market pretty well picked over?
Yeah, I think within tech, first of all, you need to be selective, but there are promising technology companies that are continuing to thrive in this kind of market. Amazon, which is invested heavily in its logistics, I think will continue to do well. Outside of technology, looking at laggard sectors like REITs, that's an underperforming sector this year as we unwound from 7 rate cuts expected to 2. REITs have lagged for a couple of years. They've kind of been the baby thrown out with the bathwater of all the real estate issues. If you look at REITs historically, they tend to outperform in periods of rate pauses or rate cuts, which is the period that we're in. That's an area that I'd be looking at. Healthcare tends to be an underperformer in an election year, so I don't think we're there yet. And the consumer I'm worried about after seeing 2 months of not great retail sales. I think consumer discretionary, we've already seen it with earnings that have been mixed. We get Nike tomorrow, where I'm concerned, will they be able to keep their high single-digit revenue growth target going forward? And they have issues in China. So consumer discretionary is an area that I think you need to be much more selective on.
Yeah, it's
Damn,
most
that's
of it's
it.
flying
It's
today,
almost,
but we'll see how it settles out. Sarah, good to talk to you. Thanks so much.
Thanks for having me.
All right, let's get a quick check on the S&P 500. Still tracking
Oh,
for
Lordy,
a record
I gotta do
close.
some
Any higher
yard work.
market today means a record, and it's now 40, 52,
market closes,
16.
guys.
How is this possible? No
We
rate
might
cuts.
have a
The
video out. I'm not
anticipation
sure.
Is enough for now. Up next, we're counting you
It's
down to
3:45,
Reddit's
15
IPO
minutes.
pricing, plus a rundown of the key earnings you need to be watching in overtime. And don't miss a first on CNBC sit
All right,
down with
where's my
Intel
phone?
CEO Pat Gelsinger. You can catch that interview at 4 p.m. Eastern Time in overtime. The Market Zone is next.
This Federal Reserve is tacitly acknowledging that they will tolerate level. Yeah, you know, I think he got that question explicitly.
Shit.
And he said it explicitly. As explicit as the Fed is going to be within the ambiguity of language, he said over time, he stressed over time, and I think the interpretation of that is they're not going to be so worried about hitting 2% immediately. Now, there's a lot of gap and room for interpretation about what is the difference in calendar dates and time between immediate and over time. But I think it's pretty clear that the Fed is not going to press on economic growth and recession for the benefit of going from 3 to 2%. And I think that's pretty clear where this Fed is leaning.
Hey, Jeff, this was awesome. Really thoughtful stuff. Thank you, sir. Jeff Rosenberg there over at BlackRock. You want two moves in this equity market right now. Stocks, all-time highs. Take another guess at what hit a record high just moments ago. A fresh all-time high. Gold. Not just stocks, but gold as well, Bramo. Breaking out and getting back up there.
So there's one way to interpret this, which is potentially fear of inflation, and then you go into gold. Then there's another version of this, which is if interest rates go down, interest-bearing assets are not as attractive, and you can go into a hard asset. So these are two of the potential explanations people might have for gold. Either way, both of them take an effect.
Exactly. So how about both? The fact of the matter is they're still entertaining interest rate cuts, and maybe even inflation isn't going to re-accelerate in a profound way. That's not what Jeff Rosenberg is saying over at BlackRock. Perhaps it hangs around above target. Sticky.
Tomorrow, especially from Jonathan Farrow on being a gold bug, the one and only.
Oh shoot! I forgot about. Oh my gosh.
We'll continue this conversation tomorrow morning. Thank you very much for tuning in to Bloomberg TV and Bloomberg Radio. For our audience worldwide, what a Fed news conference. A green light for so many of you to carry
Yep.
on equities. Your stock market
Yep.
at all
I know that's right. He said the green light for us to carry equities. That is the truth. That is the truth.
I am unique. I am unique. I am unique. My wealth planning should be too. Because I am not my father. I'm not my brother. I'm cautious with my wealth. I have really bold ideas for mine. That's why I trust my wealth to Northern Trust. They have over 30 unique disciplines. What worked for the last 50 years won't work for the next 50. That's why I work with Northern Trust. That's why I work with Northern Trust. That's why I work with Northern Trust. Northern Trust, for where wealth goes next. Orikawa on 18E is really boxed in here. Not a good spot. Into the bending area. Oh, not surprised. Where's the ball? Everybody see it? Oh, wait, there it is. Back into play and oh, no, into the water. Wait a minute. Alligator. Are you kidding me? You gotta be kidding me. Rolling towards the top and into the hole. What an impossible shot. Brought to you by Comcast Business. Billy's not just running his We are now in the closing bell market zone. Ritholtz's Josh Brown is back with us. He actually never went anywhere. He's going to break down these crucial moments of the trading day. Plus, two earnings we're watching in overtime today. Christina Partsinevelos on Micron and Diana Olick on KB Home. And Leslie Picker on the highly anticipated Reddit IPO. That's pricing after the bell. So, Josh, coming into the week, it was three big events. NVIDIA's revival meeting.
So far, so good.
Bank of Japan.
Yep.
Dovish high
Sorry, guys, I did not
market
mean to
forfeit,
drink that
and
right
then
in
the
front of the
Fed.
thing.
Yeah.
No change on the Fed, which basically means we're cool with, we think inflation's going the right way. We're going to allow the economy to be as strong as it can be with that all. What's next? What can we feed on from here?
Well, I think what's interesting right now is you don't have that catalyst ahead of you. Like you've got earnings in the past. I guess we could start worrying about next quarter. But I think
quarter end is what you got, but
you are going to get more economic data. And one of the things that people have been nervous about is the job market being too good.
Yeah.
One of the answers that Powell
Let's see
gave,
here.
I think in response to the New York Times just now, is that
All right,
strong
so
jobs
we're
in and of
recovering that
themselves do
pivot low
not
yesterday
forestall
on AMD.
The need for rate cuts. And I think the markets liked hearing that because it's likely we're not going to see any kind of about face with the labor data. It's just it's nowhere.
Yeah.
So
Well, we don't know that. We'll see what. I mean, he specifically mentioned the labor data.
Added labor supply. from
You know,
domestic and
he
also from
specifically
immigrants.
said, you know, if we start to
getting
get
jobs, spending money,
bigger
and this sort of self-sustaining,
numbers, we will
strong
react.
job market. We'll see.
They will cut rates. That's what they're waiting for, I think. Inflation / unemployment.
At
Because if unemployment is high, he is pretty much saying if unemployment's still high, but inflation's coming down, we still want to think about, or I should say the labor market, right? If it's still really low, and they just because inflation's came down, they want to just kind of hang out a little bit so that they don't, it doesn't come back. Because if they cut rates and the labor market continues to go, I think they seem to be just scared of something I don't think is there. I really don't. I don't think that that they should be so worried about the labor market as they are. That's just me. I think enough time has passed, in my opinion. It's like we don't have wars, we don't have these things going on, but that's about as dovish as you could get, in my opinion, guys. I'm going to be watching AMD here now. Look, anything this afternoon is going to have a lot of theta with it, so please be careful. Please be careful. Seriously. If you do decide to do anything. I want to see a pullback and hold of the 50-day. I may wait until tomorrow to put something on, okay? That's just me. I hope you guys had a wonderful day today. Things didn't go without, it's not like we didn't do anything. We were long Ford today. Ford had a really nice move, and it actually put me to sleep. But that was a solid trade. Solid trade, guys. Solid trade there. We went with the next week 1280. Excuse me. We went with the next week 1282s. We entered those at 9 cent bid, 10 cent ask. And they were at 18 cents, 19 cents. Up there at those highs. So that was a pretty solid trade there. So at least we didn't do nothing today. Or, again, I tried to go along the Qs and I just missed it. I was so close. I was so close. So, I mean, they're going to dial back, like you said, dial back policy restraint. I think they are, I think you got the word today that, watch the labor market. If the labor market comes in really high, out of nowhere, you get a huge gap and you start to see the market pull back, remember what Powell said. He said we will act. If we start seeing, jobless claims start to really tick up, they're going to want to get in front of it because they do not want to destroy the labor market. Things are going well. They don't want to ruin that. So, I got to be honest. I did not see the bullishness coming. I think maybe Powell, is just like, what? I think Powell's realizing and the Fed is realizing, they had a 2-day meeting, obviously, that, they, for the most part, inflation is somewhat under control. You haven't heard much of the shipping containers in the Red Sea. At least I haven't. Maybe I'm living under a rock. But I think that, it's pretty safe to say that that's about as dovish as you could get. About as dovish as you could get. Oh, when did they start this? Man, that's crazy, guys. This is what we have to look forward to. 2.6, 2.5, guys. I can't wait. I want to try and buy a home with that, bro. I would love to try and do something with this. So I'm going to be holding my money. All right, I'm going to be putting money to work if they give it to us. And then if not, this is going to be us when I don't know. What I was gonna say was that
Yeah, absolutely, Betsy. I mean, that was sort of the takeaway, that it's risk on, but everyone was kind of scratching their heads and being like, but why? We're looking at 2025. So, Betsy, what do you think the market got wrong, or what do you think the communication was that made the markets get it wrong?
So what I heard is that they still believe that they'll be lowering rates this year, sometime this year. I didn't hear we think it's coming soon. I didn't hear anything.
Sorry about that. We're good. We're good. We're good. Bell's getting ready to ring. Market's getting ready to close here in 5 minutes, guys. Let's see how this 5 minute reacts. Let's see what happens here in the next 5 minutes. I'm curious.
I don't think paring back the cuts would be a hike. I don't think that's true. I think there's still
Coming up
a
after the
lot
close,
to be
earnings from
learned
Micron
about where the
Technology
neutral
expecting a
rate
loss
is.
of 26%.
So if you look at what is the rate,
Also,
and I think
FIB
the Fed
five
needs to
below,
get to meet
CHWY
the
Chewy,
rate that's not
KVH,
stimulative
KB
and
Home,
not
GES,
restrictive.
Skess.
And right now, the Fed's projection of that
After the bell. If so, that implies a fully diluted valuation
Sorry,
of
I'm not sure what
$6.4 billion,
happened there.
an offering size
All
of
right.
$748
I do want to say I
million.
appreciate all of you guys that have joined us today. Thank you guys. I'm trying to get this stream to be better. You know, I don't get very many views, but the little bit that I get, man, I tell you what, I do appreciate it. All right, you got to crawl before you walk. We're going to get there one day, and I'd like to be able to bring a lot of you guys that have been here from the jump. You know, if you would like to, if I can just pick up a few sponsors and really get a studio thing going like I want, you know, I think we could have a real good thing going here. All right, we're really good at what we do here. You know, if you're just joining us,
Yeah, as you mentioned,
you know, we called these markets. We told you guys, you got to be long. You got to be long. That was a dovish statement if I've ever heard one. So tomorrow I'm going to look for 442. Excuse me. I'm not sure if we're going to get another shot at 440. I got to be honest. I think that's long gone. That drop was a little bit bigger than I wanted right there on that 3 minute chart. Maybe not. It's not too bad.
Gotcha. Betsy, really appreciate your joining us as always on this Fed Day. Betsy Duke is former Fed governor and the former chair of Wells Fargo. So I was noticing, Alex, that Capital One and Amex are still offering high yield savings accounts with a 4.35% APR. At what point do they start reducing that rate when the Fed signals it's going to actually cut or starts cutting?
But also, if they lower it, it's not going to go to 1 in theory, right? So they
Where's the SPY at here?
They bumped it up a little bit. And also raises the question with money market funds, too, to your point. Is that sticky? Does that stay? Yes. Is that just going to get higher rates at the end of the day, even unless it goes to like 1 or 0?
Right. Do people necessarily want to move that to stocks like so many people expect? Oh, that's a good question.
Yeah.
All right, we're moving closer to the closing bell. You've got full market coverage right here in Bloomberg as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're about 2 minutes away from the end of the trading day on this Fed Day. Scarlett Fu and Alex Steele here with you, counting you down to the closing bell. And here to help us take you beyond the bell with a global simulcast, Carol Massar and Tim Stanovic. Welcome to everyone across Bloomberg Television, Radio, and YouTube. Carol, were you confused by what Jay Powell said and there are various forecasts where they did not move the dots in terms of how many rate cuts there'll be this year?
I'm a little bit confused. I'm also a little bit confused at this market reaction because they bumped up growth estimates, good, but they also bumped up a little bit, right? Inflation.
I think the GDP is where they messed up. I think GDP. I mean, again, it depends on what the government spends. I think that's a little unknown. But why are they saying they don't quite get it all on Bloomberg? It's real simple. They don't want to do more harm than good. They don't want to do more harm than good.
Expectations for rate cuts from the Fed members actually went down a little bit.
All right, guys, that's it, gang. That's it, gang. Great job today. Oh, that hurt my ears. I'm sorry if it hurt your guys's. Man, I love you guys. Thank you guys so much for joining us today. I need to start getting some music here. I'd love to have some music going right now. Make this an experience for all of us. Man, keep the hype train going, guys. Keep believing. Keep your head up. If you want to get good at this, guys, there's some serious money to be made in these markets right now. This is the time to be in the markets. Thank you, guys. Have a great night. I will be definitely doing a watch list tonight after I go clean up the yard a little bit. Thank you. All my subscribers, people that hit that like button, guys. I'm telling you guys, I see you. I see you. And I'm trying real hard here. I need to try maybe a little bit harder to get us where we want to go. And that is hopefully a studio one day where we really get it going and help a crowd of people out, right? There's so many people hurting out there. If they could just take the couple bucks that they have, save it, throw it in the long term, learn how to trade, I think that they could really help themselves out and, you know, get that little bit of an advancement in life with just this. Or not necessarily just this, but like using the markets and using all the other tools that we have at our disposal. You guys have a great night. I love you guys. Peace out.